As usual, we will try to understand first of all why you are studying this chapter. Only if you know that, you will understand the reason why you are doing the sums. What many people do is this there for exam, introduction there for exam? No. So directly I will go to the question. It doesn't work that way. Spend more time here, lesser time you will spend there. Smart working. Do that. Fine. Now, let me just take a black ink. Fine. Now, and guys, please catch up running notes. These things are not there in your material that I've given you. In your material, I've just given the formulas. That's all I've given you. Logic, everything, background, everything happens only in the classroom. Only in the classroom. That's why you're coming here and spending your time. Please write running notes. Take running notes. Okay? Fine. Now, first of all, our subject. What's our subject? No, it's not costing. It's cost and management accounting. Correct? There are two words here. Cost and management accounting. Now, our subject, cost and management accounting, put together, has three objectives in total. It has three objectives in total. I'm not talking about standard costing. I'm talking about cost and management accounting. This subject as a whole, it has three objectives. It helps us to achieve three objectives. Objective number one is stock valuation and profit computation. Stock valuation and profit computation. Objective number two is decision making. Objective number two is decision making. And objective number three is called as control. Objective number three is called as control. Objective number three is called as control. Now, recall, I think on the first day or day before yesterday, I told you that our subject is unstructured. I told you. Unstructured doesn't mean that it's not organized properly. No, that's not the meaning. Now, if you take your financial accounts, you know that the ultimate objective is what? To prepare the financial statements. That's all, no? I'm not undermining the subject. The subject has this objective. That subject is meant for that. Correct or not? Financial accounts is meant for preparing the financial statements for the end users. Now, our subject doesn't have one purpose like that. Our subject has three purposes. One purpose is stock valuation and profit computation. One purpose is decision making. The other purpose is control. Now, if you see, we have a lot of chapters in our subject. Certain chapters help you achieve the objective of stock valuation and profit computation. Example of chapters falling under this category is cost sheet, overheads chapter. We had to value every unit of the product. Correct? Only if you do that, you can compute the profit, segregate your manufacturing cost into cost of goods sold, closing stock and all. Correct or not? So these chapters, your cost accounting systems, these chapters help achieve your objective number A. Objective number A. Objective number A. Now, there are certain chapters that deal with decision making. Example, marginal costing. Chapters like marginal costing. What these chapters will tell you is, in this scenario, what should I do? Shut down or continue or something like that. There will be a lot of decisions, indifference point, break-even point, decision-making element. Here, your product cost, period cost and all will not come. There, it's completely different logic. Why? We are on a different objective altogether. There you will be talking about variable cost, fixed cost. You will not be talking about product cost, period cost. Why? Because product cost, period cost classification is relevant only for objective A. Correct? So chapters that are achieving objective A will only have this manufacturing cost, non-manufacturing cost, or in other words, prime cost, overheads, your AOH, SOH and all these things will be covered only in chapters that are achieving objective A. Chapters that are achieving objective B of decision making, there the cost classification will be looked at only from the perspective of variable cost, fixed cost and so on. Example is marginal costing, and there is also a concept called as flexible budget. Flexible budget, that is also in this decision making area only. Now, there are another set of chapters or maybe very few chapters that help you achieve the area of the objective of control, and one such important chapter that helps you achieve the objective of control is only your standard costing, and I'll tell you how it helps you achieve the objective of control. So now, first thing, why am I giving this background? Come out of that product cost, period cost, that classification, you just come out of it. Why did we study this product cost, period cost? That product cost, period cost, that concept we learned for the purpose of achieving the objective of stock valuation and profit computation. Right now, standard costing talks about a different objective altogether. So right now, I am not going to be talking about your manufacturing overheads, selling overheads, or prime cost, or material, labor. No, I am not even bothered about that type of classification. What am I bothered about? I am bothered about controlling. How am I going to control? So this has to be looked at from a different perspective, not from the same perspective from which you looked at the cost sheet chapter. Are you clear with this? First, are you clear with this? Many students, this is where they make a mistake. They continue. They think it's all an extension. No, our subject has multiple objectives. In fact, if you take chapter like material cost, that chapter has many concepts inside it. Certain concepts helps you achieve stock valuation, profit computation. Yes. For example, calculation of your material cost, computing, arriving at the landed cost of material, that helps you achieve this objective. Certain areas like economic order quantity, that helps you achieve decision making. How many quantity should I order every time? Certain areas like stock levels, maximum stock, minimum stock, reorder level, that helps you achieve the control objective. So basically, concept wise, you should know the objective. Only if you know the objective, you will know from which viewpoint you should look at it. Are you clear with this? This is where many students are lagging, is what I feel in my past experience. What they think is, no, all the chapters should have been looked at from the same perspective. No, that's very much applicable for your financial accounts, not in your cost and management accounting. And in fact, what is the name of our subject? Cost and management accounting. This objective A is there, no? That is stock valuation and profit computation. This comes under cost accounting. And the other two objectives put together, decision making and control, this comes under management accounting. Are you clear with this? Are you clear with this? So ideally, this is how it is structured. First, you should know this. Why am I telling it right now? Because till now we saw all the classification only from the perspective of objective A. Now, since we are moving to another objective, I want to tell you that this is how the subject has been designed. First to know this. Before you enter the subject, actually you should know this. Are you clear with this? So that's why I plan to discuss this right now. Are you clear with this? So come out of that cost sheet format and all. Come out of that and look at it differently. Fine. Have an open mind and look at it differently. Are you clear with this? Is everyone clear with this, guys? Fine. So now let's get started. Now, has everyone noted this down? Yes? I hope everyone has noted this down. Fine. Now, sir, you said this subject, this chapter, standard costing, helps you achieve the objective of control. Correct? How exactly does that happen? Now, you tell me, guys, in every company, what they do is, first they set one target. Correct? They set one target for all their employees. Correct? Then what they do is, they let the employees do the work, actual execution. Correct or not? Then what they do, at the end of the period, they will evaluate the performance with the targets that is set. For example, you should have sold 100 units. You have sold only 80 units. So you are underperforming. A salesman B should have sold 100 units, but he has actually sold 120 units. He has overperformed and all. Correct or not? So what happens is, at the beginning of the period, everyone sets a target. Correct? At the end of the period, the actual performance gets compared with the target. Correct or not? Based on this, will the target and actual be the same every time? There will be a difference. The actuals will vary from the target. That difference is called as variance. V-A-R-I-A-N-C-E. Variance. What do you mean by a variance? The difference between whatever is the target and the actual. Correct or not? Now, if this difference helps you increase your profit, or let's say if the person has done the proper work, if he is super efficient, that's called as a favorable variance. And if that person was inefficient, it is called as an adverse variance. So this variance can either be beneficial for you or it cannot be beneficial for you. If it is going to be beneficial, it's going to be called as a favorable variance. If it is not beneficial, it's going to be called as an adverse variance. Are you clear with this? So basically, control involves establishing standards. First you set the standards, then you evaluate the performance, then you analyze the variance, and then what you do is, if someone has performed better, you will reward him, bonus. If someone has not performed better, you will take some corrective actions there. Are you clear with this? So 4 steps are there here. Generally, I'm telling you, so establishing standards, and then evaluating the performance, then analyzing the variances, and then you're rewarding or taking corrective actions as the case may be. When will you reward? Favorable variance. When will you take corrective action? Adverse variance. These 4 steps are involved in general. Are you clear with this? So this is how controlling happens. I am enhancing control over the affairs of my company. Correct or not? Does it make sense, guys? Does it make sense? Fine. Now, at the beginning of every period, I told you in our subject, period can be 1 month, 1 week, 1 day, whatever it is. Yes, even 1 year you can have. Whatever it is you want, the company can decide. Why? Because that is their own internal matter. Correct? They are not going to publish the costing results. Have you ever seen companies publishing the costing P&L and all? No. In fact, the costing data is there, no? It's very, very sensitive information. It's a confidential information. If someone has access to your cost sheet, they will clearly know what is the cost you are having, what is the money you are making. Correct or not? Will anyone let the competitors know? Even your competitors are watching. Will anyone do that? It's a very sensitive information. No one will let that. Then, sir, in financial accounts, sir, in your financial accounts, we have this P&L account. That's for presentation. At the back end, you won't know which unit, how much is the profit you make. If you see in textile industries, you will cry. Literally, you will cry. How much amount of money they make, you have absolutely no clue. This one shirt for manufacturing, it wouldn't have costed them more than 100 rupees, but they will sell it for 1000 rupees, at least minimum, I'm telling you. If it is branded and all, 2000, 3000. In fact, nowadays there is one black color shirt coming with golden color thing written on it that they are selling it for 30,000, 35,000. I don't know whatever that is. Fine, okay. So look at this. We don't look for quality, we look for brand. So this and all they are doing actually. So assume that company gives the cost sheet. Cost will be in single figure. Selling price and profit will be alone in multiple 4 digits or 5 digits. Just imagine, will you even feel like getting inside the company, going there and buy? Still people will buy and all. Of course, we have again the second hand market and all where they make the first copy and sell. That is different. But whatever it is, coming back, guys, come back. Fine. Now, at the beginning, please listen carefully. At the beginning of the period, every company prepares a budget. Yes or no? Fine. Now, when they prepare the budget, they will estimate that this is going to be my revenue for the year. This is going to be my cost for the year. Correct? And they will arrive at something called as budgeted profit. Correct or not? Now, with this budget, when this happens, before or after the year? Obviously, before the start of the period. Now, what happens? They will start the year. Their employees will work and all. At the end of the period, they will see what is the actual sales they have made, what is the actual cost they have incurred, and find out the actual profit. Correct or not? Guys, everyone, correct or not? Yes. Now, you tell me, will the budgeted profit be equal to actual profit? Mostly, 99.99%, it will never match. You can't predict to the point, obviously. Correct? There will be a difference between the budgeted profit and your actual profit. Correct or not? This is called as profit variance. What do you mean by a profit variance? Nothing. Variation in the profit. That's all. They are giving some jargon. Don't think that it's some complicated thing and all. Difference in profit. That's all. It's called as a profit variance. Are you clear with this? Let's say, guys, the company budgeted 100 crores of profit. But they actually got only 80 crores of profit. Now, this profit variance is adverse or favorable? Budgeted actuals. If the budget was 100, actual profit is only 80. Favorable, adverse. Why is it adverse? Any variance that reduces your profit is actually an adverse variance, correct? Let's take it the other way around. They budgeted only 80 crores, but actually they achieved 100 crores of profit. Is this an adverse or favorable? Favorable. Correct? Now, there is a profit variance. It can either be an adverse variance or my actual favorable variance. Correct or not? Correct or not? Now, if I prepare this report and say, sir, we budgeted 100, but we have actually got only 80. Now, will the board of directors be happy? First, they will ask, where have I gone wrong? They will ask. They will start analyzing for the reasons, no? They will start analyzing for I am not bothered. I know on the face of it itself, I know that we have made lesser profit or we have made more profit, whatever it is. But I want to know the reason why actually there is a variance in my profit. Will anyone just leave with that variance? Okay, this is the amount. Okay, leave. Will anyone do that? Or they will dig inside it? They will only dig inside it, because if there is a mistake, it has to be corrected. If they are doing somewhere well, that needs to be maintained. Whatever it is, they need to know it. Correct or not? Correct or not? Now, this profit, the budgeted profit and actual profit, there is a difference. The profit can vary broadly because of two reasons. One, variance in the sales side, and the other one is the variance in the cost side. Agreeing with me or not? There can either be a variance in the sales side, or there can be a variance in cost side, or there can be a variance in both the sides. Yes or no? Correct or not? Yes. Profit is a function of revenue as well as cost. So when my profit is changing, it could be because of changes in the sales side or changes in the cost side. Correct, guys? Now, just tell me. Example, they had budgeted a sale of 100 crores. Okay, but they have actually got a sale of 120 crores. Is this a favorable or an adverse variance? Favorable, adverse. It's obviously a favorable variance. I budgeted to sell only 100, but now I am able to achieve a target of 120. So on the sales side, if your actuals is more than your targets, it is actually a favorable variance. Don't think that plus, minus and all, don't go by the symbol. People, again, they go by symbols. Students go by symbols. They will say if it is minus, adverse. Plus means it means favorable. No, wrong. Don't ever go by that. If I increase my sale, my profit will increase. Yes, ultimately, if it increases my profit, it means it's a favorable variance. As simple as that. Are you clear with this? Are you all clear with this, guys? Let's assume the same thing on the cost side. They had budgeted a cost of 100 crores, but they've actually incurred a cost of 120 crores. Is this a favorable or an adverse variance? Favorable or an adverse? Obviously an adverse. I was supposed to incur only 100, but I've incurred 120. So 20 I've incurred more. Because of more cost, your profit will reduce. And whatever goes and reduces your profit is called as an adverse variance. Correct or not? So don't go by the symbol 120 minus 100. So it is positive, negative. No. What do you mean by a favorable variance? It should increase your profitability. What is an adverse variance? If it reduces your profitability, it's called as an adverse variance. Are you clear with this? So the profit variance can happen because of variances on the sales side or because of variances in the cost side. Are you clear with this? Now, so now on the cost side, you can have, if you further dig it, there are four different types of costs. The nature of cost where you can actually go wrong. Obviously, you guys know this. Material cost, labor cost, variable overheads and fixed overheads. Here, product costs, period costs, that classification, forget it. That's why I said park it aside. Overall, what are the different type of costs that a company can incur? They are broadly classifying it into four: material, labor, variable overheads and fixed overheads. These are the four different costs that a company can have. Are you clear with this? Fine. Now, if I further say, sir, cost variance, that there is a total of 20 crores. Next question is, where exactly? In which area have you gone wrong? They will ask, no, whether material cost was more or labor cost was more or variable overheads or fixed overheads. This has to be deep dived once again. Correct or not, guys? So that is why they are further having this classification. Are you clear with this? And for your syllabus, CA intermediate syllabus, only the cost side variances are applicable. Only four different types of variances are applicable. Sales side variances are not applicable. And basically, the overall objective of this chapter ideally is to reconcile your budgeted profit with your actual profit using all these variances. But that reconciliation statement is also not there for a CA intermediate. It's there only in your CA final in a paper called SCMP, Strategic Cost Management and Performance Evaluation. Are you clear with this? Basically, sir, what is there for my exam? Only the cost side variances. Are you clear with this? You only have 4 different types of variances: material cost variances, labor cost variances, variable overhead cost variances, and fixed overhead cost variances. Are you clear with this? Only this much, and it's not lengthy. It's not lengthy. Trust me, it's not lengthy. If you know the concept, hit the nail on its head, you will get it. As simple as that. The problem is we don't spend time on the concept. The more you spend time on the concept, any kind of questions you can crack. That's what I'm telling you once again. Fine. So we have what? Only the cost side variances. That is the 4 different types of variances: material, labor, variable overheads, and fixed overheads variances. Are you clear with this? So this is about the introduction to this particular chapter. Are you all understanding now why we are doing this chapter? Are you all understanding now why we are doing this chapter? Yes. First you should know this. Only then we can proceed forward. Clear with this, guys? Clear with this, guys? Fine. Now, let's go to the next area of this chapter. This is also the introduction only. After this, we will jump to first type of variance called as material cost variance. Fine, we will finish it quickly. I'm telling you, you yourself will know that, okay, only this much, you will feel. Because this chapter actually has only this much. The problem is we are again and again, somehow our mind is tied up with the formulas. There is no formula in this chapter. It's loaded with concepts. If you know the concept, you can crack it that easily in your left hand, you can finish it. That's simple. Standard costing is simple. Trust me, it's very simple. Fine. Now, let's go to the next area. Let's go to the next segment. Now, before we enter into each of these 4 variances, we'll be doing only these 4 variances and closing off. That's all is the chapter. Even if you want, you go to your study material and see only these 4 variances are there. Fine. Now, what are the different variances that we have? We will move to that later. But before that, you should know one very important concept called as standard cost. What is the name of the subject, chapter? Standard costing. So what do you mean by standard cost? You need to necessarily know this. Without this, you can't move into the next segment. So this is very important. So first we saw why we are reading this chapter. Second, we are seeing now what do you mean by a standard cost. Once we do these two, the 4 variances that we will do, more time we will be spending in material cost variances. Once we spend that, automatically labor and variable overheads will be over. Then fixed overhead cost variance alone, I will have to do something separately. After that, the chapter itself is over. That's all it is. Know the concept. That's all. No one can touch you. Fine. Now, standard cost. What do you mean by standard cost? Now, let me not give you any theoretical meaning or definition. Instead, what I will do is, I'll give you an example. Fine. Now, let's say I'm budgeting a total cost of, say, 1 lakh rupees. I'm budgeting a total cost of 1 lakh rupees, and I'm budgeting units. The budgeted units are, let us say, 10,000 units. And now let's say the actual cost, the actual cost is, let's say, rupees 96,000, and the actual units is equal to 8,000 units. Fine. Now the budgeted cost is 1 lakh, budgeted units is 10,000. The actual cost is 96,000, actual units is 8,000 units. Clear with this? Now, can I say that, look, this guy was supposed to spend 1 lakh rupees, he has actually spent only 96,000. So 4,000 rupees he has saved for the company. Correct or not? Correct or not? Can you compare this 1 lakh with 96,000? Can you compare this 1 lakh with 96,000? Hell no. Definitely not. Why? This 1 lakh is for 10,000 units, and this 96,000 this fellow has incurred for just 8,000 units. Are these two comparable? Definitely not. If you are looking at his efficiency, if you want to gauge his performance, can you compare the budget with actuals? Always remember, the budget can never be compared with actual. Reason? Budget is meant for a different volume level. Actual is meant for a different volume level. So now what will you do? What I will do is, I will first try to find out the standard cost per unit. Per unit, what is the cost he is allowed to spend? 10 rupees per unit, correct? Now what I will do, you were allowed to spend 10 rupees per unit for the actual output that you have manufactured. What should have been the cost you are allowed to spend? So can I say in between and the படத்தை சொல்லலாம் குறுக்க இந்த கௌசிக் வந்தா அப்படிங்கிற மாதிரி in between this standard cost comes in. This standard cost comes in and then it says that look, you can't compare this 1 lakh with 96,000. What you do is from the budget data you pick the per unit cost that is allowed and multiply it with the actual number of units that has been produced. So 10 into 8,000 units. Now how much is this? Rupees 80,000. Now this 80,000 and 96,000 are comparable. Is this 80,000 and 96,000 are comparable? Yes sir. Why? Both are for the same output level. Correct or not? Correct or not? So always remember, you can only compare your standard cost with your actual cost. That's why the name of the chapter is standard costing, not budget costing. Budget separate chapter is there. Budget costing, this chapter's name is called as standard costing. The reason is, what is the beauty of the standard? What is the beauty of the standard? It partakes one character from the budgeted data and it marries itself with an actual data. Correct or not? From the actual, for the actual output, output, I actually don't call it as budgeted cost per unit. Budgeted cost per unit, we don't call it. Instead, we call it as standard cost per unit. When you are making it per unit, it's always called as standard cost per unit. Generally, people don't use the wording. People don't use the word as budgeted cost per unit. If you are representing some budget as per unit, they generally use the language standard cost per unit. So, from the budget, I take the standard cost per unit and for the actual output level, if I multiply, I will know what is the cost that is allowed. Are you clear with this? So, in other words, can I say this 1,80,000 and 96,000? If I say this 1 lakh is nothing but cost planned, correct or not? Correct or not? This 96,000 is nothing but cost incurred, correct? And what is this 80,000? Cost allowed, correct or not? And it only makes sense to compare my cost allowed with cost incurred, correct guys? Are you all understanding this? Are you all understanding this? Online folks, are you all understanding this? Fine, right. Now, please listen. Now, what I was telling you was, now, the company had budgeted to incur 1 lakh rupees. Okay, they had budgeted to incur 1 lakh rupees. And where is this coming from? I don't even know. Okay, fine. The company had budgeted to incur 1 lakh rupees. And the budgeted units was 10,000. So, for 10,000 units, you were allowed to spend how much? 1 lakh rupees. Actually, this guy has produced only 8,000 units, for which he has actually spent 96,000 rupees. Correct or not? Now my question is, can you compare this 1 lakh with 96,000 and say that this guy has saved 4,000 rupees? No. Why? Because this 1 lakh pertains to a different output level. It's for 10,000 units. This 96,000 pertains to a different output level, 8,000. Now, when I am comparing my actuals, what I should do is, for the actual output, that is, keep your actual output as the base. It's very important. Keep your actual output as the base. For the actual output, how much should have been the cost you should have incurred? That is called as standard cost. And that only you can compare with your actual cost. Now, how can I do that, sir? How can I find out my standard cost? From the budget, you can find out what is the standard cost per unit. That is, what is the cost allowed per unit. Now, as per the company's intention, you can easily make out that they are letting you to spend 10 rupees per unit. Correct or not? Correct or not? Now, you have actually produced how many units? How many units? Actually produced 8,000 units. So, which means 10 into 8,000 is 80,000 is the cost you should have incurred. That is only called as a standard cost. And now this 80,000 can be compared with 96,000. Actually seeing this guy is inefficient. This guy is inefficient. He should have spent only 80,000. He has spent 96,000. There is an adverse variance to the extent of 16,000. Are you clear with this? Are you clear with this? Now are you able to understand? Is everyone able to understand this? Guys, if anyone is not able to understand, please ask me then and there. Please ask me then and there. This concept is very important because the entire chapter is built around this concept. The entire chapter is built around this concept. Are you all getting it? Is everyone understanding this? Fine. So basically, to put it short, you can't compare your budgets with your actual. From the budget, you calculate the cost per unit. It's called a standard cost per unit and apply it on the actual output. For the actual output, how much should have been the cost you were allowed to incur? That compare it to the actual. Now it makes sense. Now I know whether you are performing well or not. Correct or not? Are you clear with this? Is everyone clear with this? Now, 1 minute. Now, a very important thing is the concept of standard is not just applicable for cost. It can be applied on kgs also. It can be applied on units. It can be applied on hours. What are you saying, sir? I don't understand. Let me give you an example. Let's say the budget says that you were allowed to take 1000 hours. You are allowed to take 100 hours. You are allowed to take 100 hours to produce, let's say 10 units. But actually what happened, the people in the company, they have taken 90 hours and they have produced how many units? Let's say 8 units. They have produced how much? 8 units. Now you tell me, can I say that, look, you were allowed 100 hours, but you have actually taken only 90 hours. So very good people, you have been super efficient. Can I say this? No. Why? Because 100 hours was allowed for how many units? 10 units, which means per unit you are allowed how many hours? 10 hours per unit. Correct or not? So can I say the standard hours allowed will be 10 hours per unit into the actual quantity that you have made, 8 units. Can I say that you were supposed to take only 80 hours? Correct? Whereas you have actually taken 90 hours, which means 10 hours you have taken more. That's an adverse, because for 10 hours I am paying more cost. Correct or not? This is what I said. The concept of standard need not apply only on cost. You can apply it on anything you want. You can apply it on hours. You can apply it on kgs of raw material. You were allowed to use 100 kgs of raw material. You have used 200 kgs of raw material. 100 kg is more. That is an adverse variance. Correct or not? Are you clear with this? So the concept of standard can be applied on cost, or it can be applied on rupees, it can be applied on hours or kgs or units, anything you want you can do. Basically what you are doing, you are keeping the actual quantity as the base. For the actual performance that you have done, what should have been the target versus what is the actual that has happened. Are you clear with this? And how will I set the standard? I will take the cost per unit or the hours allowed per unit from my budget and I will apply it on the actual quantity produced. I will know what is the amount that you should have spent or what is the hours that you should have taken versus what is the amount that you have actually spent or what is the hours that you have actually spent. Are you clear with this? Is this understandable to everyone, guys? Is this understandable to everyone? You all are understanding this? Sure? Is everyone understanding this? Now, with this context in the mind, let's get started. Let's get started with the first variance. What is the first cost variance? Material cost variance. Though as the name suggests, what you need to do. Now, we are talking only about, so there are 4 different types of cost, I told you. Now, in that material cost variance, we'll focus only on the variances inside material cost. Correct or not? Correct or not? We are talking only about the variance happening inside material cost. I am not bothered about labor, overheads and all. That is taken care of by separate people. First, when I am in material cost variance, I am focused only on my variances inside my material cost. Are you clear with this? Are you clear with this? Shall we get started with this? Shall we get started with this? Fine. Now, so 1, material cost variance. Material cost variance. Now, what do they say? What do they say here? Now, they are saying that material cost variance, the formula that they are giving us, standard price into standard quantity minus actual price into actual quantity. Basically, what this means is standard material cost minus actual material cost. Correct only no? Correct only no? See, in our subject, in our chapter, what we will be compare? Budget with actual or standard with actual? Standard. So, it makes sense only to compare my standard material cost with my actual material cost. Correct or not? Correct or not? Correct or not? Is everyone understanding this? Is everyone understanding this? Now, sir, you are writing SP into SQ, AP, AQ. What is all these things, sir? I will give you an example. With that we will understand. And then we will move to the other limbs of this area. Are you clear with this? Shall we do that? Fine. Now just take down this example. Please take down this example. Let's say they are giving standard price per kg of raw material. Obviously, when I say per kg, it's per raw material. Rupees 10 per kg. Then let us say raw material allowed per unit of Fg. So for every unit of Fg, how many kgs of raw material you can consume? Let's say 2 kgs. Okay. You are allowed for every unit of Fg, for 1 unit of output, you can consume 2 kgs of raw material. This is what? This is allowed. Where did we get all these things from? Budget. From budgets we got it. Okay, fine. Now, what is the actual performance? Actual output, they have given it as 100 units. 100 units means what? 100 units means what? Fg or RM? Fg or RM. They have produced actually 100 units of Fg. Correct or not? Output. Raw material is input only, no? Correct or not? And raw material is in kgs. Correct. I'm saying units. It means I'm talking about an Fg. Are you clear with this? This is an example. Actual output. Then let us say raw material consumed. Actuals. Raw material consumed. Let us say is 220 kgs. 220 kgs. And let us say the actual price paid. The actual price paid per kg was rupees 9 per kg. This is the data available. Quickly note it down. Guys, quickly note it down. So standard price per kg is 10 rupees. Raw materials allowed for every unit of output is 2 kgs. Actual output is 100 kgs. Raw material consumed is 220 kgs. And actual price paid per kg is 9 rupees. Clear? We are talking about what cost? Material cost. Clear? Now, can anyone tell me what is the actual raw material cost incurred in this sum? Can anyone tell me what is the actual raw material cost incurred in this sum? Just tell me this into this. That will be enough. Guys, Guys, please answer no. What is the actual raw material cost incurred? See, if you are wrong, don't worry. Have the courage to open up. What into what? 220 kgs into 9 per kg. Correct or not? Actually, I have consumed 220 kgs. Every kg I have purchased at 9 rupees. Correct or not? This is my actual material cost incurred. That's why they are saying the actual material cost is actual price into actual quantity of raw material. AP into AQ stands for actual price into actual quantity. Correct or not? Now you guys tell me, I have actually produced how many units? Guys, I have actually produced how many units? Let me take another ink. Yes, I have actually produced how many units? 100 units. For each of these 100 units, I should have consumed how many kgs of raw material? 2 kgs. So can I say the total quantity of raw material that I should have consumed is how much? 200 kgs. That is what is standard quantity. And each of these standard quantity, each of these 200 kgs, I should have purchased at what rate? 10. Correct or not? So can I say 10 into 200, 10 into 200, 2000 rupees is the standard cost allowed. Correct or not? Correct or not? But actual cost that I have actually incurred is 9 rupees into 220 kgs. Correct, guys? How much is this? 1980. Correct? So I should have incurred 2000. I have only incurred 9980. So 20 rupees is what? Adverse favorable. Adverse favorable. I have incurred a lesser cost. It's a favorable variance. So basically, can I say that material cost is nothing but standard material cost variance is nothing but standard material cost minus actual material cost. Correct or not? Correct or not, guys? Guys, answer. Yes, you're getting it. Now, what do you mean by a standard? How will you compute the standard material cost? The standard price into, price means standard price per kg of raw material into standard quantity of raw material. What do you mean by standard quantity of raw material? For the actual production, how many kgs of raw material you should have consumed. Always remember, this is very, very, very important. Actual output is very important because standard is based on actual. For the actual performance, what should have been consumed. Are you clear with this? Are you clear with this? So for me to actually produce 100 units, I should have consumed how much? How much? 2 kgs each, which brings me 200 kgs, correct or not? So to put it here, can I say material cost variance is equal to standard price into standard quantity minus actual price into actual quantity. This is nothing but, what's your standard price? Guys, what's your standard price? Rupees 10. What's your standard quantity? 200 kgs. How did you get this? 2 into 100. Correct? For the actual production, what could be your total material consumption? Minus actual price is how much? I paid 9 rupees for every kg that I bought. But how many kgs I bought? 220 kgs. So now this is nothing but rupees 2000 minus rupees how much? 1980. So that gives me how much? A favorable variance of rupees 20. Correct or not? Correct or not? What about? Yeah, I will say, we'll come to that. Overall material cost, what is the material cost variance? 20 rupees. Correct or not? Correct or not? Guys, everyone, is everyone understanding till this? Is everyone understanding till this? Is everyone understanding till this? Very good. Very good. Now, just assume, put yourself in the shoes of the MD. They are saying, sir, material cost variance 20 rupees favorable. Now, I am saying, oh, very good, 20 rupees is favorable. So, which fellow is responsible for this? I will ask no, because if someone is really good at it, I should incentivize him. That's the objective. Now, there is no one person alone that is involved in this material consumption. There are broadly 2 people involved in this material consumption. One, the production manager. He is responsible for what? Actually consuming the material, correct? And there is another person called as the purchase manager. He is responsible for what? Negotiating the rate, finalizing the seller, correct or not? His work stops there. He only finalizes what? The rate. Is he responsible for the quantity? No. Quantity who will decide? Production manager. Production manager will say, look, I need 220 kgs. He can't say, what? Allowed is only 200. He can't ask. 220, if I ask, you should place an order for that. What is the duty of the purchase manager? Just to find the best guy in the market, finish it at a proper rate and close off. And the purchase manager is given a maximum cap of 10 rupees. Correct or not? 10 rupees. Now, this is what your other 2 variances talk about. Material price variance and material usage variance. Now, as the name suggests, you tell me, who is responsible for the price? Who is responsible for the price? Who is responsible for the price? Everyone. Purchase manager. Purchase manager. Correct or not? The purchase manager is responsible for the price. Correct, guys? Correct, guys? Now you tell me, when he is responsible for the price, I want to judge whether the purchase manager is good enough or not. Can I say, when I want to find how good he is, what I will compare? Standard price with actual price. Correct or not? Correct or not? Correct or not, boss? Yes. Are you clear with this? Yes. Yes. Yes, you are understanding this. What will I compare? I am gauging the performance of whom? Purchase manager. Within the bracket, what comes? What will I judge? The price. What was the price that you were allowed versus what was the price that you have actually done? You were allowed to spend 10 rupees on every kg of raw material, but you have actually spent only 9 rupees. Correct? Is it a good thing or not? Is it a good thing or not? Yes. But wait. Now I will multiply this with actual quantity. Sir, why are you multiplying with actual quantity? Because the purchase manager is dependent on the production manager for the quantity. Correct or not? For whatever quantity that he is asking me to purchase, I will directly go and purchase. Is it there in my control? Is it there in my control? Is it there in my control? Tell me, guys, is it there in my control? No. So what is not there in my control should not be given to me, because if I put standard quantity alone, then it means that the efficiency or inefficiency of the production manager is getting passed on to him. Correct or not? Now I'm trying to find out exclusively the efficiency or inefficiency of the purchase manager. So what I do here is multiply it with, for each of the 220 kgs, what was the efficiency level I'm trying to find out. So how much is this? How much is this? So 10 minus 9 the whole into 220. How much is this? How much is this? 220. Adverse or favorable? Entire thing is favorable. Are you getting it? Are you getting it? Are you getting it? Guys, are you getting it? Now, how about the material usage variance? Who is responsible for that? Hello? Who is responsible? The production manager. The production manager. Now, the production manager is responsible for what? The quantity, consumption, correct? So, within bracket, I will compare what with what? Guess. Standard quantity minus actual quantity. But this is only in kgs. I need to give it a monetary value. I will multiply this with standard price. I will not multiply with actual price. Why, sir? Because production manager is not dependent on the purchase manager. Correct? It's a one-way traffic here. It's a one-way traffic here. Like step ladder, it's a one-way traffic here. The production manager is not dependent. Just assume if I put actual price here, then I will be passing on the efficiency or inefficiency of the purchase manager to the production manager. Correct or not? Correct or not? Guys, does it make sense? Does it make sense? And this is exactly what I'm talking about. This is not mugging up formulas. This is not mugging up formulas. Now, material price variance within the bracket, you are judging which fellow? Purchase manager, responsible for what? Price. So what minus what? Standard price minus actual price. Multiplied with what quantity? Actual quantity, because I am dependent on which fellow? Production manager. Go to the production manager side. Material usage variance within bracket, what do I judge? Standard quantity minus actual quantity multiplied by standard price. Why standard price? I am not dependent on the purchase manager. Are you clear with this? This simple it is. And look at this. Look at this. What is the standard quantity? You should have consumed how much? 200. You have actually consumed how much? 220. Overall multiplied by standard price. How much is it? How much is that? 10. So now you tell me you have consumed 20 kgs more into 10. So it is 200 adverse. Correct or not? And if you net off the two, you get 20 favorable. And that is your daddy on the top. Daddy on the top. Yes, are you clear with this? That's on the top. Are you clear with this? So material cost variance, I'm segregating it and finding out who is responsible. If you see, this guy was super efficient and this guy was extremely super inefficient. And that is the reason net off I got only 20 favorable. Had it not been the case, I would have got more favorable. Correct or not? Now it makes sense. Now you know who is the culprit, who is the guy who has actually made it good for the company. Are you clear with this? Guys, are you all understanding this? Are you all understanding this? Now, guys, you just tell me, without looking at anything, you just tell me, what is the formula for material cost variance? Standard quantity into standard price minus actual quantity into actual price. Simple. Now, this is branched into two. Material price variance, material usage variance. Price, whom are you judging? Whom are you judging? Purchase manager. So, within bracket, the judgment, what is it based on? Standard price minus actual price into actual quantity. Why actual quantity? Because whatever that fellow asks only I am purchasing. Don't blame me for that. Correct? Now, how about material usage variance? Standard quantity minus actual quantity into standard price. Why standard price? Because production manager is not dependent on the purchase manager. And this we are finding it difficult. Tell me guys, was this difficult? Tell me, was this difficult? Was this difficult? What is the formula for material price variance? Standard price minus actual price into actual quantity. Correct? What's the formula for material cost variance? Standard quantity into standard price minus actual quantity into actual price. What is the formula for material usage variance? Standard quantity minus actual quantity into standard price. Do you have to mug up anything? Do you have to mug up anything? And why do people say standard costing is difficult? I don't know. Because they don't spend time on the concept. We'd have just spent about 1.5 hours on this, or maybe a little lesser than that. Spend more time on the concept. You can tackle any kind of sums. You can tackle any kind of sums. If tomorrow someone is asking you in an interview, this happened to me personally. I actually did the first year of my articleship in a Big Four. They looked at my costing mark. They wanted to really know if I actually, learned it by heart and wrote it, or I really know the subject. They asked me something in standard costing. Why are we doing standard costing? Tell me the reason for some price variance they asked. So now when I told them, that's when they were like, okay, fine. So this guy knows the subject. What I'm telling you is, if you learn the subject without even knowing the concept, then actually it's a big injustice that you're doing to yourself. Look, this way if you learn, it's going to be super fun, no? Any kind of question, let them bounce a Yorker, bouncer, whatever it is, let them bounce. You know how to tackle it. Correct or not? Correct or not? Any kind of question, missing figures, let them give. I know the formula, why it has arrived. I need not mug up. At the back of your mind, you need not mug up while you go to the exam. You know why things are happening. Correct or not? Correct or not? Even if someone wakes you up in the midnight and asks you what is the formula for price variance, you must be able to tell. Are you clear with this? Are you clear with this? And this is exactly what we'll be doing in the other segments as well. Your labor and overheads, variable overheads and all. Of course, fixed overheads alone is a different ball game altogether that we'll be tackling differently. But here, as of now, did you guys understand what we just did? Did you guys understand what we just did? Yes, guys, are you all understanding? One final time, please tell me, what is the formula for material usage variance? Standard quantity minus actual quantity into standard price. Don't look, up, don't look. You only mainly said. So I want you to answer. So tell me, what's the formula for material price variance? Price variance. Standard price minus actual price into actual quantity. That's simple. Yes, yesterday you only said it was very difficult to mug up the formulas and all that. Now are you understanding the logic behind every formula? Yes, you guys are understanding it, not to point out anyone. I'm telling you, many students find this generally difficult because they don't take the efforts in knowing the concept. Fine, what's the formula for your material cost variance? Daddy. Standard quantity into standard price minus actual quantity into actual price. Are you clear with this? Are you clear with this? That's simple. Now what happens in case you are operating in a multi-product? Let's say I require more than one type of raw material. Possible, no? Let's say I need raw material A, raw material B, raw material C. Only if I use all these raw material together, I will get my final output. Yes? Now what you need to do in this case, product wise compute all the variances. Are you clear with this? That is, material cost variance will be, for A you compute, for B you compute, for C you compute, add the 3. Are you clear with this? Are you clear with this? There can be a multi-raw material that you use. If you use more than one raw material, what you need to do is compute the variances for every single raw material and add it up. Are you clear with this? Suppose one is adverse, one is favorable, it gets netted off. Are you clear with this? But you need to write out product-wise or raw material-wise, and the total you need to write out. We will be doing the next sum only about that. This is point number 1. Yes, I'll come to that. Sorry. Okay. What I told was, let's say you are having more than one raw material. Okay, let's say you are having raw material 1, raw material 2, raw material 3. They are asking you to find out all the variances. When I do material cost variance, what is the formula for material cost variance? Standard quantity into standard price minus actual quantity into actual price. Correct or not? What I will do this first for raw material A, then I will do this for raw material 2, then I will do this for raw material 3, and then I will add the total. That's all. What I'm saying is, if there are more than one products, what you need to do it for every single raw material separately and add the total. Suppose if I get an adverse here, if I get a favorable here, you know it can be netted off. Correct? One is plus, one is minus. Correct or not? Correct or not? You can net off and finally write out whether it's an adverse or favorable. Whatever it is, you can write down. Are you clear with this? We'll be doing the next sum. Don't worry about it. This is point number 1. So when you have more than one raw material, what you need to do? Raw material wise compute the variances and add it together. That's all. No great rocket science here. Fine. Number 1. Number two, when you use more than one raw material to produce an output, now your material usage variance is there. No? This material usage, we saw that material cost variance is bifurcated into 2, material price variance and material what? Usage variance. So when you have a multi-product scenario, multi-raw material scenario, this material usage variance get further bifurcated into 2 more. Material mix variance and material yield variance. What is that? When we are doing the next sum, I will tell you. But these 2 variances are applicable only if you are using more than one product, more than one raw material at the same time. Are you clear with this? So material mix variance, material yield variance are what? Are 2 little babies of whom? of whom? Material usage variance. So basically, if you add the two, you should get what? Material usage variance. Correct? So you will get your daddy, new daddy. And if you add your MPV and MUV, you will get your grandfather. Correct? MCV. Correct? Material cost variance. Are you clear with this? Are you clear with this, guys? So when will this come? Material mix and material yield. When will it come? When you are using more than mix. Mix itself means that more than one variety. Are you clear with this? Guys, is everyone understanding this? Is everyone understanding this? Sir, how to do this? I will tell you. The next sum when we are going to do, using that sum illustration itself, I will tell you. But for the time being, are you able to understand? Are you able to understand what we are talking about? Does it make sense? Does it make sense, guys? Does it make sense? Yes. Is everyone clear with this? Is everyone clear with this? What's the formula for material price variance? Standard price minus actual price into actual quantity. Very good. So now let's get started with the next sum. The next sum. So basically some sums will be like this example that I gave you, direct computation. Yes, as easy as this. This is actually an illustration in your study material. This is actually an illustration. Whatever I gave you just now, it's an illustration directly picked from the study material, only not my own creativity. But this explanation and all, it's there in the study material, but it will run into pages. It will run into pages and you won't even feel like studying. Fine. I am not blaming the study material for that, because it has to be when there is not a, see, when someone is explaining it to you, they can explain it using all these charts and all that. But when you are preparing a self-study book, it has to run into pages, right? And that's where many students find it difficult. They feel, oh, why should I know all this? Directly they go to that formula and start mugging up. That's the problem. That's the problem. Actually, everything is there in the study material. Fine. Maybe now if you go and read the study material, I'm not sure if you have the time, but now if you go and read it, now you will understand. Okay, fine. So this is the reason. This is for purchase manager. This is for production manager. Everything is given in the study material. The problem is we don't read it. That's all. Fine. Are you clear with this, guys? Are you all clear with this? Are you all clear with this? So material cost variance, one figure, if I give that alone is not enough. I have to pin it down to the exact person who is responsible for that. And to whatever extent I need to quantify it. Are you clear? This is exactly called as performance evaluation. I'm evaluating his performance. That's why in your final, the subject, costing subject itself is called as strategic cost management and performance evaluation. The subject's name itself is that only. It's called performance evaluation because you will do this. And this chapter has another name. Standard costing has another name. It's also called as variance analysis. This chapter is also called as variance analysis. Nothing. We are analyzing the variance. That's all, no? Correct? That is the reason why this chapter is also called as variance analysis. Now, guys, shall we do the next sum? Shall we do the sum? So, I'll tell you, we will do the sum. This upcoming sum we will do and then we will take a break. Is that okay? What? Biggest motivation, huh? Okay, fine, we'll take a break after that. Not now. We will do the sum and then we'll take a break. Fine. So, you should be what? Enthusiastic, super enthusiastic. Yes, fine, right? So, shall we guys, shall we do it? Okay, fine. So, let's get started. Now, the next sum if you see, few lines it will be there. That's all will be given in the question. Now, if you are not able to get that sum just by going through whatever concept that I've told you, it's okay. It's okay because whatever I told you was one illustration for the study material that you understood. This is another type of sum altogether. And this was tested recently in November 2019. I'll just show this question. Where is it? Standard costing. Yes. Problem number one. Let me just read out this question for you. The standard cost of a chemical mixture is as follows. The material, 40% material A at rupees 20 per kg. This is one. And then 60% material B at rupees 30 per kg. So what they are saying is inside your output, if you see 40% of the material will come from A and 60% of the material will come from B. And every kg of A you should buy it at 20 rupees. Every kg of B you should buy it at 30. Standard or actual? Should means standard. Are you clear with this? Fine. A standard loss of 10% of input is expected in production. Meaning what? If my total input is 100, from A I should have 40, from B I should have 60. Correct or not? So that will make my total input as how much? 100. Now out of this mixture, after mixing, what happens? Some 10% will be a loss. Meaning what? Ultimately I will get only 90. Are you understanding this? So only if I input 40 kgs of A and 60 kgs of B, will I get an actual output of 90. Are you clear with this? This is what they have given. This is the first part. Next, The cost records for a period showed the following usage. Meaning what? Showed means what? Showed means what? Perfect. Actuals. Actuals. Now, what have they used? They have consumed 90 kgs of material A at a cost of 18 per kg. So, this is what? Actual quantity. This is what? Actual price. Correct? Then for B, they have used 110 kgs of material B at a cost of 34 per kg. So, they have also given the actual quantity of B and actual price of B. Correct? The quantity produced was 180 kgs of good product. Meaning what? Output. The output ultimately that came out was how much? 182 kgs. Sorry? 182 kgs. So, calculate all material variances. Any guess how many marks this question is? 10 mark question. It's a 10 mark question. No, that's why I said don't judge a book by its cover. Please don't judge this question based on the volume. It's a 10 mark question, worth a 10 mark question. It's absolutely worth a 10 mark question. Now, I'll give you 60 seconds time, solid 1 minute. Fine, go through this question fully and then you just have a mindset, frame your mind and tell me what has to be done. Okay, and then we will get started with it. Clear with this, guys? 60 seconds is all yours. Please don't talk among yourself. Even if you have a doubt, please don't talk among yourself. But you are always welcome to ask me anything. You are always welcome to ask me anything. Please don't talk among yourself. My humble request. Exam scenario, let's recreate it here. 60 seconds from now on. Yes, guys. Yes, time's up. Come on. So now, what's the problem in this question? Can anyone tell me what's the problem in this question? What? Sorry, come again? Perfect. Now, what were you saying? Sorry, everything is given in percentage, so what? Sorry, material is given in percentage, so what? So basically, your problem is how to compute standard quantity. Correct? That's what you're saying. Anyone else? What was the problem that you guys were facing? Loss is that. So basically, loss means that's related to quantity. Okay, fine. So quantity related. Any other issue? Fine. So everyone, are we all agreeing that computing the standard quantity is where the problem is? Because actual quantity, no problem, they have given. Correct or not? Standard quantity, it's been given completely in terms of percentage. Correct or not? So now, how are we going to do that? How are we going to do that? Now, first, you need not do anything. Let me do it. You participate, then I'll give you time to note down. Okay? I'll give you time to note down. First, you just look at the screen, follow it, participate, answer. If you are wrong, thank yourself for being wrong. Thank yourself for being wrong, because don't ever fear in making mistakes. Thank yourself for being wrong, because that's when you learn. Don't think that I should always be a perfect guy. No. No one is perfect here. So have that mindset, learning attitude, you have it. Don't even worry whether you're getting wrong. It's absolutely fine. It's absolutely fine. Fine. So please participate. Even if you don't know something, it's okay. Participate. That's when I will know what extent you know. And then I will correct you then and there. Are you clear with this? So please participate. My humble request to you all. Fine. Now, this is what question number 1 now. Fine. This is question number 1. You guys need not write down anything. So question number 1. So tell me the page number. It's on, it's page number 24. Yeah. Page number 24. This is what standard costing. Fine. Okay. Right. Now guys, what I will do is, first you tell me, for us to do this sum in standard costing, how many figures we need for each different raw material? How many figures we need? 4 figures. Standard quantity, standard price. Actual quantity, actual price. If you have these 4 figures, you can just play around with it left, right and center, because only 4 figures we are dealing with. Correct or not? And the first step for any kind of standard costing sum is to find out these 4 figures and write it. Correct? Once you have these figures with you, you know why these formulas came. Substitute, finish the question. Life is simple. Correct or not? But arriving at these figures is where the question lies, the problem lies. Are you clear with this? So what you need to do is, the formula has only 4 components. Standard quantity, standard price, actual quantity, actual price. This if I find out, it's okay. In this question, actual price details are given. Actual quantity details are given. Even standard price details are given. Only standard quantity, if you find out, the sum is done for you. The sum is done for you, and that's where the catch they have kept. Are you clear with this? Are you clear with this? So let me do it for you. Let me do it for you. You guys participate and then I will take it forward. Then I will give you time to note it down. Fine. So now first, let me just have a tabular column. Let me just have a tabular column here saying standard and actuals. Standard and actuals. Here, first I will have standard quantity, standard price, amount. Actual quantity, actual price, amount. Now, how many products do we have, guys? How many raw materials do we have? Sorry, products, raw materials. How many raw materials? A, B. If you add A plus B, you will get the total input, correct or not? You will get the total input, correct or not? From that, they have said there is some loss and all. If you get this, you will get the output, correct or not? Isn't this the format, guys? Isn't this the format? Is everyone understanding this? Is everyone agreeing with me on this? Is everyone agreeing with me on this? Now, let's fill the figures that we have with us right now. Shall we? Shall we? Now, actual quantity of A is present. Guys, look at the question. Answer. Actual quantity of A. How much? How much? 90. Actual price of A is given. How much? 18. Okay, fine. Actual quantity of B? 110. Actual price of B? 34. Okay, fine. So I have added 90 kgs of A and 110 kgs of B. Now I can add these two. Now don't say, sir, donkeys and monkeys, how it can be added. No, it's a mixture, a chemical mixture. It gets blended together. So in this case, we can add. Are you clear with this? You should know where to use that logic and where not to use that logic. Are you clear? Now I can add these two. How much does it come out to? 200. So totally I have inputted 200 kgs. What's my output I get? What's the output? 182 kgs, which means I have actually lost how many kgs? I have actually lost how many kgs? 18 kgs. How did you know this? Balancing figure. Correct or not? Balancing figure. Pencil circle. Balancing figure. How? 200 kgs I input, but what I got was only 182, which means 18 was lost. Correct or not? Now, can you just multiply these two and tell me what's the figure here? 19 to 18, how much is it? 1620. 110 into 34. 3740. Fine. What's the total? 5360. This is the cost I incurred on how many kgs? 200 kgs. But invariably 18 kgs I lost. Correct or not? There is no savings on that and all. That is lost. So can I say I have to incur, only if I incur 5360, I will get good output of 182 kgs. Does it make sense or not? Does it make sense or not? Yes, you look very confused. What happened? What is the 10%? Standard loss. What column are we in? Okay, done? Yes? Any other doubt? Please ask me the doubt. Please ask me your doubt. Yes? How this is 5360? Why? See, okay, I'll tell you, you need to input 200 kgs, correct? Correct? And the cost incurred for 200 kgs is 5360, correct? And only if you incur 200 kgs, you will get good output of 182 kgs. So basically, can I say that 5360 is the total cost I am incurring in order that I get a good output of 182 kgs. Does it make sense? Yes. So only if I input 200 kgs, I will get good kgs of 182, which means only if I spend cost on 200 kgs, I will get good kgs worth 182. Are you clear with this? Any doubts here? Are we all settled on this? Are we settled on this? Are we settled on this? Now guys, everyone, please listen. And of course, standard price are also given, no? How much? This is what? 20 and 30. Fine, right, great. Now, you tell me, what do you mean by standard quantity? What is the meaning of standard quantity? What is the meaning of standard quantity, guys? For the actual output, how many kgs of A and B I should have inputted? Correct or not? So can I say the starting point should be this? For me to actually achieve the output of 182 kgs, what should have been my input is what I'm trying to find out. Correct or not? Correct or not? Now they have said, you are allowed to have a standard loss of how much? 10. Meaning what? If you input 100, you can get a loss of 10, which means your output should be 90. Correct, guys. Correct, guys. Now, if 90 is equal to 182, how much should be 10? Can we find out 182 divided by 90 into 10? Now, does it answer your question, mister? You asked no. Here you will use that standard loss because standard loss comes only in standard column. Then what is this 18 kg, sir? It is actual loss. It is actual loss. That's why we are tracking it in actual column. Are you clear with this now? Are you clear with this now? Now this loss, how much is it? So 182 divided by 90 into 80 into 10. Please don't round it off. Tell me the figure. 20.222. Of course, retain the decimals. So how much is this? Add it up. 202.222 and all that. Now, out of this 202.222, 60 or 40 or 40% should be A, 60% should be B. So 202.2222 into 0.4 is equal to write down, 0.6 is equal to write down. How much? 80.89 and 121.33. Correct? Correct? Are you clear with this? And now we got everything we want. Now we got everything we wanted. Yes or no? Yes or no? Now we got everything we wanted. The problem is students don't know. Many students, this is where they make a mistake. They don't know that the starting point for standard should come from here. Because what do you mean by standard? For the actual production, how many kgs I should have consumed? Are you clear with this? Are you clear with this? Is everyone clear with this? So first fill the given data and then come to your standard. Yes. Sorry? Total what? Total input is? If total input is 100, my loss will be 10, which means my output will be 90. So based on this is a proportion. Based on this, I am calculating. So this 20.2, how I computed? 182 into 10 by 90. Using this only I computed, no? 100, 10 and 90. What they are saying is, loss is how much? 10% on what? Input. Which means what? If my input is 100, my loss will be 10, which means my good output will be 90. Correct? So if 90 is equal to 182, how much will 10 be equal to? That's how I found out. Mathabadi, it's not. 100 is not the actual input. 100 is for that proportion I've kept. Don't worry about that. Are you clear with this? Is everyone understanding? And this is how you need to do it. And now one more minute, one more thing, guys. Here we have, for simplicity's sake, we have written 80.89. But when you are using your calculator, please retain the full decimals because in our in this chapter, your material price variance plus usage variance should tally with your cost variance. No, if you round off here and there, it will not be matching. 1 rupee, 2 rupee, 10 rupees will actually be there, here and there. So actually, when you are calculating the amount, can anyone calculate the amount and tell me how much is this? 80.88888888 into 20. How much is that? 1617.78. Then how much is this? 3639 point something, 3640. So how much is the total? Sorry, okay, how much exactly is that? 0.9999. So 0.9999 if you round off, okay fine, if you want you can keep that, no problem. How much is that? 5257.78. நான் சொன்னது எனக்கே application பத்தியா? Right. So 5257.78 is the total cost that you should have incurred. Wait, I will erase all these scribblings. Yes guys, just note it down. Just note it down. Just note it down quickly. Are you guys able to follow this? Are you guys able to follow this? Is everyone able to understand? Guys, are you all able to understand? Yes, make it fast, make it fast. I'll give you just 2 minutes time. Quickly note it down. Do it by yourself. Don't copy paste. Please don't copy paste. Do it by yourself. If you are struggling somewhere, refer the screen. Make it fast, guys. You know how to do it. I've taken a lot of time in explaining this. So you have also been involved in it. So if you have really concentrated, obviously you'll be able to do it by yourself. Please do it. Please do it. Come on. So once you get this, now the sum is very easy. You know, substitute SQ, SP, AQ, AP and finish it off. That's not at all a matter. Let's do this quickly, guys. Come on. Make it fast. Done, guys? Are we done? Completed? Yes, completed. Have you all noted this down? Guys, please respond. Done now? Done? Shall I proceed further? Online folks, shall I proceed further? Yes, everyone?
Yes, sir.
Yes? Okay. Okay, right. 3 students have answered, others. Okay, fine. Right, done. So let's proceed forward. Let's proceed now. Now you have all the required data with you. So material wise you have the standard quantity, standard price, actual quantity, actual price. Now what we need to do, just a matter of plugging the figures in the respective areas, the formulas, and you know what to do. And why this formula comes, that logic also you know. Are you clear with this? And it's a complete package. It's done. That's about it. So let's get started. Now. So write down. First write down material cost variance. Material cost variance. Guys, what is the formula? Hello? Standard quantity or standard price into standard quantity minus actual price into actual quantity. Fine. You can also write standard quantity into standard price minus actual quantity. That inside multiplication you can switch it any ways you want. Some books will do it that way. It's not like that is not specific format. You know, what you need to know is more about the concept. Are you clear with this? Fine. Now, one second. So what you need to do is for A you need to compute separately, for B you need to compute separately. Correct or not? But actually we ourselves have done it already, no? Correct? Standard quantity into standard price of A is so much, for B is so much, and we have added the total. Correct or not? Guys, correct or not? We've already done it, no? Are you understanding it? You want me to repeat? We've already added it, no? Puriyala. We are just adding it, that's all. So standard quantity into standard price of A, standard quantity into standard price of B, you have these two separately and it's already added here. So we can directly put it here, 5257.78. That's the total standard cost for A and B put together. Correct or not? You're not understanding? No, first. Okay, fine, you tell me, standard quantity to standard price of A is how much? Standard quantity of A into standard price of A is how much? 1617. Standard quantity of B into standard price of B is how much? 3640. If you add the two, how much you get? And that's what we have done here. So total standard cost for A plus B put together is 5257.78. Total actual cost incurred for A plus B put together is how much? 5360. Correct or not? Minus 5360. Correct, guys? So tell me, adverse or favorable? You should have incurred 5,250 and odd something, but you've actually incurred 5360. Adverse, favorable? Favorable. How is it favorable? You should have spent only 5,200 and odd. You have spent more, no? Is it an adverse? Is it a favorable? Absolutely not. It's an adverse. How much is it? Rupees 102.22 within bracket adverse. Always remember, if you just write this and leave, they will not give you marks, because without no, in this chapter there is no question of minus and plus. It has to be clearly indicated adverse or favorable. No minus and plus and all allowed. No, then why do we have the concept of adverse and favorable? Because what is plus in sales side is minus in cost side. Correct or not? So you can't actually put it as minus and plus. It only makes sense if you suffix the figure with an adverse or favorable. So that's when adverse means what? Reduces your profit. Favorable means what? Increases your profit. Clearly it's done. So there is no confusion at all. Don't put minus. Please don't put minus. I am not sure whether they will give you marks and all. This chapter, actually they have variance analysis. They have classified it into adverse and favorable. Let's do it the way Institute is doing it in the exam. Are you clear with the suggested answers? All your RTPs and your study material, they are only following this approach. So let's also stick on to this. Are you guys clear with this? Fine. So don't put minus in case that's a doubt. Yes, very good that you asked me. Fine. In case you have a habit of putting minus for adverse and plus for favorable, please don't use it. Please don't use it. Do it only like this because it's given like this in the study material. Clear with this, guys? Now, material cost variance has two little babies. What are the two little babies it's got? Yes, material price variance, material usage variance. Guys, don't look anywhere. Price variance, formula. So, standard price minus actual price into actual quantity. Why? Within the bracket, the price is getting compared because the purchase manager, and quantity, whatever quantity that production manager asks me only, I am purchasing. How about the other side? Material usage variance. Standard quantity minus actual quantity into actual price. Actual price. No, standard price. Why standard price? Because production manager is not dependent on the purchase manager. Clear with this? If I put actual price here, then I am actually including the efficiency or inefficiency of the product purchase manager to the production manager. That is wrong. So separately, I should look at his efficiency level and the other guy's efficiency level. Are you clear with this? Are you all clear with this, guys? Are you all clear with this? Now, first for raw material A, tell me, what is the standard price? Pick it from the top. We've just done it, no? 20. Actual price is how much? 18. Into actual quantity is how much? Actual quantity is how much? 90. So tell me, favorable, adverse? Favorable, adverse? Favorable, adverse. You should have spent 20. You have just finalized the deal in 18 rupees on every single output that you actually purchase, every single raw material that you purchase. So how much is this? 180, monkey or donkey? Favorable. Favorable, right? It's favorable, right? Yes, it's favorable. Correct or not? Are you clear with this? Then for B, come on, go pick it up. What's the standard price? It's 30 minus actual price. How much is that? 34 into actual quantity. 110, 110. Correct or not? Look, you were supposed to pay only 30 rupees. Every kg of raw material you purchased by paying 4 rupees more. How many kgs you purchased actually? 110. So it's 440. 440 adverse. Correct or not? So if I net it off, there is a net adverse only now for me. How much is that? Net it off and tell me. How much is this? 260 adverse. Adverse, no. How is it favorable? 260 adverse. Are you clear with this? This is why I said when you have a multi-product, it's simple. Product wise, you compute all the variance and total it up. This is what I was telling you. Are you clear with this? Guys, is there a problem in understanding this? Is everyone able to follow this? Sure, guys. You guys are able to follow this? Perfect. Very good. Now, shall we move on to the other side? What's your usage variance? Similarly, for A, fine. Now, what's my standard quantity for A? Guys, look at the table. Everything is there on the table. You need not look at the question. Look at the table. That's all. You will get it. How much? 80.89. 80.89, right? So, 80.89 minus actual quantity of A, 90, into standard price, 20. How much is this? You were allowed to consume only 80.89. You have consumed 90. Efficient or inefficient? Inefficient. You consumed more. So, it's an adverse variance to the extent of how much? Sorry? How much is? 182.22. What? That's what? 182.22. Adverse, correct? What happened? 182.22 only, no? What happened? You rounded off. That's why I said don't round off. 182.22. Fine. You're getting the same answer only. Fine. Next. B. Come on, guys. B. What's the standard quantity? 121.33 minus actual quantity is how much? 110 into 30, right? Into 30. So you were allowed to consume 121 and odd kgs, but you've consumed only 110. So it's a favorable variance. So how much is that? 339.999. So that we will round off to 340. Fine, 340. Yes, if you want, you can retain the decimal. Yes, I know you will have this down. You can retain this. 339.9999. Yes, that you can do, no? Fine. Okay, right. Fine. Okay. But just to ensure, if you add these two, you get the top figure. That's all. That you take care of it. Are you getting it? That alone you take care. For that, whatever it takes, you do it. Okay. So this is favorable. Correct? So net of favorable or adverse? Hello? No adverse. It's favorable only. No, 340 is favorable, 182 is adverse. Correct. Net of how much is it? 157.78. 157.78. Favorable or adverse? Favorable. Correct. Now immediately check. You don't have this luxury in all the chapters. This chapter you can check. If you add the two, you should get your daddy. Is it coming? Yes. So, how will you do this? 260 minus, yes, 157.78. Net off, you are getting 102.22. Adverse, are you getting, guys? Yes, guys, are you getting it or not? Are you getting it or not? Is everyone getting it? Is everyone getting it? Is everyone getting it? Sure? Yes? Done? Are you all understanding this? The entire efforts was to build the topmost dabba. Once you build the topmost dabba, you are sorted for the sum. Because you are just going to pick the figures, plug and play. That's all. That's about it. Just plug the figures then and there, get your answers, and you can also verify that luxury is there in this particular chapter. You can verify the sum of these two should add up to the total. Now, one student asked me for presentation, sir, you have drawn like this tree and all you have drawn. Shall we do it like that in the exam? Yes, you can do it in the exam. If you see in your study material self-set answers, they would have done one below the other. Yes, you can also do it like this, absolutely no problem, because provided it is legible and you are neatly giving some space. I should not talk about legibility, but anyways, fine. So provided it's legible and you are giving some proper spacing and all, it's absolutely allowed. You need not worry about it. Are you clear with this? In fact, I wrote my intermediate exam like this only. I wrote it like this, and I was told by my faculties also that this is acceptable. That's why with that confidence only, I went and I did it like this. If you do it like this, you can automatically visualize the chart and you can do it. If you want to do it one below the other, absolutely you have all the freedom to do that. Okay, clear with this? So for presentation part also, I'm clarifying the doubt. Okay, clear with this? Now, are we done? Are we done? We are not done. This is a multi-raw material, mix of raw material scenario. So, this material usage variance will have two little babies. Correct or not? Material mix variance and yield variance. You don't do anything right now. I will first do it and tell you what it is, and then you can just write it down. With this, we'll take a break. Okay? After this concept, we'll take a break. Is that fine, guys? Is it fine? Perfect. Now, so let me just use the length of the page. You need not write anything. So just patiently hear me out. Patiently hear me out. Fine. If you have any doubts, please ask me. Once I finish this, if you have any doubts, you can just ask me. Clear? So material usage variance. What is the formula for material usage variance? Usage variance. Standard quantity minus actual quantity into standard price. Okay, fine. Now, what does usage variance talk about, guys? What does usage variance talk about? You should have consumed 200 kgs. You have consumed 220 kgs. Correct? Since you have consumed more, with respect to the usage side, if there is any variance that gets tracked inside what? My material usage variance. Correct or not? Correct or not? Correct or not? If there is any variance arising out of my consumption pattern, that gets tracked under my usage variance. Correct or not? Now, this usage variance can, again, I'm telling you, it can happen because of two reasons. It can happen because of two reasons. Let me just tell you. In this question, let me just take an example. Okay, let me just take an example. I'll just put it down here somewhere. Let me just take an example. Let's say raw material A, raw material B. Let's say 60, 40, a total of 100 is what you should have consumed. Okay. And raw material A, this is standard quantity. Standard price, let us say raw material A costs 1 rupees, raw material B costs 2 rupees. Okay, clear with this? Now I'm talking about the actuals. Actual quantity, if you see, they have consumed, let's say they have consumed 50 kgs of raw material A and 60 kgs of raw material B. So this makes it the actual price. Let's say they have purchased it at 1 rupee and 2 rupee only. Let's forget the price part of it. Fine. Now, overall, how much they have consumed? How much? How many units? 110. Now you tell me, will there be a variation in the usage? Usage side, will there be a variation? Usage side, will there be a variation? Correct or not? Definitely yes. But I am telling you, this will happen because of two reasons. What are the two reasons, sir? First reason you guys know, as against the 100, they have consumed something more. Overall, yield, there is some more yield. They have used more. Correct or not? This is one reason. But reason number two, which generally we forget is, look at this consumption pattern. A is a cheaper raw material. B is a costlier raw material. What they have done, even this 110, they have not used it, they have not consumed it in the ratio of 6:4. Correct or not? They have consumed more of a costlier raw material, lesser of a cheaper raw material. Because of the change in the mix also, there is your effect in your usage variance. Correct or not? So usage variance can happen because of two reasons. One is because you are deviating from the mix. And number two is because overall you are consuming more. Are you clear with this? And this is what is the two little babies of usage variance: material mix variance and material yield variance. Are you clear with this? Now, sir, how do we compute that? I will do it and show it to you. But first, are you convinced that usage variance can happen because of two reasons? First reason is overall yield. Because of that, the other reason is because of change in the composition. I am using more of a costlier raw material, lesser of a cheaper raw material. I will be incurring more cost. Correct or not? Because of the change in the composition, I can have a variance. Are you understanding? Is everyone understanding this? With this background, if you go to the particular formula, you will understand. Now the formula for material mix variance. The formula for material mix variance is revised actual quantity minus actual quantity into standard price. Now, what is this, sir? Revised actual quantity and all? I will tell you. Wait. First, let me just draw one dabba. Revised actual quantity, and standard price. You only need these three figures. Correct or not? Now, I want you guys to participate and tell me A and B. Actual quantity, you know. Actual quantity of A and B. Pick it up and tell me how much. How much is it? 90 and 110. Correct? How much is it in total? 200. Now, what is revised actual quantity? Now, when I'm talking about the mix variance, I am trying to figure out how much of my usage variance is attributable only because of the deviation in the mix. Here what I will do, that extra 10 kgs I consumed in my example, I told you, I have consumed extra 10 kgs, no? That gets tracked in yield variance. But whatever this 110 kgs that I have actually consumed, that at least I should have maintained the original mix, 6:4. Because of the fact that I am deviating from the mix, how much is the variance that is stemming out of it is what is getting captured under material mix variance. So how are we going to do this, sir? You tell me, what is the ratio in which A and B should have come? A and B, 40%, 60%. Huh? So basically what we will do is, the actual quantity is how much? 200. This actual quantity, fine. For some reason, you have deviated from the total standard quantity. Correct? Fine. Be it so. At least whatever actual quantity that you have consumed, that should have at least been in the original mix of 4:6, no? Correct? How much? So how much is A and how much is B? How much should have been A? How much should have been B? This is going to be 80 and 120. How did you get it? 20 into 0.4, 20 into 0.6. Correct or not? So at least I am comparing in my mix variance. What am I comparing? I am comparing actuals with actuals only, but actuals in standard mix with the actual and actual mix. Are you clear with this? Just because of the variation in the mix, what is the amount of variance that is coming out is what I'm trying to find out. Are you clear with this? So now what's your standard price? It's already given in the question. How much is it? 20 and 30. So now can you tell me what is my material mix variance here? You should have consumed 80. You have consumed 90. So it is 80 minus 90 into 20. How much is that? 200. Adverse or favorable? Adverse or favorable? You have consumed it more. Adverse. Correct or not? Here, you are allowed to spend, you are allowed to use 120 kgs. You have used only 110 kgs, which means there is a favorable variance. How much is that? 300. Favorable or adverse? Favorable. Net of how much is it? Net of how much is it? 100 favorable. Are you getting it? Are you getting it? Is this the total usage variance? No, no. Overall, if you see in this example, against 100, I have consumed 110. Okay. So, which means that did not get captured. I have not yet captured that. But this 110, I should have retained my mix. That I am deviating. What is the effect? That alone I am comparing. Are you clear with this? Are you clear with this? So, left side of the chart, mix variance, compares your actual quantity in the standard mix with the actual quantity in the actual mix. That's why I am comparing, that's why I am calling this as revised actual quantity. Why am I using the word revised actual quantity? I am revising the actual quantity. What revision are you doing? You are applying the standard mix on the actual quantity. Are you clear with this? That's why I am calling it as revised actual quantity minus actual quantity. And into standard price, I will get your material mix variance. Are you getting this? Are you getting this? Is everyone understanding this? Is everyone understanding this? Is everyone understanding this? Now, very simple. Material yield variance. Material yield variance. Can I say it's nothing but a balancing figure? Can I say it's nothing but a balancing figure? Or I think it's quite congested here. Let me just come down. You guys tell me, wait, you please listen. Material usage variance, formula na? Standard quantity minus actual quantity into standard price. Now, material mix variance. What formula did I tell you? Revised actual quantity minus actual quantity into standard price. Because we are always on this side. So here, whatever I multiply outside is only standard price. Actual price will not come. Why? We are talking about the production department and I am nowhere related to the purchase department. Correct? Fine. Into standard price. Now, material yield variance is there. Material yield variance is there. You tell me, material mix variance plus yield variance, I should get my daddy. Correct or not? Correct or not? Now, you tell me, within this bracket, something should come into selling standard price. SP remains constant everywhere. Correct or not? Correct or not? Now, I should add something to this to arrive at this. Correct or not? Correct or not? Can I say this is a balancing figure? Now, what I should get on the top? What I should get on the top? SQ minus AQ. Correct? I currently have what? RAQ minus AQ. So, this minus AQ I have already got. I have already got this minus AQ. Correct or not? What I need to do is, I need to get SQ. For that, I need to remove RAQ. Correct or not? Can I say this is nothing but a balancing figure? Standard quantity minus revised actual quantity into standard price. If you add the two, can I now say these two gets knocked off and finally you get standard quantity minus actual quantity into standard price? Correct or not? Guys, are you understanding or you want me to repeat? You want me to repeat anything? You want me to repeat? You want me to repeat? Yes, you want me to repeat? Yes, I will do it. I will do it. Fine. Just a minute. I'll erase this off. I will erase this off. Okay, guys, please listen here. Please hear me out. After this, we will break. Fine. So, again and again, I should motivate you, is it? Okay, fine. Please. Come on. Yeah, fine, guys. Now, this formula is okay. Material mix variance. Correct. What I told you, if you add your material mix variance and material yield variance, you should get what? Your daddy, usage variance. Correct or not? Correct or not? Correct or not? So, basically, I should get SQ minus AQ on the top. Correct? Currently, I have RAQ minus AQ on the left. I should add something to bring the answer as this. Correct? Already, I have minus AQ. This is tallying with my answer. Now, I need to now bring SQ and I need to remove RAQ. So, can I say SQ minus RAQ if I do? If I add these two, what happens? RAQ gets cancelled and it becomes your answer on the top. That is SQ minus AQ. Correct or not? That is nothing but your material yield variance is your balancing figure. Are you getting it? Are you getting it? Guys, are you all understanding this? Are you all understanding this? Or logically also you can say, here I am comparing standard quantity with actual quantity. I am tracking for the difference in the overall material consumption. Correct or not? Logically also you can think and do. Are you getting this? Are you getting this? Is everyone getting this? First, the material mix variance. What is the formula? Mix variance. Revised actual quantity minus actual quantity into standard price only. No doubt about that. And your yield variance is a balancing figure. It's a balancing figure. Are you clear with this? How do you balance? That's what I just told you, no? If you add something, you should get your daddy, correct? So add SQ minus RAQ, you will get it. Are you clear with this, guys? Are you all understanding this? Is everyone understanding this? You want me to repeat it once again? Done? Sure. You'll still look confused, that's why I'm asking you. Sure? Is everyone understanding this? Is everyone understanding this? So now just go up, let's go up. Let me just fill it up and then I'll give you time to note down. So material yield variance, what's the formula, guys? Standard quantity minus revised actual quantity into standard price. So now tell me, here I need not put this dabba and all, I have all the figures here. A, standard quantity is how much? 80.89, 89 minus RAQ is how much? We just found out 80 into standard price is how much? How much is that? 20, yeah? 20. How much is this? 17, 17.78, 17.78, just a minute, I'm sorry. 17.78, adverse or favorable? It's favorable. You were allowed to use 80.89 kgs, you have used only 80 kgs, correct or not? Similarly for B, tell me guys, for B standard quantity is how much? 121 point, sorry, 33, okay, 33 minus 120 into 30, yeah, okay, 30, how much is that? 39.999, 40, yeah, okay, fine, 40 favorable, adverse, wait, this is 40 favorable, huh? Yes, favorable only, yes, favorable. So total, how much is it favorable? Sorry, 57.78 favorable. So now if you add your material mix variance and yield variance, you will get your usage variance, correct or not? One second, look at this. If you add your material mix variance and your material yield variance, you are getting your usage variance, correct guys? Are you understanding this? It is that simple. So what you need to do is, you need to know the logic. For material cost variance, material price variance, material usage variance and material mix variance. The balancing figure is material yield variance, or material yield variance can also be understood logically. Standard quantity minus revised actual quantity into standard price. Are you clear with this? Quickly note this down and then we'll break. Quickly note this down, guys. Done, huh? Okay, perfect, right? Done? Okay, fine. So we'll break now. Thank you so much. Yes, guys. So shall we get started? Now, we are done with the first leg of this particular chapter called as standard costing. The first leg of it was material cost variances. Guys, answer no, please. Answer, fine. You asked me for a break, 20 minutes, I gave it. Come on. Now it's your turn. Pay it back. Come on, guys. Yeah. So, material cost variances. So, can anyone tell me? Not anyone. Everyone should tell me what's the formula. Material cost variance. Standard quantity into standard price minus actual quantity into actual price. Segregate into two. Material price variance. Formula. Standard price minus actual price into actual quantity. Yes. And then usage variance. Standard quantity minus actual quantity into standard price. Then this usage variance is further classified into material mix variance and material yield variance. Mix variance, what is it? Revised actual quantity minus actual quantity into standard price. And the other one is a balancing figure. Standard quantity minus revised actual quantity into standard price. Are you clear with this? Now, if you know this, automatically we are done with labor variances and our variable overhead variances. I will tell you how. So now shall we move to the next segment, that is your labor cost variances? Shall we guys? Fine. So let's move to the next segment called as labor cost variances. So write down labor cost variances. Labor cost variances. So now, we all know that what's the objective of this chapter? We have to compare the standard cost with the actual cost. That is, we need to find out the variances. Now, when we are talking about labor cost variances, we are going to compare what? Standard labor cost with actual labor cost. Correct or not? Correct or not? Correct or not? Yes or no? Yes or no? Fine. Now, your material cost, I will say it is quantity, that is number of kgs of raw material multiplied by price per kg of raw material. Correct or not? In labor, it is not quantity and price, it is hours and rate. Correct or not? Correct or not? That is hours into rate per hour. Correct or not? This will be the usage here. So wherever Q was there, you will replace it with H. That is, quantity will be replaced by hours, price will be replaced by rate. Everything else is the same. Simple. Simple, guys. Yes or no? Yes or no? Now you guys tell me the formula for labor cost variance. Take a shot. It's okay. Come on, take a shot. Standard hours into standard rate minus actual hours into actual rate. As simple as that. As simple as that. Now, this gets broadly classified into two. Labor rate variance. There we called it as material price variance. In labor, it's called as rate variance. And here the other one is called as labor efficiency variance. You don't use labor, you are just gauging the efficiency of labor. Are you clear with this? Are you clear with this? Don't look at that book and all. Wait, I'm just in the introduction stage. Once I do this, I will add up. I will build. Let's build the subject. You will see some idle time variance and all. I will tell you. I will build that. First, if I tell you that, you will not understand. Are you clear with this? First, are you clear with this? Now, in labor, it is a function of two things, hours and rate. Now, hours, who is responsible? The production manager only. Why? Because he only has a supervisors and all to oversee the work. Correct or not? You should have taken 100 hours. If your employees have taken 120 hours, I will blame whom? I will blame the production manager only, no? So efficiency talks about the hours difference, and who is responsible for this? Production manager. Correct or not? Now rate, who fixes the rate? Human resource. HR, not purchases department. HR, no, look, purchase department will only purchase raw material. But when it comes to labor rate fixation, who does that? You are a human resource, no? This guy only does that. Correct or not? HR department. Now always understand, when I'm talking about labor cost variance, I'm talking about direct labor only. Why? Indirect labor is anyways covered under your fixed overheads cost variances. Correct or not? So we are only talking about direct labor. Are you clear with this? Are you clear with this? Now, you guys tell me, HR is responsible for what? For what? Rate. So, within bracket, what will come? Standard rate minus actual rate. Now, into whatever number of hours those guys are working, I need to pay for that. Can I tell them, no, you should be efficient and all? That production manager will say, that's none of your business. I will take care of the efficiency. You just pay whatever amount I take. Correct or not? Correct or not? So, standard rate minus actual rate into what? Actual hours. Whereas labor efficiency variance, what is it? What is it? Who is responsible? Who is responsible? Production manager. What comes within the bracket? Standard hours minus actual hours. Now, is the production manager dependent on the HR? No. If I put actual rate, if I multiply this with actual rate, what happens? I am actually transferring the efficiency or inefficiency of HR to the production guy. So what I will do, multiply it by standard rate. That's all it is. That's all it is. Are you clear with this? Guys, are you clear with this? The standard hours into standard rate minus actual hours into actual rate is your labor cost variance. Branch it into two, labor rate variance. Who's the guy responsible? HR. Within bracket, what comes in? Standard rate minus actual rate. And I need to pay this on actual hours. Whereas the other guy, the production manager, what comes within the bracket? Standard hours minus actual hours. And I will just multiply this with standard rate. Why? Because I am not dependent on the HR guy. Are you clear with this? Are you clear with this? And similarly, similar to this, when you have multiple skill set, just like how we had multiple types of raw material, you can also have multiple skill set. No? For example, if you see in this construction site and all, there will be multiple skill set. One guy will be a civil engineer, correct? One guy will be a maestri. You know, this guy who does all this actual laying of brick and all that. Now, that guy will have one more assistant, correct or not? 3 labors will be there, skilled, semi-skilled, unskilled. The rate at which I pay them, will it be same or will it be different? It will be different. So, here also there is a mix coming up, no? Here also there is a mix coming up, no? So, just like how we saw the material mix variance, we have something called as labor gang variance. A pool of people coming together is called as gang. So, labor gang variance. Now, apply the same logic. Can you tell me what will be the formula here? Revised actual hours minus actual hours into standard rate. Are you clear with this? And then labor yield variance will be what? The balancing figure that I told you. Standard hours minus revised actual hours into standard rate. Are you clear with this? And that's about it, guys. That's about it. Are you clear with this? Is everyone clear with this? Is everyone clear with this? Is everyone clear with this? Guys, are you all understanding? This is why we spent more time on materials, so that you can extend the same logic and close off your labor and variable overheads. Labor at least has this under efficiency variance, it has gang and yield. Variable overhead doesn't have that also. It just stops here. Only your variable overhead cost variance, split it into 2, expenditure variance, and you have some efficiency variance, and done. That's all. Efficiency variance is not further classified in variable overheads. That is even more simple. Even more simple. One shot, 3 different types of variances we can complete. Are you clear with this? So once again, guys, come on, tell me. Labor cost variance formula. Don't look at the screen. Come on, tell me. Standard hours into standard rate minus actual hours into actual rate. Branch it into 2. Rate variance. Who is responsible? HR. Within bracket. Rate, standard rate minus actual rate into actual hours. Whereas the other guy, efficiency variance, responsibility on production manager, within bracket, standard hours minus actual hours into standard rate. Why into standard rate? Because I am no way dependent on the HR guy, correct? And this efficiency variance is further classified. If you have a multi-skill set, it's further classified into gang variance and yield variance. Gang variance formula, revised actual hours minus actual hours into standard rate, whereas your yield variance is standard hours minus revised actual hours into standard rate. As simple as that, guys. As simple as that. Are you clear with this? Are you clear with this? Now tell me, is it difficult? Now tell me, is it difficult? If you know the concept, it will stay with you for a lifetime. Trust me, that's the power of knowing things conceptually. That's the power of knowing things conceptually. Now, before we get into the sum, I will give you an illustration. We will do that. I will write down the question. You also write it down. And let's try to figure out the answer, and we will do it. Fine? Okay, clear with this? With that, I will introduce a concept called as idle time and all, and I'll tell you what it is. First, this branch, did you understand? This branch, did you understand? Is it clear for everyone? Online folks, is it clear for everyone? Is it clear for everyone? Online guys, are you all clear with this? Are you all clear with this? Yes? Are you guys clear with this? Yes? Fine. Perfect. Very good. Now. Please note down this example. Please note down this example. Very good. Very good. Many people are answering online. Very good. Very good. For those who are not answering, please do answer, guys. Make this an interactive session. It's very good for you. It's very good for you. Honestly, trust me, it doesn't make a difference for me. But I want each and every student to get the best experience. For that reason only, I'm striving hard. So please, guys, please make it an interactive session. Even if you're online, I want you guys to visualize as if you're sitting in a classroom. Okay? Clear with this? Fine. So let's get started. Note down this example. Let's say the standard rate per hour. Standard rate per hour is rupees 10. Let's say the standard rate per hour is rupees 10. Okay? Then standard hours per unit. That is, for every unit, you are allowed to spend how many hours? Let us say 2 hours. Okay? So for every unit, you can spend only 2 hours. Okay, guys? Clear with this? We are not talking about a multi-skill set and all. Normal. Only one type of labor. Okay? Forget that multi-skill set. So if you don't have a multi-skill set, that gang variance and yield variance will not come into picture. Okay? Clear? We're talking about a single skill set. I just want to drive home one very important point. Now, they have also given you some actual data. What is that actual data? They are telling you what is the output. Output is 100 units. And always remember, output is the hero of this chapter, because only for the actual output, I will compute, based on that only I will compute something called as standards. Correct or not? So for the actual output, what should have been the hours? What should have been the quantity? That's how we compute. Correct or not? This is always the hidden hero, unsung hero of this chapter. Okay, many people conveniently ignore this. Many people conveniently ignore this. Output, actual output is the base for this chapter, because that is the base for you to compute the standards. Are you clear with this? Fine. Next. Let's say actual hours taken, let's say, is 220 hours. And let's say this includes, actually they have spent 220 hours. This includes 10 hours. Let's say this includes 10 hours of power cut. 10 hours of power cut. Fine. Then the actual rate per hour, the HR guys have paid rupees 9 per hour. Are you clear with this? This is what is the scenario. So every hour you were supposed to pay how much? 10 rupees. And for every unit you were supposed to take how many hours? 2 hours, which means for the actual output of 100 units, you were allowed to take how many hours? 200 hours. But you have actually taken how many hours? 220 hours. And what is the actual rate that I am paying? 9 per hour. And I have also given one small thing. This includes what? 10 hours of power cut. That is the point that I want to drive home in this particular area. Clear with the example? Now, let's get into it. Now, you guys tell me, labor cost variance. Formula. What is the formula? Standard hours into standard rate. Okay, standard rate into standard hours, whatever it is, minus actual hours into actual rate. Correct or not? Now you tell me, what is the standard hours? For the actual output of 100 units, every unit you should have taken 2 hours, which means the total standard hours is going to be how much? 200 hours. Into standard rate is how much, guys? You were allowed to pay them rupees 10. Correct or not? Minus actual hours how much? Now, no, wait, I'll tell you. Now, 210 hours, these workers came to the factory, they were present. They made themselves available, but 10 hours suddenly some power cut happened. Okay, now you tell me, power cut is your inefficiency or the employee's inefficiency? Company's inefficiency, employee's inefficiency. Can you say that you didn't work during the power hit, I will not give you the money? Can you say that? No. So I will pay him even for the hours during the power cut. Correct or not? So I will pay him for the entire 220 hours. Correct, guys? Are you clear with this? Into rate, actually I paid was how much? 9. Okay. So tell me, this is how much? 2000 minus 220 into 9 is how much? Oh, the same example only, no? It's 1980. Fine. So this is what? 20 rupees favorable. Guys, 20 favorable, no? You were allowed to incur 2000, you've incurred only 1980, which is what? Which is 20 favorable, guys. Correct or not? Fine. Now, I am classifying this into the multiple segments. First, what segment comes in? Labor, gang variance. Labor, rate, gang variance is what? Is that subset of what? You say your efficiency. Where does this come here? Gang variance will not come here. Anyway, single skill set. Where is the question of gang variance? Gang variance, multi-skill set only should come. Fine. Labor rate variance. Guys, labor rate variance. What's the formula? Come on, who's the responsible guy? Guys, tell it out. Yes. Standard rate minus actual rate into actual hours. Actual hours is what? Entire 220. I will pay him for the entire 220. Can I tell him you didn't work for 10 hours, I will remove that? Can I say? Absolutely not. The employees or the workers will get paid for the entire 220 hours. Correct or not, guys? Perfect. Now, what's your standard rate? Hello? 10. Every hour you could have paid 10, but you have paid how much? 9. Is it good for the organization? Correct, no? It's good, no? You have a better deal. As against 10, you have just paid 9 rupees. And on actual hours is how much? 220. So now tell me, how much is this? 220. Adverse, favorable? Favorable. Correct or not? Now, on the other side, I have labor efficiency variance. What is the formula? Formula. Standard hours minus actual hours into standard rate. Correct or not? Now, guys, please don't write anything. I will give you time to write down. Please, very important. Please don't write out anything. Now, you tell me, what is the standard hours in this question? You should have taken 200 hours. You have actually taken how much? Now, you tell me, efficiency variance, what am I doing? I am trying to find out how efficient the employees or the workers were. Correct? When I am trying to gauge their efficiency, if I say that they have taken 220 hours, is it fair? They have finished the work in 210 hours itself, no? Correct? They have finished the work in 210 hours itself, no? Correct or not? Then the 10 hours, what will happen, sir? That you should pin it on the maintenance department. You should pin on the maintenance department. Correct or not? That fellows, they didn't do this proper thing. Maybe the generator was not working properly during the power cut, that they should have taken care of. Can you say it is inefficiency of employees? Definitely not. So, what I will do here is, I will call this as actual hours worked. Actual hours worked. How much is actual hours worked? 210, no? 210 into standard rate is how much? Standard rate is how much? That's 10, correct? If I put 9 here, I am transferring the HR's efficiency to him. I can't do that. Correct? So, how much is this, guys? How much is this? 100 adverse or favorable? Adverse. Then what happens to the balance? I will introduce something called as labor idle time variance. And that labor idle time variance is nothing but idle time into standard rate. How much is the idle time? 10 hours. Standard rate is how much? 10. How much is this? How much is this? 100. Favorable or adverse? Always idle time variance will be adverse. You need not have this doubt. Idle time, it's adverse only, no? Correct or not? Now you net off the 3. You get the answer? Yes or no? Yes or no? Does this make sense, guys? Does this make sense? Sir, why am I removing this idle time and keeping it here? If I compare the standard hours with actual hours paid, that is 220, it is a sheer injustice while calculating the efficiency of my workers. So what I do, I compare the standard hours only with the actual hours worked. Only with the actual hours worked. So what is that, sir? The actual hours paid minus actual hours worked. That difference is only your idle time. That idle time will be parked separately. And are you getting this? That gets pinned on to whom? That gets pinned on to this fellow called as maintenance guy. Maintenance department. This is on the HR guys and this is on the production department. Are you clear with this, guys? Are you clear with this? Anyone has any doubt in this area? First tell me, does anyone have any doubt in this area? Yes. So basically, when there is an idle time, 2 actual hours will be there. 2 actual hours will be there. If you see in this question, you have 220 hours, you have 210 hours. Correct or not? 220 hours is nothing but actual hours paid. Correct? Correct? Whereas 210 hours is nothing but actual hours worked. Are you clear? So everywhere in this area, in the labor cost variance on the top, actual hours means what? Actual hours paid only. Anyway, I'm incurring the cost on that. Labor rate variance. Here also it doesn't matter because I'm paying him even for the idle time. But only when I'm calculating the efficiency, I will segregate the hours worked and idle time. Are you clear with this? Are you clear with this? Is everyone clear with this? Is everyone clear with this? And in case it is a multi-skill set, you need to compute what and what? Gang variance and yield variance. That will stem only out of this. Meaning what? Meaning what? In your gang variance and in your yield variance, the actual hours will always be actual hours worked. Are you clear with this? Guys, are you all understanding this? Is everyone understanding this? This is a very important part. Are you all understanding this? This is the only difference between material and labor. But for that, everything is simple. Are you clear with this? Anything that you want me to explain once again, please let me know. Is this clear, guys? Is this clear? So, okay, fine. So now come on, tell me now. What's the formula for labor cost variance? Standard hours into standard rate minus actual hours into actual rate. Actual hours means full actual hours paid only, correct? This gets branched into ideally 3. In case there is an overtime, ideally 3, correct? Fine. Left hand side, labor rate variance. Who is responsible? HR. Within bracket, Standard rate minus actual rate into actual hours. Perfect. Then go to the rightmost part. Labor efficiency variance. Now tell me. Standard hours minus actual hours worked into standard rate. Why standard rate? Because I am not dependent on the HR fellow. Now, this difference between actual hours paid and actual hours worked is only idle time. I will pin it on the maintenance department. Call it as a separate head. Call it as what? Labor idle time variance. Formula is idle time into standard rate. That's always an adverse variance. As simple as that. And your efficiency variance further gets classified into two more, gang and yield, that you know what to do. Are you clear with this? With this, your labor cost variances is also sorted. It's also sorted. Learn it with concept, guys. Learn it with concept. See how easy it is and see how practical it is. How practical it is. This happens in a company. Tomorrow you finish your CA, you go to a company, and this will be useful in your real life. There is a team called as FP&A, Financial Planning and Analysis. These guys will be doing this work only, not this accounting work and all. No, accounting is all now automized. It's all automized. So accounting is not a major work nowadays. You need to come up with something on your own. These control aspects, this is where chartered accountants are sought after. And if you don't know this, when to use what? So if someone says, I don't know whether this department is working properly, now you can see what department they are talking about. Oh, production department. Fine. So from material aspect of which I will use usage variance. From labor aspect, I will use efficiency variance. Done. I will gauge their efficiency. I will tell the top boss whether they are performing in a favorable or an adverse variance. I can quantify the figure and tell them, look, because of this team, you have made so much profit or so much loss. Makes sense? Does it make sense? That should be the level in which you should keep yourself in any organization. Wherever you go. In articleship, if you just tell them why you are doing what, that's where the real learning comes. That's where the real learning comes. Your principal will be more interested in giving you a lot of analytical works. Routine work and all everyone can do. Look, chartered accountants are not meant for normal accounting. Normal accounting you should know. Why? To supervise your juniors, BCom graduates and all, you will supervise. You should definitely know accounts. But beyond that, all this decision making area, your control aspects and all, that's where we are sought after for. That only we can do. You can't delegate the job to an BCom fellow and ask them to do it. Are you clear with this? So this is a core for us. So whatever you learn it with the concept. It will always help you in your life, wherever you go. Clear with this, guys? Are we clear on this? Are we clear on this? Fine. So this is exactly what I've given in the material. This is exact. Yep.
Sir?
Yes. Who's that? Nashin. In labor rate variance. Labor gang variance. So what is the formula for labor gang variance? You tell me. Revised actual hours minus actual hours obviously worked only. Actual hours actually worked. Why? Because this is an offroot of efficiency variance only, no? So it has to be only this into standard rate. Similarly, for the other one, it's a balancing figure. So that's why I said for your gang and yield variance, wherever actual hours comes, it is only actual hours worked. Why? Because your daddy uses only what? Actual hours works? No. On the top, it's always your actual hours worked. Correct or not? So even the children will use only actual hours worked. Are you clear with this? Are you clear with this? So we are operating only on the actual hours worked while gauging the efficiency. Guys, are you all clear with this? Is everyone clear with this? Fine. Yes? Look, again the same logic. So, okay, guys, wait. The question here is, one student is asking me a doubt. Sir, while calculating the labor idle time variance, why should I multiply with standard rate and not actual rate? The answer is same as the logic why we use standard rate in labor efficiency variance. Assume if I put actual rate here, I am passing on the efficiency or inefficiency of the HR guy. Correct? Whereas what am I doing? I am gauging the efficiency of maintenance fellow. For him, what is he responsible for? Only this component. So I will multiply it only with standard rate. Are you clear with this, Darshini? Yes, are you clear with this? That is the reason why we are doing it. Clear, guys? Is everyone clear with the logics? Know it by logic. It will stay with you for a lifetime. So now let's get going with the other one. So, shall we move to the next sum? Guys, shall we move to the next sum? Yes? Fine. So let's move to the next sum. So this is exactly what I've given here. If you see it here, labor cost variance, all the formulas I've given. And guys, one very important thing I forgot to tell you. In exam, no doubt you can put it this way, but you should definitely write where SR stands for standard rate, SH stands for standard hours, AR stands for actual rate and AH stands for actual. You need to write what every abbreviation stands for. You can use SRSH throughout, provided at the end you write where what stands for what. Yes, if you don't write that, they will cut marks. If you don't write that, they will cut marks. So I have given it here just for presentation purpose. I want to tell this in the classroom. That's why. Please note it down somewhere. Abbreviations, whenever you give an abbreviations, you need to give a legend. That is, you need to tell them what it stands for. Are you clear with this? Without that, they will not give you marks. So don't go and ask them, sir, I wrote everything, they didn't give you marks. You need to write this. Yes, everywhere you can use a short form, but at least at the end, once you write it fully, write where, what it stands for what. Okay, are you clear with this? So this entire formula, whatever I told you only, I put it here. Only I think one difference, idle time came in the middle and the efficiency came on that side. Fine, that's okay. Presentation, you can do it whichever way you want. Are you clear with this? Is everyone clear with this, guys? Shall we move to the next sum? Shall we, guys? Everyone, will you guys answer properly? You have any doubts? Perfect. Very good. Right. So let's get started. Question number 2. It's on page number 25. This sum came in May 19 exam for 10 marks. This sum, the exact same sum, came in May 19 for 10 marks. It's also there in your study material. So let's get started with this. So let's get started. Fine. Okay, fine. Look at this, guys. Please look at this. So now you tell me, for you to compute the labor cost variances, what all figures you need? Standard hours, standard rate, actual hours, actual rate, actual hours worked. Actual hours means actual hours paid, and then actual hours worked. Idle time, then for gang variance, revise the actual hours. Correct. So basically you need what? Standard hours, standard rate, actual hours paid, actual hours worked, idle time. Then you need your actual rate, and then you also need your revised actual hours. Correct or not? But the revised actual hours, we will do it at the time when we are preparing the gang variance and yield variance. Are you clear with this? Is everyone clear with this? Yes, guys. So let's get started with this question. NPX Limited uses standard costing system for the manufacture of its product X. The following is the budgeted data given in relation to labor hours for the manufacture of 1 unit of product X. So what are they saying? For 1 unit of product X, you are allowed what and what and what? Skilled hours 2, semi-skilled hours 3, unskilled hours 5. A total of 10 labor hours you can use per unit. What is this? Per unit they have given. So what will you do? For the actual output, how much they should have spent. This is actually why have they given it? To find out the standard quantity. Correct or not? Correct or not, guys? Correct or not? Is everyone understanding this? And they have also given you what? The standard rate directly. Fine. Next. In the month of Jan 20X1, a total of 10,000 units were produced. Is this data relevant or not? Absolutely relevant. This is the actual quantity of output. Based on this only, I will calculate my standards. Correct or not? Fine. Were produced following other details. Now what have they given here? Skilled, semi-skilled, unskilled. Hours, rate and amount. This hours is what? Actual hours worked or paid. Actual hours worked or paid. Here they have given some actual idle time below. Okay. This is actual hours worked or actual hours paid. Now I'll tell you what happened. If you take this as actual hours worked, you should add this idle time to arrive at actual hours paid. If you take this as actual hours paid, you need to subtract this idle time to arrive at actual hours worked. Now you tell me, is this actual hours worked or actual hours paid? Actual hours worked, actual hours paid. Who all says actual hours paid? Okay. What about you? Rohini? No? Roshni or Rohini? Okay, Rohini. Okay, fine. Okay, who all says it's actual hours worked? You didn't say anything, so you have to raise up your hand. No, don't say you don't know. You at least have some idea, no? Just come up with it. It's okay. What do you think? Come on, guys. Make it fast. Who all think it's actual hours worked? Actual hours worked. Okay, so Rohini says it's actual hours worked. Anyone else? Online folks? Anyone else? Anyone? Now, this is actual hours paid. Assumption? No. Not an assumption. Can anyone tell me? They have arrived at the amount. When will you arrive at the amount? Only with respect to the hours paid, Rohini, are you getting it? Rohini, are you getting it? They have given the amount. They have multiplied this hours, actual hours with actual rate. Meaning what? This is actual hours paid only, no? Correct? Because you are going to pay for whatever hours he was inside the factory. Correct or not? Since they are giving this as an amount, definitely this only means it's actual hours paid. Are you clear with this, Rohini? Yes, you are understanding this. Everyone, this doubt, if you're not having it today, maybe in the exam hall you might have it. That's why I'm clarifying it. Are you clear with this? Are you clear with this? And they're also giving you the actual idle hours. That's your abnormal idle hours. They have given you the skill set wise. Calculate the labor variances. Shall we do it? Shall we do it, guys? Shall we? Yes? Let's get started. Let's get started. Let's get started. So this is what? Question number 2. So tell me, question number 2 is the page number? 25. Okay, so this is your standard costing chapter. Fine. So this was a 10-mark exam question. Now it's an easy thing for you. It's an easy thing for you. Be careful when you are doing. That's all. No catches in this sum. Nothing great is there. That's about it. That's about it. The only catch was whether that is actual as worked or paid. That alone some students might make a mistake. That's all. If you make a mistake there, just imagine you will get the labor cost variance correct. You will get the labor rate variance also correct. You will get the idle time variance also correct, because idle time they have already given it. Labor efficiency variance and its 2 branches, you will get it wrong, because there you would have got a different answer. Clear with this? Clear with this? So out of a 10-mark question, you can't expect them to give you more than 3 to 4 marks. That's all they will give you. Clear with this? Clear with this, guys? Please have this in your mind. This is the power of observation. Power of observation. Was there any concept that I just told you? No. Small little observation can make a lot of difference. Fine. So let's get started. Let's get started. Come on. Fine. Now write down. So as the same thing as it goes, let's make it the same way. Let's make it the same way. Wait, I will first give you the template. Particulars. Wait. I'll give you the template. Maybe then you can write down. Standard. In that, we will write standard hours, standard rate, and amount. Then what? Actuals. Actual hours paid, actual rate, and amount. So under this dabba, what we will do is actual hours paid minus idle time, actual hours work, that we will separately calculate and keep. Okay. So what we are doing, we are just taking and keeping all the ingredients ready, so that directly it's a plug and play. That's all. Plug and play model. Clear with this? 10 marks, standard costing, marginal costing, these chapters are all not time consuming to solve in the exam. It requires very good knowledge on the concept. If you have that, you can solve it easily. Whereas I will not say this for overheads and ABC. Overheads and ABC, even if you have a lot of conceptual knowledge, you need time to do the calculation and solve it. It takes time in the exam. So if you save some time in this concepts and all, in these questions, you can use that for your overheads and ABC chapter. Have this, use these kind of hacks. Are you clear with this? Fine. So let's get started here, guys. Come on, please drop this template. Please drop this template. Come on, make it fast. Let's drop this template, shall we? Guys, are you guys doing it? Oh, done now? Fine, very good, fine. Shall we proceed, guys? Fine. So first, what are the 3 categories of labor that we've got in the sum? Guys, I want everyone to answer. Skilled, semi-skilled, unskilled. I am using the short form S, SS and US. Okay, for our classroom discussion, it's fine. Please don't follow this in exam. Classroom discussion, short forms are fine. Don't use it for exam. Right? Now, fine. Okay, right. Very good. And know one more thing. When it comes to labor, will there be that loss and all? Loss. In the previous sum we did know A, B, C, input, loss, output. That concept is not there in your labor. Correct or not? How can you stock your labor? How can you say it's loss and all? No. That's why we have an idle time variance that takes care of it. Are you clear with it? So it's always, after this, it's only a total column. Are you clear with this? After this, it's a total column. Fine. Now guys, come on. Shall we get started with this? Now, standard hours. How much is this? How do you find out? Wait, I'm just going to the other one. Now, actual units is how much? 10,000. Correct? So, skilled per unit, you are allowed to use 2 hours, which means 2 into 10,000 is going to be 20,000, 30,000 and 50,000. Correct or not? Guys, correct or not? Just do it here. Write down. Write down, guys. 20,000 hours, then 30,000 hours, then it's going to be 50,000 hours, correct? Then it's going to be 50,000 hours, fine, right, 50,000 hours, okay. Then standard rate, how much, given, 6, 4, 3, 3, fine. Next, actual hours paid, given, 1,20,000, sorry, I'm sorry. What is the actual, okay, you are doing this, okay, fine, let's do this, 1,20,000, then, once again, 1,20,000, then it's going to be 1,50,000, 1,50,000, correct, fine. And then you can total these two also. So what is this? This is 1 lakh, this is 1 lakh, total hours used, because these people are coming together only working, and we will need this to find out the proportion and all. Yes, we need this, we can add these hours. And here the amount column, what is the total? 3,90,000, right, very good. Next, actual hours paid, how much? 18,000 hours, 33,000 hours, pick it up from the question. Then 58,000, what's the total actual hours? Total actual hours, 109,000. Why will we need this? When we are doing this revised actual hours, this will be the base on which we will compute the standard mix and all. Remember? Yes, fine. Next, actual rate. How is it 744? Okay, fine. Guys, 1 minute. One small thing. I'm really sorry. Please change this to 3.5. There was a typo error. Please change this to 3.5. Sorry. Yes. Please change this to 3.5. I think some students have already done the question. Please. Really sorry for that. That's a typo error. Just now I observed it. I'm really sorry. I should have. Yeah. I know some students have already done the question. They are waiting for me to take the next concept, or I don't know, next chapter itself. Okay, fine. Right. Okay, fine. But anyways, please change it. Now, anyways, you have to redo. So let's do it together now. Fine. So actual hours, actual rate. What's your actual rate now? 3.5, and here it's going to be how much? 4. Now what's your rupee value? That's also given there. 1,26,000. 1,15,500 and 2,32,000. Figure total 473,500. Correct or not? 473,500. Correct or not? Yes, guys. Fine. You got this dabba. Now shall we directly go to the formulas? No. What we need to do? Actual hours paid minus idle time will give you what? Actual hours worked. That also we will do, because we need that for what? Efficiency variance. Clear? So let's do that also. So write down here particulars and just 2 columns. Or maybe we can write 3 columns. Actual hours paid. Actual hours paid, idle time, actual hours worked. I'm scribbling literally. Fine. Actual hours paid, idle time, and actual hours worked. Clear, guys? Clear? Done? Now tell me, skilled, semi-skilled, and unskilled. Actual hours paid, how much? Just now we just did it. 18,000, 33,000, and 58,000. What's the total? 1,09,000. Right? 1,09,000. Right? Perfect. What's the idle time given? 500. Guys, everyone answer. No, why only one student is answering? 700 and 800. Fine. So this is a total of how many hours? 2,000 hours. Now actual hours worked is how much? 18,000 minus 500, 17,500. 33,000 minus 700, 23,300. Sorry, 33,300. Sorry, 32,300. 32,300. Sorry, my bad. 32,300. Then this is going to be 57,200, right? 57,200. So what's your total? 1,07,000. So horizontally, vertically, whichever way you want you calculate, it should tally. Correct or not? So 1,09,000 minus 2,000 is 1,07,000. or 17,500 plus 32,300 plus 57,200 will also give you the same answer. Clear with this? Now with this, we can draw the tree and finish it off. Yes, clear with this? Clear with this? Come on, let's make it fast. Let's make it fast. Come on, do it. Fine. So first, come on guys. Labor cost variance formula. Don't look back. Don't look back. Write it on your own. Write it on your own. Tell me formula. Come on. Standard hours into standard rate minus actual hours into actual rate. Correct or not? Yes. Actual hours into actual rate. I think we've already done this on the top. That is standard hours into standard rate. Total we have got it here already. 3,90,000. Correct or not? Actual hours into actual rate, we've already got this 4,73,500. So shall we just plug it here? Shall we just plug it here? Tell me how much minus how much? 3,93,000 90,000 minus 4,73,500. Okay, fine. So you were allowed to spend 3,90,000. You spend something more. So adverse, favorable. Adverse, how much? 83,500. Are you clear with this? The topmost granddaddy is ready. Correct? So now we just have to branch it and finish the other figures. Clear with this, guys? Clear with this? Shall we proceed further? Shall we proceed further? Now, branch this into, ideally it should be 3. Branch this into 3. Why 3? Because we have idle time also. So since we know it already, let's branch it into 3 at the beginning itself. What, and what? Labor rate variance on the right extreme corner, labor efficiency variance, and in between labor idle time variance. Are you clear with this? I hope the short form and all you guys are getting it. Yes or no? That's why I've given it in the material that I've printed. I've given it fully. Labor cost variance. What that is, I've given you fully. So yes, labor rate variance formula. Standard rate minus actual rate into actual hours. Tell me, first skilled. Now go to the top dabba, skilled, standard rate, how much? Rate. 6 minus actual rate, 7 into actual hours. This actual hours is what? Actual hours paid only, no. This actual hours is actual hours paid only, no. Rate variance. HR will pay for, even for the hours that he was sitting in the dark, no. Dark means what? Power cut. So he was sitting in the power cut, for that also I will pay him, correct? So hours paid. What is actual hours paid? Hello. How much is that? 18,000. Figure. This is going to be 18,000. Favorable, adverse? Adverse. Very good. Next. Semi-skilled. How much minus how much? 4 minus 3.5 into what? 33,000. How much is that? 16,500. Adverse, favorable. Right. Next, unskilled. So tell me, what is it? So how much is that? 3 minus 4 into what? 58,000. Okay, fine. So into 58,000. So how much is that? 58,000. Adverse. So all the 3 sum it together. Net is what? Adverse only, no? Adverse, how much? 58 plus 18 minus 16.5. How much is that? Come on. Calculate. Pick up your speed. Please pick up your speed. 59,500 adverse. 59,500 adverse. Are you clear with this? Are you able to understand? Everyone, are you all able to follow? Are you all able to formula? You guys are doing it. Yes, you guys are also doing it. Yes, fine. Everyone is able to follow this, guys. Very good. Now let's go to the extreme right. What's the extreme right? That's your labor efficiency variance. And guys, online folks, is the screen visible? Is the screen visible for you? You can see? Yes. Fine. Right. Now, labor efficiency variance. What's the formula, guys? Standard hours minus actual hours worked. Into standard rate. Correct or not? Similar thing. Skilled. Standard hours, how much? Standard hours, how much? 20,000 minus actual hours worked, 17,500 into standard rate. How much? 6. How much is this? 15,000 favorable. Why is it favorable? Why is it favorable? You were allowed to take 20,000 hours, but you just finished the job in 17,500 hours. Are you clear with this? Next, semi-skilled. Let's move to the next one. 30,000, 30, right? 30,000 minus 32,300. These guys have taken more. Into what? 4. How much is that? 9,200 adverse. Fine. Very good. Next. Unskilled. Fine. So tell me. 50,000 minus 57,200, right? Into what? Into 3. How much is that? 21,600 adverse. 21,600 adverse. So net of the 3, how much you get? How much is that? 15,800, correct? Adverse, correct? Now immediately come to the middle part. What is the middle part? Idle time variance. What is the formula? Simple. Idle time into standard rate. So skilled, what is idle time? What's idle time, guys? 500, right? 500 into standard rate. 6, how much is that? 3,000. Favorable, adverse. Always adverse. In this variance alone, there will not be any favorable. How can there be a favorable idle time? No, there can't be. Next, semi-skilled. What? 700 into 4. How much is that? 2,800 adverse. Next. Unskilled. 800 into 3. That's going to be 2,400 adverse. What's the total? 8,200 adverse. So immediately what will you do? Add the 3 and C. It should be equal to 83,500. Is it tallying? See, you don't have this luxury in all the chapters. This chapter is helping you to verify your answer also. Are you clear with this? Guys, is everyone following it? Rohini, you got it now? Yes, you are understanding. Others, Guru, Murali, Praveen, everyone, Nikita, everyone, you guys are understanding. Darshini, Kavya, Madhu, everyone, you guys are all understanding? Yes, guys, you guys are understanding here? Yes, online folks, fine. Is everyone understanding? Great. Now, are we done with the question? No. Why? This question is about a multi-skill set, which means the labor efficiency variance has to be further classified into gang variance and yield variance. Okay, so that's what we are going to do right now. This is something that we've already done in our material cost variance, a similar thing that we are going to do here. Shall we do this together? Yes. So take the extreme, go to the extreme left of the page. So maybe this, you can use the full width of your page, so you can do this. So what's the variance that we're going to do right now? Labor gang variance. It's also called as labor mix variance. Generally, it's called as labor gang. You can also use the word mix. Since HR, human resource, people related, it's called as gang. Mix is also a right usage only. So in your study material, alternatively, they would have used. Similarly, one more thing I want to tell you. We saw that that yield variance, labor yield variance and material yield variance. Material yield variance has another name. It's called as material sub-usage variance. Under usage variance only it is coming, no? So it's called as sub-usage variance. Similarly, if it is in labor yield variance is called as sub-efficiency variance. Labor sub-efficiency variance. So if they ask for sub-efficiency variance, don't think we haven't covered. It's nothing but your yield variance only. Please note it down somewhere. In your labor, okay, maybe you can write it down here. Yield variance is also called as sub-efficiency variance. Whereas here material yield variance is also called as sub-usage variance. Why, sir? Why is it important? At times in exam, if they give you this missing figure sum, if they give you material sub-usage variance, you might not know what it is. That is the reason why I'm telling you. Clear, guys? Material yield variance is called as material sub-usage variance, and labor yield variance is called as labor sub-efficiency variance. Are you clear with this? Yes, you guys are clear with this? Fine. Now let's go to this labor gang variance. Guys, tell me the formula. Revised actual hours minus actual hours into what? into what? Standard rate. So now can we start putting the dabba? Can we start putting the dabba? So open this dabba, open this tabular column, revise the actual hours, standard rate, and then you get your what? Labor gang variance. Now tell me, first type of skill set is what? Skilled, semi-skilled and unskilled. Skilled, semi-skilled, unskilled. Now guys, tell me, which column will you fill first? Actual hours. How much? And wait. This actual hours is always actual hours worked. This is always actual hours worked. Yes, someone asked me, Rohini asked me this doubt. It's always actual hours worked because we are talking only about efficiency variance. Under that only it comes. Are you clear with this? Any doubts here? So now tell me, actual hours worked. How much? Sorry? 17,500, 32,300 and 57,200. What's the total? What's the total, guys? What's the total? 1,07,000, right? I have actually used 1,07,000, correct? So now what will I do here? I will put 1,07,000 here. But ideally, this 1,07,000 I should have utilized in what ratio? In what ratio? Let me just go up and tell you. It should have been in the ratio of 2:3:5. Correct or not? Correct or not? 2:3:5 only, no? Correct or not? So split this in the ratio of 2:3:5. So this should be in the ratio of 2:3:5. So how will you do this? 1,07,000 divided by 10 into 2 is equal to write down, 3 is equal to write down, 5 is equal to write down. How much? How much, guys? 21,400, 32,100. Then 53,500. Correct? You are getting it, guys? Are you guys getting this? Is everyone getting this? Now go to your standard rate. What's your standard rate? Come on, pick it up. 643. And now you tell me your gang variance. You were allowed to take 21,400, but you've actually taken only lesser, so it's going to be a favorable variance by how much? Yes. How much is that? 3,900, favorable, adverse. What happened? This is correct only, no? 3,900. Sorry. 1 second. 21,400 minus 17,500 into 6. 23,400. No, in 3,900. Yes, 23,400. Why I took this? I don't even know. Okay. 23,400. Adverse or favorable? It's going to be favorable. Right. Next. 32,100 minus 32,300 into 4. How much, guys? It's going to be how much? How much is that? 800. 800. Adverse, favorable? Adverse. Next to 53,500 minus 57,200 into 3. 11,100. Adverse or favorable? Adverse. Net of it is adverse or favorable? Net is favorable only. How much? 11,500 favorable. Are you getting this? So now the other side of this question is going to be what? Labor yield variance, also called as sub-efficiency variance. Formula: standard hours minus revised actual hours into standard rate. Fine. So now S, SS and US. Standard hours, how much? 20,000 minus revised actual hours, 21,400 into standard rate 6. How much is that? 8,400. Adverse or favorable? Adverse. One second, sorry. Yes, adverse. Yes, adverse. Next. Semi-skilled. 30,000. 30,000 minus 32,100 into what? 4. How much is that? 8,400. Again, 8,400. Adverse. Next up. 50,000 minus 53,500 into what? Into 3. How much is that? 10,500 adverse. So how much is this? 27,300 adverse. So if you add these two, do you get 15,800? If you add 11,500 favorable and 27,300, add means what? Net off the two. Do you get this? Sorry. Yes, do you get this, guys? 27,300 minus 11,500 is going to be 15,800 adverse, correct? This is a favorable one, this is an adverse one, so it has to be netted off against each other. Are you clear with this? Guys, are you all understanding? Yes? You guys are understanding this? Yes? Right? Perfect. You guys are understanding this? So tell me, what is the formula for labor efficiency variance? Standard hours minus actual hours worked into standard rate. Very good. What's the formula for labor rate variance? Standard rate minus actual rate into actual hours, full actual hours paid. Okay, clear with this? Fine. And gang and yield variance, you know it comes below that. Are you clear with this, guys? Yes. Are you getting the comfort right now? Now tell me, is standard costing difficult? Is standard costing difficult? Still you are not saying no. Huh? Okay, whatever you feel like, say, tell me now at least, yes or no, you tell me something. Is it understandable or not? Yes, is it difficult? Is it difficult? You still have the feeling it's difficult? Yes, no, especially you. Yes, are you convinced that you need not mug up formulas here? Yes, clear with this, guys. Clear with this. That's about it. It's very, very simple. It's very, very simple and straightforward. Are you clear with this? Shall we proceed to the next area? Next area, we'll just finish it in a jiffy, and then our main focus is on fixed overheads. That's where the part is. Fixed overheads, I'll tell you. Logic to the extent relevant for you, I will tell you. Beyond that, I will just tell you what to remember. You just do it, because if I start that explanation, I will have to link something from the sales variance also, which is not applicable for your syllabus. That discussion alone will take a lot of time. We don't have the luxury of time here. Even in my regular batch, generally, I don't explain that much because it's not required. That's not required. But that is also 100% conceptual. What is the concept and all, I'll tell you. Only in certain areas, I'll tell you what to do and leave it there. Clear with this? Let's strike a balance. You should know where to deep dive and where to just stay on the top. That you should know to strike a balance. So let's get going with the next area. Hello, guys. Shall we? Hello. Yes. Shall we proceed? To the next one? Yes. So go to segment 3 of this chapter. What's the segment 3? Hello? Guys, what's the segment 3 of this chapter? Yes, segment 3 of this chapter is variable overhead cost variances. Now, have one thing in your mind. Here, what they mean by variable overheads. In cost sheet, you would have seen some direct expenses, no? Like power and fuel and all. That only they are calling as variable overheads. Why, sir, you're calling it overheads? Overheads means it should be come under absorption route. Now, that's why I said that's a product cost, period cost classification. Park it there. This is from a different perspective. We are achieving the objective of control. So here what they are talking about is those direct expense item, no, like power and fuel and all. It varies along with your output. Correct or not? So that is the reason why they are talking about this area in variable overheads. Because apart from very handful of expenses, everything else is indirect only. That is fixed only. No, let's say factory rent, depreciation. These are all fixed, right? This will come only under the fixed overhead category. Now, you tell me, if I run the machine for many number of hours, my variable overheads will be more. Correct or not? Example, power cost. If I run my machine for more number of hours, the power cost will be more. Correct? If I run my machine for lesser number of hours, the power cost will be less. Correct or not? Basically, this variable overhead is predominantly driven by the hours. Correct or not? Now, what hours? I will say it's labor hours. Why? Because only for the labor hours that they are working, the machine is also on now. Guys, correct or not? Only for the labor hours they are working, the machine will be turned on. Correct or not? And only when the machine is turned on, I will incur variable overheads. Correct or not? Are you getting it? Are you getting it? So in this case also, we will use ditto the same formula as we saw in our labor variances. Ditto same. One change is you will not have a concept called idle time. That is number one. Number two, here actual hours always means actual hours worked. Why? Because only for the actual hours they are working, the machine will be turned on, no? And only when it is turned on, I will actually spend my cost. Correct or not? Here there is no actual hours paid, actual hours worked and all. It's only actual hours stands for actual hours worked only. Are you clear with this? Guys, are you all getting the concept? So in a comprehensive sum, if they ask for labor variance as well as for variable overhead variance, you should know that for the purpose of variable overhead variance, you should take only the actual hours worked throughout. There is no concept of actual hours paid and all. For idle time, power shutdown, will the machine run? When it runs, only I will incur a cost, no? Correct or not? It's a variable cost. Correct or not? If it is not running, why will I incur the cost? Are you clear with this? Are you clear with this? Now, straight away, tell me the formula, guys. Come on. Variable overhead cost variance. What is the formula? Standard hours into standard rate minus actual hours into actual rate. Correct? So, you should have consumed only so many number of hours, and each hour you should have paid what? That electricity fellow, you should have paid 10 rupees. Correct or not? Maybe per hour you should have paid. But actually I have consumed so many number of hours, and every hour I have paid him something else. This is what is the comparison. That is the standard variable overhead cost minus my actual variable overhead cost. This is what we are comparing. Are you clear with this? Are you clear with this? Now this has two segments to it, similar to what we saw here. There we saw labor rate variance. Here it is not a rate. We call it as, labor quota. 1 second. Here we call it as variable overhead expenditure variance. It's an expenditure only, no? Correct or not? It's an expenditure only, no? Now, who is responsible for this expenditure? The maintenance guy. Why is the maintenance guy responsible? He only has to negotiate with the power department, no? Now, don't tell me, sir, I have never negotiated with the power AEB guys and all. They only charge me. No. We are all doing this residential. This is also commercial. This is not in our power. But these guys, what they use is industrial license they have. So they have the, they have the power to negotiate and all. They have given some powers. That is there with them. That's why we are talking about that. You and I cannot go and tell the government every month I'm using 200 units. For that, you give me some discount and all. No. That is not possible. But these guys can do. Even service industry can't do, because it's not machine driven. Only these heavy production oriented companies, yes, they all have a separate line that goes for them, because that requires a lot of load and all. If you go to that, if you use that load, whatever power they are using to run their machines, if you plug your charger, your mobile phone will burst only, because the load, the tension with which it comes will be very huge, because it has to pull a lot of power and run the machine. So that's the reason. Now, variable overhead expenditure variance. Who is responsible? Maintenance guy. What is he responsible for? Rate. So what comes inside? Standard rate minus actual rate into what? Actual hours. Who is responsible for the hours? The same production manager. So whatever happens, this side of the chart, always the same guy is only responsible. The production manager is only responsible. Only at the left hand side, people keep changing. For men may come and men may go, I go on forever. So this guy, production manager, every time this guy only gets handled. Are you clear with this? Now what's your other one? It's called as variable overhead efficiency variance. It's the same. Variable overhead efficiency variance. What's the formula? Standard hours minus actual hours into standard rate. Why standard rate? Because I am not dependent on the maintenance guy. I am only responsible for the hours. Are you clear with this? And this efficiency variance, further classifying and all, no. Power, super power, multi-power and all is not there. Only one type of power is there. Okay, clear with this? So you don't have this variance, you don't have this multiple further two limbs and all are not there. That's about your variable overhead cost variance. Are you clear with this? And you should always remember, actual hours means actual hours worked. Logic, only for the hours you're working, you will incur the variable overhead cost. As simple as that. Whereas this is not the case for labor. For labor, even for the idle time, I will pay no. That's why on the top, I take actual hours paid. But only by calculating the efficiency, I say it's actual hours worked. Are you clear with this? Know this concept, guys. Know this concept. It's going to be very easy. You can play around with this chapter, I'm telling you. Missing figures and all, whatever they give. If you know the formula, put this chart, plug the figures, you know what is missing and you can easily find out. That is the importance of this conceptual learning. Are you all clear with this? Are you all clear with this? Fine. Done with this. This exact same thing, I think I've given it already in your material. The same thing I've given it to you, and I've also given this variable overhead cost variances. AH always represents AH worked. I've given you that. Okay, are you clear with this? Shall we directly get into one small sum and finish this off? Shall we do it, guys? Shall we do it? Quickly, let's finish it off, and then the predominant, the balance time I want to spend on your fixed overhead variance. After that, this chapter will get over. That's all. That's all. Literally, if you see, out of 4 variances, we have covered 3. 75% of the chapter is already over. Clear? Clear. Tell yourself that. Tell yourself that it's easy. It's definitely easy. People will say it's difficult and all. Don't even pay heed to that. If you want, ask them to sit and you explain them the concept. Now they will also say it's easy. Fine. Okay, right? Come on, let's go to question number 3. Let's go to question number 3. It's on page number 26. Question number 3 on page number 26. Now this is fairly a simple sum, but you just need to watch out. You just need to be a little observant. Let's see how many of you guys are getting it right. No, it's a plain sum. It's a plain sum. Nothing, no catches and all. By this time, I would expect you guys to get this answer properly. Okay, fine. Now, question number 3. From the following information of G Limited, calculate the variable overhead cost variance, expenditure and efficiency variance. Fine. Look at this. Budgeted production. Read the wordings carefully. Budgeted production, 6,000 units. Budgeted variable overheads, 1,20,000. Standard time for 1 unit of output, 2 hours. Actual production, 5,900 units. Actual overhead incurred, 1,22,000. Actual hours worked, 11,600. Correct? Now, for me to calculate the variable overhead variances, how many figures I need? How many figures I need? 4. What are the figures? Standard hours, standard rate. Actual hours, actual rate. Now, out of these 4, 1 figure alone I will tell you. Other 3 figures you should tell me. What figure I am going to tell you? Actual hours. Very excellent guess. Fine. So, actual hours 11,600. How did we know? It's given. So, that's why I am doing it. Fine. Other 3, do it and tell me in the next 30 seconds. Not beyond that. Do it and tell me in the next 30 seconds. Make it fast. Make it fast. Make it fast. Put your brains to work, guys. Don't depend on me for the answer. Exam, you are left alone. Exam, you are left alone. Do it by yourself. And get that little satisfaction, yay, that you got it right. Yes, that you should get. Yes, come on. Do it fast. Done. Oh, very good. So many people have completed. Tell me, standard hours. Guys, standard hours. How much? 11,800. Yes, you also got last 2. You also got 11,800. You're doing it now. You got it already. 11,800. Everyone got 11,800. Excellent. 11,800. How you got that? Every unit you can take 2 hours. What is the hero? Actual production. For me to complete 5,900 units, I could have taken 2 into 5,900. Are you clear with this? Very good. Standard rate means what? Per unit or per hour? Where did unit come from? Throughout we are talking only about hours, no? Correct. So per hour, how much is it? 10. Any other answer? No. What is the answer? What did you get? You tell me. You tell me what answer you got. It's okay if it's wrong. So how? Okay, then what else do you think will come? You are saying how will it come to? Standard rate is how much is what I'm asking. Standard rate, online folks, standard rate is 10. Very good. 10. How is it 10? How did you get standard rate? Budgeted overheads divided by budgeted hours. So what is your budgeted hours? Budgeted production, 6,000 units into standard time per unit. Can I say my budgeted hours is 12,000? Correct or not? Correct or not? And my budgeted overheads is how much? 1,20,000. So 1,20,000 divided by 12,000. Standard rate is 10. Are you clear with this? Now you're understanding. Yes, others, everyone. Very good. Most of the students got it right. AH, I already told you out of generosity. So gentlemen. So AR, actual rate. So what's your actual rate? 10 point. Excellent. Very good. 10.5172, whatever that is. How did you get? Very simple. Actual overheads divided by actual hours. That is 1,22,000 divided by 11,600, and you get this. Once you get these 4 components, what's the big deal? Plug and play. That's all. Plug and play. That's all. Yes. Clear with this, guys. Clear with this. Everyone got this. You're understanding? Everyone, you're understanding the one next to you. Yes, you're understanding. Yes, Puriyar Daida. Is everyone understanding? Yes, guys. Fine. Let's quickly finish this off. Wrap up the sum. Let's quickly wrap up the sum. Yep. Let's quickly wrap up the sum. Come on, guys. Question number 3 on page number what? What is the page number? Yes, question number 3. It's on page number 26. Page number 26. So what do you do now? First, the ingredients you write down. Guys, come on. Standard hours. How do you get the standard hours? It's nothing but 5,900 units. Each unit require 2 hours. So what's your standard hours? Guys, please answer. 11,008. It's okay if you've already answered. Still you answer. It's okay, no? It's okay, no? Fine. Can I say I have already taught this in my regular batch? I can't teach it right now. Do I ever say that? I am again and again repeating, no? Yes, please do it. Please. Yes, standard hours. Then. Standard rate. What's your standard rate? Rupees 10 per hour. How did you get this? What's your budgeted overheads? Rupees 1,20,000 divided by what's your budgeted hours? 6,000 units each should have used how much? 2 hours. So this is how you got it. Are you clear? Every single figure you should tell them how you got it. That's when you will get the marks. Next. Actual hours. How much is this? 11,600 hours. Within bracket, please write down given. I know it might sound lame for you, but no. How did you get this figure given? You are telling the examiner. One look, if he looks at it itself, he will know. Okay, fine. This student has got it right. These 3 things he has computed. This one thing is picked from the question correctly. Yes. This is the way of presentation. Next, actual rate. What is that? Rupees 10.5172. Please retain the decimals in your calculator. Yes, this is actual rate per hour, obviously. How did you get this? 1,22,000 actual overheads divided by actual hours of 11,600. Correct or not? Hello, guys. Yes. Fine. Yes. With this, we got these 4 ingredients. Shall we get started with this this branch, this tree thing? Can we just do it? Yes. So come on. First thing. Come on. What is first? Guys, variable overhead cost variance formula. Standard hours into standard rate. Actual hours into actual rate. Plug and play. That's all. Standard hours, how much? 11,800. Standard rate, how much? 10. Actual hours, how much? 11,600 into actual rate 10.5172. So how much? 1,18,000 is the cost that you should have incurred minus. What is the cost you've actually incurred? 1,22,000. Fine. So adverse, favorable. Adverse, how much? 4,000. Yes. Correct, guys. Are you all understanding this? Now, this gets branched into how much and how much? 2 things. 2 aspects. What and what? So, variable overhead, expenditure variance, and variable overhead, efficiency variance. Formula. Standard rate minus actual rate into actual hours dependent on production fellow. Now, standard rate, how much? 10. But I have actually paid for every hour, how much? 10.5172. Please keep the entire decimals in your calculator. If you just put 10.5172, it will not match. Fine. Into how much? Actual hours. Evlo actual hours irukku? Okay, so 11,600. How much is this? 6,000 adverse. 6,000 adverse. Now here variable overhead efficiency variance formula. Standard hours minus actual hours into Standard rate. How much? 11,800 minus 11,600 into what? 10. How much is that? 2,000 favorable. Okay. And if you net these two off, you get what? 4,000 adverse. Right? Done. Simple, guys. Easy. Fair enough. Variable overage is very simple. You don't have anything apart from that. Maximum possible complication itself is only so much. Plain, vanilla, no flavoring and all. Very simple. Direct. Straightforward. Okay. Shall we move to the next one? The part of this chapter. Fixed overhead cost variances. Shall we go to that? Shall we go to that? After we finish fixed overhead cost variance, we'll take a break. Okay. After we finish this segment, we will take a break. Once we come from the break, we will start with service costing. Fine. Let us see whatever happens. Fine. Let us see. Let's take it as it comes. But this is the agenda. Clear with this, guys? Are you all understanding whatever we just did right now? Till now, whatever we've done, you guys are understanding? Excellent. Very good. So now let's get started with this next segment called as fixed overhead cost variance. Now this is one area which is relatively complicated. I will say relatively complicated. Complication doesn't mean difficult. It doesn't mean difficult. It means it has some inside concepts that you need to know. Whatever extent is relevant for you, I will tell you. Whatever extent is not relevant, you have to trust me. Fine. That's all I ask for. Most of the areas I will discuss conceptually. Only one or two areas I'll tell you why it has come and I'll leave it there on the face, because for me to explain that, I will have to go touch the sales variances, and sales variances is not there in your syllabus. That's a waste of time. So I don't want to do that. Okay, clear? But in old syllabus, sales variance was also there. For you and all, it's not there. So let's not waste much time into it. So we will strike a balance here. Now, okay, fine. Now, we are in the segment 4 of the chapter called as fixed overhead cost variances. Fixed overhead cost variances. First, you tell me guys, I'm telling you that fixed overheads, budget actuals. Let's say budgeted fixed overheads was rupees 1 lakh. Okay, and I had a budgeted output of, let us say, 10,000 units. Okay, actual fixed overheads was, let's say, rupees 96,000, and the actual output, how much I said earlier? 8,000 or 10,000? 8,000 la? I said 8,000, correct? 8,000 units. Yes, let's take the same example, but in this there is only one difference. This entire 1 lakh, this entire 96,000 are fixed overheads only. Now, you tell me, can I compare this 1 lakh with 96,000? Can I compare this 1 lakh with 96,000? Can I compare this 1 lakh with 96,000? How many of you say no? What? Raise your hands. Some people said no. Please raise your hands. If you own your opinion, learn to own your opinion. It's okay even if it's wrong. How many of you say it's no? Oh, so how many of you say it's yes? Oh, great. So the entire class says it's yes. Okay, fine. So what one student is saying that this 1 lakh cannot be compared with 96,000. Reason, this 1 lakh pertains to 10,000 units, but this 96,000 pertains to 8,000 units. Hello, please. You tell me, what is this cost? Fixed cost. What is the nature of fixed cost? Remains constant irrespective of my output level. Can I say, if you reduce the output to 8,000, I will pay lesser factory rent every month? I am going to pay, let's assume this is factory rent. I need to pay that landlord 1 lakh rupees, whether I produce 10,000 units or 8,000 units. Correct or not? So, when we are talking about a fixed overhead cost variance, there is no question of standard. No question of standard. Are you clear with this? No question of standard. Are you clear with this? The budgets can be directly compared with actuals. Are you clear with this? First thing, are you clear with this? This is where I'm telling you, fixed overheads is slightly different from the other areas. First, are you understanding this? Yes, now you are clarified. Now your doubt is clarified. You can compare budget with actuals provided it's exclusively a fixed cost. Are you clear with this? This is why in our overheads we said the nature of fixed cost, variable cost and all. You remember? Fine. Are you clear with this, guys? Right? Fine. Now let's get into this area called as fixed overhead cost variance. Now carefully listen. Fixed overhead cost variance is equal to absorbed fixed overheads minus actual fixed overheads. Absorbed fixed overheads minus actual fixed overheads. You guys tell me, when I compare absorbed with actuals, what is it called? Under or over absorption. So basically, fixed overhead cost variance is nothing but your under or over absorption. Are you clear with this? So this area does not talk about standard with actuals or budget with actuals. This area talks about absorbed versus actual. Nothing but fixed overhead cost variance is nothing but your under absorption or over absorption. Please write it down somewhere. This entire variance stands for under absorption or over absorption. Can you see this link? To the overheads chapter that we saw? Yes, can you see this link to the overheads chapter that we saw? This is like your Vikram movie link to Kaidi and all, no? That and all we enjoy, this we don't enjoy. Fine? Okay, fine. Right. Fine, correct or not? Fine, it's linked, guys. It's linked. That under or over absorption is only coming here once again. Special appearance, guest appearance towards the last end climax. Fourth part only, no? Last only it has come, no? All this twist and things. Fine, okay, right. Right. Clear with this? Maybe if you go to final, then sales variance will come, then we will link this also. That will be Vikram part 3, 4, whatever it is. But yes, now you are understanding this. Guys, please come back. Fine, right. Please. Are you understanding this? So what does this talk about? Guys? What does this variance talk about? Under or over absorption. And whenever I say under or over absorption, it's a comparison between absorbed and actuals. Are you clear with this? So what they are saying here is, this is nothing but standard hours into standard rate minus actual fixed overheads. Are you clear with this? Standard hours into standard rate minus actual fixed overheads. Now, you might be having a doubt. How, sir? How is it standard hours into standard rate? You told me when I am charging overheads, I will use standard rate and multiply it with actual hours, no? Correct or not? That doubt should come. Did it come? Oh, it came. Excellent. Very good. I will tell you. That is correct. Excellent. Very good. If you got this doubt, it means you are conceptually very good. Bang on. Fine. I will tell you why we are using this. This is correct. I will tell you how we derived at this. I will tell you. For the time being, you just accept whatever I say. For the time being, you just accept. But yes, I will tell you. It's logical explanation. I will tell you. Don't worry about that. Fine. So absorbed overages. So everything, since we are writing in terms of hours, it is coming like this. I will tell you. In a while from now, I will tell you. But let me just finish the entire branches and tree, and then I will tell you what that is. For the time being, you just take it as absorbed fixed overages, standard hours into standard rate. Clear with this? So when I am multiplying the standard rate with hours, it means what? This is standard rate per hour only, no? Correct or not? If I am saying this is standard rate multiplied with standard hours, it means this is standard rate per hour only, no? Correct or not? That is the meaning. Fine. Now, what they are saying, there are two limbs to this. The left-hand side of the limb, left-hand side of the chart is called as fixed overhead expenditure variance. What do you mean by expenditure variance? Simple. Budget fixed overheads minus actual fixed overheads. Budget fixed overheads minus actual fixed overheads. Clear with this? What is the expenditure variance? How much more you have spent or how much less you have spent. I can compare the budget with actuals. Why? Because we are in fixed overheads. Correct? Are you clear with this? Now, you guys just tell me. On the top, what am I comparing? Absorbed versus actuals. Correct or not? Absorbed versus actuals. Correct or not? This is what I'm comparing here. Wait, I'll write it here. Absorbed overheads minus actual overheads is my fixed overhead cost variance. Correct, guys? Correct. On one side of the chart, I am saying fixed overhead expenditure variance is what? Budget minus actuals. Correct or not? Correct or not? Now, look at this. There itself, I told you, once again go back. Overheads are three types. Budget, absorbed, actuals. Correct or not? Budget, absorbed, actuals. Correct? Now, the topmost daddy, what is it comparing? Absorbed with actuals. Correct or not? Now, left side, one child, what is it comparing? Budget with actuals. So, which means the other child should do what? Absorbed minus budget. Are you clear with this? Balancing figure. Are you clear with this? And that is called as fixed overheads volume variance. What is volume variance? Very simple. Absorbed overhead minus budgeted overheads. Why, sir? Why should we do like this? Only then if you add the two, budget will get cancelled and you will get absorbed overheads minus actual overheads. Are you clear with this? It's a balancing figure. Are you clear with this? Are you clear with this? Guys, is it understandable? Is it understandable? Now tell me, what is fixed overheads cost variance? Don't tell me under or over absorption. Tell me what minus what? Absorbed minus actuals. Fine. Absorbed minus actuals. And absorbed, I told you, it is standard hours into standard rate. Why? Logic, I'll explain. Fine. Right. So this is what your absorbed minus actual. Now split it into two. Expenditure variance. What minus what? Budget minus actuals. The balancing figure volume variance is absorbed minus budgeted. Are you clear with this? Fair enough. Easy, guys. Isn't this easy? Isn't this easy? Logically, can you get it? Logically, can you get it? Because actually seeing this volume variance is where you will have a lot of concept. You will have a lot of concept that is linked to your sales margin variance and all. There is something there. In sales variance, you will have total approach, margin approach, not there for your exam. For me to explain this, I need to prepare a reconciliation statement and show you. But right now, it's not required. That's why I taught this to you as a balancing figure. For the time being, you just accept it. At times, it's clever not to get too deep into the concept. It makes sense because it's not there in your syllabus. Had it been there in your syllabus, no mincing words. Definitely in final and all, this concept itself explanation will go for about 1.5 hours. This only volume variance itself will go for about 1.5 hours. So that's why I'm telling you, for the time being, you just accept. This is sufficient for your exam. Clear with this? Anyways, what does fixed overhead variance stand for? Under or over absorption. Absorbed minus actuals. Now, left side of the chart, expenditure variance. Budget minus actual. So this guy should be the balancing figure. Volume variance is your absorbed minus budgeted. Are you clear with this? Are you clear with this? Now, so this is what fixed overhead? Fixed overhead what? Volume variance. Fixed overhead volume variance. So what is this formula? Absorbed fixed overheads minus actual fixed overheads. Okay, absorbed minus budgeted fixed overheads. And what is absorbed? This is nothing but standard hours into standard rate. Why? I am here to tell you that I will tell you. Clear with this? Clear with this? Fine. Now, this fixed overhead volume variance has further two limbs to it. It has further two limbs to it. Please don't look at the book and all. There are three limbs will be given. What is that? I will explain. The third limb I will explain. First you should know this. Then you can know that. Okay? Are you clear with this? Are you clear with this? Fine. What are the two limbs called as? Fixed overhead capacity variance and fixed overhead efficiency variance. Fixed overheads capacity variance, fixed overheads efficiency variance. Now, these two are also logical only. But since I am not explaining you the concept of volume variance right now, what I want to do is, I just want you to just do something that I ask you to do. What you need to do here is, only one thing you need to remember. Only one little thing you need to just remember by heart. I don't want to use the word by heart. You just need to remember. Can you just remember this one thing? AH into SR. Actual hours into standard rate. Okay? Minus whatever is there here, you do it. Minus budgeted overheads. Budgeted fixed overheads. Correct? And this will be what? The balancing figure. This will be what? The balancing figure, right or not? This will be what? Absorbed fixed overheads minus what? AH into SR. Correct or not? Can you remember in the entire subject, I am asking you to memorize only one thing. What is that? AH. This alone can you remember? This alone can you remember? This alone can you remember? AH minus SR. Sir, then you mean to say it is illogical? No, it is logical, but it's not worthwhile explaining it. It's not there for your syllabus. That's why I'm not getting deep into it. Can we just make peace with this? Can we just make peace with this? This capacity variance alone, you just one thing, suddenly it comes actual hours. Clear with this? Actual hours into standard rate minus whatever is there on the top, left, right hand side. Clear with this? And this will be what? This will be the balancing figure. That is absorbed fixed overheads. SH into SR minus what? AH into SR. Are you clear with this? Can you remember this alone? Can you remember this alone? So what should you remember? AH. Only one thing means you can easily remember. So many things only difficult, no? In the entire subject, AH alone can't you remember? AH alone can't you remember? I will, trust me, I will not ask you to mug up anything else. Fine, AH alone, even if you see in your material cost and all, there will be some levels, no? Stock levels. That also I will tell you conceptually only. You need not mug up anything. That also, promise I'm telling you, only this part. Fine? It's not worthwhile the explanation, that's why. AH alone. Correct? Now. Full. Come back. What is your fixed overhead cost variance? Come back. Tell me. Absorbed minus actuals. That is absorbed static, but standard hours into standard rate minus actual. Now branch it into two. Expenditure variance and volume variance. Expenditure variance. What and what? Budget minus actuals. So what is your volume variance? Absorbed minus budget. Yes, clear with this? Now you just branch it into two. Capacity variance and efficiency variance. Capacity variance, one thing you need to remember. AH into SR minus whatever is there on the right hand side. Budgeted fixed overheads, and your efficiency variance is the balancing figure. That is absorbed fixed overheads minus AH into SR. Are you clear with this? Yes, are you clear with this? Is everyone clear with this? Yes. Now let me just come to this particular area. Sir, in that chapter while doing overheads, you said overheads absorbed is nothing but standard rate, that is predetermined rate into actual base quantity. Correct or not? Now you are changing it in this area only. Why, sir? No. I'll tell you what has happened here. I will explain it with an example. Fine. So, I'm not planning to take more time here. Just see if you are able to understand. Fine. Mostly, I wish you understand. If not, just leave it there. Because this explanation is something that I'm doing for a conceptual knowledge. Regular batch, yes, we will be having all the time. I'll definitely do it. But fast track, we don't have much time, but I'm not going to omit this. I'll just tell you, maybe I'll take a few minutes time and I'll explain you why it is so in this case alone. If you're able to understand, well and good. If not, don't worry. From exam point of view, it might not be that important, but yes, maybe if I was in your position, I would have had a sleepless night had I not known this concept. So maybe for those who are really curious to know the concept, for them alone, yes, fine, you can take this as some extra bonus point. Fine. Now, just patiently listen. Hear me out. Just hear me out. Now, I want your participation, guys. Please participate. Now, I'm giving you an example. It's not necessary to note down. If you want to, yes, I'm not going to stop you. Fine. I'm giving you an example. First. Now, let's say the budgeted fixed overheads is rupees 1 lakh. The budgeted fixed overheads, guys, carefully listen. The budgeted fixed overheads is rupees 1 lakh. The budgeted output, let us say is how much? It's 10,000 units. And let us say the budgeted hours in total is going to be 20,000 hours. Meaning what? For every unit, you can take 2 hours. Correct? This is the meaning. Correct or not? And they have also given you that the actual quantity is 15,000 units. The actual quantity is 15,000 units. Yep. Correct? Fine. Now, you tell me, carefully listen. When I am using production units methods, how many base quantities are there? 6. Under that, the last base quantity is what? Production units. Directly I'm finding out the absorption rate per unit. I can do it in this sum, no? Correct or not? If I am doing it like that, what is the standard rate per unit? How much is it? Standard rate per unit. Can I say it is 1 lakh divided by 10,000? How much is that? Rupees 10 per unit. Again and again, I'm stressing on this. Per unit. Correct or not? Correct or not? Correct or not? Yes. 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 Suppose if I am going by labor hour basis, what is my standard rate per hour? How much is that? 1 lakh divided by 20,000. How much is that? How much is that? Rupees 5 per hour. Yes, clear with this? And one more thing I want to tell you. Every unit, that is standard rate, sorry. Once again, I'll just come up again. Standard hours allowed per unit. Standard hours allowed per unit. Every unit, how many hours you can take? How many hours you can take? How many hours? 2 hours. Correct or not? 2 hours. This data, are you guys understanding? This data, are you guys understanding? Now, let's say I want to calculate the absorbed overheads using what? Production units method. Formula. Absorbed overheads. Standard rate per unit into actual units. Correct or not? Actual quantity. Correct or not? Yes. So tell me, what is the standard rate per unit? What is the standard rate per unit? Per unit. 10 rupees. Correct? Rupees 10 into actual quantity is how much? 15,000. How much is this? How much is this? Rupees 1,50,000. Right. Now just carefully observe. This standard rate per unit of 10 rupees, how I got? Can I say it is nothing but standard rate per hour into standard hours per unit? Every unit, every hour, if I'm going in terms of hours, every hour I'll absorb 5 rupees and every unit requires 2 hours. That's how I got this. Correct or not? Correct or not? Madam, yes, you are understanding. You will ask this doubt, no? Yes, are you understanding? Fine. So can I say this is nothing but standard rate per hour into standard hour per unit into actual quantity. I am just splitting this. Can I do that or not? You tell me, what is standard rate per hour? Tell me what standard rate per hour? How much? 5. Standard hours per unit? 2 hours. Actual quantity produced? 15,000. Now wait. This is where the twist happens. Now, if I club these two, can I say actual production is how much? 15,000. Correct? For each of these 15,000, you should have spent how much? 2 hours. Can I call this as total standard hours? How much is this? 30,000. Correct? 30,000 into standard rate per hour, which is equal to 5. So now, can I say that if you want to convert the production units method in terms of hours, it becomes standard rate per hour into standard hours? Madam, you're getting it now? And this is the logic for absorbed overheads. They are telling that standard rate per hour into standard hours. This is the logic. Are you clear with this? So always remember, only on the base quantity actually consumed you will multiply. But what they are doing here is they are converting the production units method into hourly basis, and they are doing it. Are you clear with this? Now you are understanding why in this chapter it's been done like this. If you want to take a snap, yes, you can do that. No problem. Are you clear with this, guys? Are you clear with this? Yes, is everyone clear with this? In case you are not understanding too much, sir, don't worry too much about it. Just leave it. Yep. Sorry? Standard rate per unit, budget overheads lenda edukano. Yes, that's what we took. Units, if your units change, remains the same, but what and what you are comparing? Absorbed overheads will change, Actual overheads will not change, but absorbed will change, That's what we are comparing. Correct or not? Are you clear with this? Guys, are you clear with this? No? Fine, just leave it, make peace with this area alone. If you are understanding, well and good. If not, from an exam point of view, this is certainly not important. But conceptually, I just try to explain why it is SR into SH instead of actual standard rate into actual quantity. Why is it coming like this? I just explained it. Are you clear with this? Are you clear with this? Maybe this example you can note it down. Think twice in your house, and then if at all you get it right, then it's absolutely okay. If you're still not convinced, hit me up after the class. I'll help you out. No problems. Are you clear with this, guys? Fine. Done with this. Now, you guys tell me. So we will write this formula once again. We will write this formula for fixed overheads once again. Okay. So tell me what's the formula for fixed overhead cost variance? Standard hours into standard rate, that is nothing but absorbed minus actuals. Correct or not? This gets segregated into two little babies. What are they? Fixed overheads expenditure variance and fixed overheads volume variance. Fine. Expenditure variance formula: budgeted fixed overheads minus actual fixed overheads. Your volume variance is what? Balancing figure. What is it? Absorbed, that is SH into SR minus budgeted fixed overheads. Correct or not? Correct or not? Now, this we classified it into two. What and what? Fixed overhead capacity variance, fixed overhead efficiency variance. Yes, capacity variance. Formula. One thing alone I asked you to remember. What is that? AH into SR minus budgeted overheads. Correct or not? And this is the balancing figure. SH into SR minus AH into SR. This is what we saw. Clear, guys. Now, one more addition I will make. Last, final touch. This concept, all concepts are over in this chapter. Let's be happy. Fine. One last thing. Now, in between, they are saying, one guy is coming in between and saying, add me also to the group. That is called as fixed overheads calendar variance. I will tell you what that is. Now, sir, if you add capacity variance and efficiency variance, it is exactly matching with volume variance, no? Correct? Suddenly, if you add someone, then it will not match, no? So, what this guy is saying, wait. I have a new concept called as possible fixed overheads. What is that? I'll tell you later. I have a new concept called as possible fixed overheads. What you do is, neatly, you just erase this. And what you do is, you say AH into SR minus possible fixed overheads. Now I'm telling, it will not match with the daddy, no? You say, wait, don't worry. I will immediately reverse it. How will you reverse it? Possible fixed overheads minus budgeted fixed overheads. Here itself it gets cancelled. Correct or not? This possible fixed overheads gets cancelled here itself. Yes or no? Guys, 1 second. This is quite, yes. This possible fixed overheads gets cancelled here itself, and again you get only budgeted fixed overheads. Correct or not? Are you guys understanding this? See, I have to resort to all these kind of stories because this is a highly conceptual area that's not relevant for intermediate. Had it been a final discussion, it would have gone like a proper discussion with concepts, but that is not the case. Yes, that is the reason. Clear with this? Fine. So, one thing addition, calendar variance. He is coming up with something called as possible fixed overheads, and I need to adjust. What will I do? So, in my capacity variance, I will say AH into SR minus possible fixed overheads, and immediately I will knock it off. Possible fixed overheads minus budgeted fixed overheads. So, because of this calendar variance, your efficiency variance will not be affected. Are you clear? It's an adjustment between these two siblings. Are you clear with this? Yes. What is possible fixed overheads? I'll tell you. That you don't worry. But are you clear with this alone? Yes. Shall we make peace with this part alone? I told you this AH you need to do, and this possible fixed overheads accommodation you need to do. But for that, the entire concepts I have explained. Clear? So one final time, tell me guys, what's your fixed overhead cost variance, please? Last time, and then we will go to the sum. So fixed overhead cost variance, absorbed minus actuals. Absorbed is what? Standard hours into standard rate. Fine. Now, branch it into two, you get your what? Fixed overheads expenditure variance. Formula, budget minus actuals. So your volume variance is the absorbed minus budget, balancing figure. Now, this your volume variance gets branched into three people, fine. Now, first one, fixed overheads, capacity variance. What you should remember, AH into SR minus possible fixed overheads, immediate knockoff. Your calendar variance will be possible fixed overheads minus budgeted fixed overheads. And finally, your efficiency variance will be your balancing figure. That is SH into SR, absorbed minus AH into SR. Clear with this? Clear with this? Now you are able to understand, guys. Are you able to understand? Only in this segment, I asked you to remember certain things. But for this, everything is conceptual. This is also conceptual, but this is not required at this level. Are you clear with this? Are you clear with this? Shall we hit the sum? Shall we hit the sum, guys? Shall we hit the sum? We will just finish the sum. Now, once you do this, once you finish this sum, it's going to be very easy, and we'll obviously take a break. You need not worry about that. I'll give you a break. Yes, we will take a break. Once we finish the sum, that's all. We are done with this. Okay, clear with this? Now, before that, you tell me, for me to finish this branch, how many ingredients do I need? Now, look at this and tell me, how many ingredients? Go in the same order. Go in the same order. SH, SR, actual fixed overheads, budgeted fixed overheads, actual hours, and then possible fixed overheads, possible budgeted fixed overheads. Are you clear with this? 6 ingredients. So whenever you see this kind of sum, what you need to do, list out those 6 ingredients, plug and play model. As simple as that. Clear with this, guys? Yes? Shall we just get into this? Shall we just get into this? Yes? Final sum. So, final sum. The last one. No matter how you start, finish it like Dhoni. Yeah? Sorry? You want to copy this down? Okay, fine. Just copy this down quickly. I've already given it in your material. It's okay, fine. Note it down. Not a problem. Make it fast. Just make it fast. 20 seconds. Make it fast. Okay, guys. So let's start. Okay, let's start. Fine. So this is the tree that we're talking about. Fine. This is something that I've already told you. Okay. And how to calculate possible fixed overheads, we will do it in the next sum. Okay. So let's hit question number 4. Yes, guys. So page number 27, take question number 4. A manufacturing company operating a standard costing system has the following data in respect of July 20 X1. July 20 X1. Actual number of working days 22. Now, 1 minute, guys. 1 minute. Now, anywhere did we say anything about number of working days and all in this area? No. So, if at all this question gives you the number of working days, it is for that calendar variance. It is for that calendar variance. We will see it. Okay. It's for that calendar variance. Okay. So, always remember, if they are not giving you the number of days, then your volume variance will only have capacity variance and efficiency variance. In between, this fellow will not come. If they are giving you the number of days and all in the question, then calendar variance will also come. Then only the concept of possible budgeted fixed overheads will come. Are you clear with this? So that was one difference. That's one difference. How to do that, I will tell you. You need not have to worry about it. Fine. Next, actual hours worked. It's given. Why is it required? Actual hours. I asked you to remember, no, actual hours. That's not efficiency. That's capacity variance. Oh, efficiency variance is balance figure. Capacity variance, left side. Okay, for efficiency also it's required, but you need to remember only for capacity, it's balancing figure, right? Then units produced they have given. Then actual fixed overheads incurred they have given. This is what actual fixed overheads. Now the following information is obtained from the company's budget and standard cost data. Budgeted number of working days per month is 20. Budgeted man hours per month is 8,000. Standard man hours per unit produced is 10 hours. Standard fixed overhead rate per hour. So this is the standard rate per hour directly given. The question is 0.5. Calculate fixed overhead cost variances. Tell me first, you need not tell me the answer. What are the ingredients required? What are the ingredients required? In the same order. Standard rate. And throughout this chapter, we are going to do it only in terms of hours. Only in terms of hours. Standard rate. Standard hours. Then actual fixed overheads. Budgeted fixed overheads. Possible budgeted fixed overheads. This alone I will explain when we come there. Possible budgeted fixed overheads. Fine. Now, standard rate. Standard rate, come on, tell me, what's the standard rate? One sec. Where have I given us? Okay, fine. Yeah, so standard rate, how much is it, guys? Standard rate, how much is it? Oh, sorry, I should have been generous. Okay, 0.5. How do you know? Given. Okay, fine, I missed it. Sorry. Fine. Standard hours. Standard hours. How much is the standard hours? 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 8,500. 8,500. Okay, any other answer? Am I not getting this? Any other answer? Any other answer? Come on, guys, come on. You can't take this much amount of time. Who all says 8,500? Raise your hands. So it means the others are still doubtful. Okay, fine, down. I wanted to know how many are doubtful. If I ask, they will not raise. So that's why I asked you guys. Okay, fine. So tell me, why others? What happened? What do you mean by standard hours? What do you mean by standard hours? The hours that you can take for the actual production. How many units you have produced? How many units you have actually produced, guys? 850 units. And every unit you are allowed how many hours? What is the big deal in this? It's 8,500. No, 8,500 hours. How did you get this? 850 units. Each is allowed 10 hours. Correct or not? What? Correct or not? Yes, you're understanding this. Next, actual fixed overheads. I will show my generosity. 3,600. No? Yes, 3,600 given. Next, budgeted fixed overheads. Also, I think I can. Is it given? Oh, it's not given. Okay, fine. What's your budgeted fixed overheads? What's your budgeted fixed overheads? Budgeted fixed overheads. Who all got the answer? No. Come on. 4,000. Okay. Any other answer? Why? What's the problem? What's the problem here? Now, wait. You tell me, guys. You tell me. This is what they have given you, the standard fixed overhead rate, meaning what? Budgeted rate. Correct or not? Budgeted rate is equal to budgeted fixed overheads divided by budgeted hours. Correct or not? Correct or not? Budgeted rate is how much? 0.5 is equal to budgeted fixed overheads that I meant to find out. Budgeted hours is how much? Now cross multiply. Budgeted fixed overheads is 8,000 into 0.5. What's the big deal? They will not spoon feed everything. It's a CA exam. A 10-mark question, will they simply give it like this? What's the problem, guys? It's direct, no? You need to think little, that's all. Okay, fine. If you have got it wrong, no worries. But take a red ink and write. Whenever you're doing it, take a red ink and write. So it's going to be what? There's going to be 4,000 rupees. How you got this? 8,000 into 0.5. 8,000 into 0.5. Yes? Are you guys clear with this? Don't think that, I didn't get it. It's okay. But yes, now if you are learning it, it's good. Are you clear with this? Very good. So this was the logic you did? Yes, very good. And Rohini, you also did the same thing. And I think one more person answered. I think Madhu or Praveen. No? Yes, Praveen answered. Yes. Okay. Very good. Those who answered, very good. Others, please know that this is how it has to be done. Next, actual hours, guys. Actual hours, generosity only. 8,600. Yes, given. And then now let's come to possible budgeted fixed overheads. What is this possible budgeted fixed overheads? Now, you tell me guys, now I had planned to incur 4,000 rupees of budgeted overheads, correct? This is my budget overheads, correct? For a period of 20 days, correct or not? Now you tell me logically, fixed overheads does not move with my output. True or false? True. But can I say fixed overhead moves with my period? For example, if I am using this place only for 1 month, I need to pay 1 month rent. If I am using this place for 2 months, I need to pay 2 months rent. In this case, I had originally planned this 4,000 rupees for a period of 20 days only, no? But actually I'm using it for 22 days, correct or not? So I'm revising the overheads. I'm revising the budget overheads. I'm calling it as possible budgeted overheads. Now tell me how much it will be. Can I say this is nothing but 4,000 is for 20 days. How much will it be for 22 days? Are you clear with this? It's called as calendar variance. For the 2 days extra, how much you could have incurred, that cushion gets captured in this. So that's why, what is the calendar variance formula? Possible budgeted fixed overheads minus budgeted fixed overheads. So you are comparing these two. For the 2 days extra, how much is the thing that is allowed is what we are trying to track. Are you clear with this? Are you clear with this? So how much is this? This is how much, guys? 4,400, right? Are you clear with this? And this is exactly what I've given here. Possible fixed overheads is equal to budgeted fixed overheads into actual days divided by budgeted days. Are you clear with this? I've given the formula there only. Are you clear with this? Are you clear with this? So let me do the sum here only. Then, have you guys noted this down? This is what solution? This is the solution. Have you guys noted this down? Please note it down quickly. You guys have noted this down, right? You guys have noted this down. Shall we move to the next one? So what are we going to do now? Plug and play. Shall we do it? Let's finish it off quickly. 5 minutes and then break time. Yes, and then break time. Yes. Biggest motivation in life. Break time. Okay, fine. Right. So now first, fixed overhead cost variance formula. Absorbed overheads. Formula is standard hours into standard rate minus actual fixed overheads. Correct? 1 second. So this is the ingredients. Now look at this. This is 0.5 into 8,500 minus what? Minus actual fixed overheads is how much? 3,600. How much is this? Let's put the figure. 8,500 into 0.5. How much is that? 4,250. Yeah. So 4,250 I have absorbed, and 3,600 is what I have actually incurred. Correct or not? Correct or not? Now when I'm absorbing more, what am I going to do? I will be recovering it more from my customers. Correct or not? It's a favorable thing for me. How much is it? How much is it? How much is it? 650. Yeah. 650 is what? 650 is favorable. Correct. 650 is favorable. Correct or not? 650 is favorable. In this case, under absorption, over absorption. Under or over? Over absorption. When you are over absorbing, it means what? Currently you had accounted more cost. Now you are going to go and reduce the cost. Correct? And when you go reduce the cost, your profit will increase, and that's why it's a favorable balance. Are you clear with this? Under absorption, over absorption. This is over absorption. Over absorption means what? You have already accounted for more cost. Yes, now you are going to go reduce the cost. When you reduce the cost, profit will increase, and when your profit increases, it's a favorable variance. Are you understanding the logic here? Are you understanding the logic here? Now, let's get into the two other limbs of this. What and what? Hello? Fixed overhead, expenditure variance, and fixed overhead volume variance. Formula. Budgeted fixed overheads minus actual fixed overheads. Budgeted fixed overheads. Figure 4,000. Actual fixed overheads. Figure 3,600. You were allowed to spend 4,000. You have spent only 3,600. Favorable, adverse. 400 favorable. 400 favorable. On the other side, this is nothing but your, what is this? Absorbed, that is SH into SR minus budgeted fixed overheads. So how much is this? So you can just write the figure here. 4250 minus what? Minus what? So I am picking this 4250 from here. Directly I am writing it. Minus 4,000. So how much is this? 250 favorable. Are you clear with this? 250 favorable. Let's take it as positive favorable. That's all. Since I didn't tell you the concept, here you take it as positive favorable. Clear with this? Clear with this? Now, this can be further classified into what and what? Fixed overheads capacity variance, then fixed overheads calendar variance, then fixed overheads efficiency variance. fixed overheads efficiency variance. Capacity variance formula, what you should remember? AH into SR minus possible budgeted fixed overheads. Possible budgeted fixed overheads. AH into SR. AH is how much? 8,600 into SR is how much? 0.5 0.5 into minus possible fixed overheads. How much is that? Guys, answer no. Everyone answer no. 4,400. Pick it from the top. Pick it from the top. We have already done it. We have already done this. Yes, you know AH 8,600. You know possible budget fixed overheads 4,400. Just pick it up here. So tell me 8,600 into 0.5. How much is this? 4,300 minus 4,400. This is going to be what? 100 adverse. Correct or not? 100 adverse. Now calendar variance formula. Possible budgeted fixed overheads minus budgeted fixed overheads. Figures you already have. Tell me how much? So this is 4,400 minus 4,000. So this is what? 400 rupees adverse, favorable. Right. And finally, this is what? This is your fixed overhead efficiency variance. SH into SR, that is absorbed overheads minus AH into SR. How much is this? 4,250 minus, you can pick this figure directly, 4,300. How much is that? 50. Adverse, favorable. What is this? Adverse. Are you clear? Now if you add these three, 100 adverse, 400 favorable, 50 adverse, do you get 250 favorable? Yes. And that concludes our discussion on standard costing. Are you clear with this? Tell me guys, is it difficult? Is this chapter difficult? Absolutely not. It's all the hype that people have given. If you know it conceptually, you can definitely get it. I'm not saying that immediately you will get it. Go home, revise. Automatically you will get it. Go home and revise. That effort definitely you need to take. That goes without saying. I can't say that if you sit in the classroom, directly go to the exam. No. Without revision and practice, this subject will not come. That is the subject. Had it been any other theoretical subject or even accounts to some extent, I can tell you, because you've been seeing that accounts till your 11th standard. But costing is something that you're seeing for the first time in your life at this stage only, unless and until you have done your BCom and all that. So yes, it will be like this, but I'm telling you, you need to practice. Okay, clear with this guys? So just one final time and we are done. Trust me, we are done. I will give you, see, look. I still have 3 minutes, 15 minutes break, I still have 3 minutes. Look, the time is what? 5:12, 6:12. So the time is 6:12. Fine, 3 minutes I will take. After that, 15 minutes break we will take and then we will come back. Okay, fine. Finally, you tell me. I'll ask randomly, rapid fire questions. You should tell me. Material usage variance formula. Standard quantity minus actual quantity into standard rate. Yes, correct. Who is responsible? Production manager. So within the bracket, standard quantity minus actual quantity, vella on the outside and the into standard rate, because I'm not dependent on the other guy. Fine, very good. Material yield variance. Standard quantity minus revised actual quantity into standard. It's not standard rate. Sorry. It's standard price. Very good. Fine. Then your labor efficiency variance. Standard hours minus actual hours worked into standard rate. Correct? Fine. Very good. Then your fixed overheads expenditure variance. Budget minus actuals. Excellent. Fixed overheads capacity variance. AH into SR minus possible budgeted fixed overheads. Great guys. Excellent. Very good. So fine. We will break now. No, one more I'll ask. Okay, I was kidding. Fine. So yeah, we'll take a break now. So be here sharp at 6:30. We'll start with a new chapter. Called as service costing. Now guys, 10 marks chapter 1 cost sheet. Your overheads plus ABC 15 marks. And this chapter, standard costing, 10 marks, 35 marks already done. 35 marks already done. We are almost nearing the defense part. Service costing also, if we finish 10 marks, it will get over 45 marks there in your pocket. Are you clear with this? Have the confidence. All you need is practice. I'm giving you the direction. Go home, practice. Fine, guys. Let's take a break. Fine. Thank you so much. See you all at sharp 6:30. Okay, guys. So let's get started. With chapter number 11, budgetary control. Now, the past trend indicates that this chapter, which earlier was tested more for theory, is now getting tested also in the practical segment of it. Earlier, if you see, in the initial till now 9 attempts have been completed ever since the new syllabus got introduced. Out of that, in the first 6 attempts, definitely you can find one theory question from this chapter in question number 6. Always, be it zero-based budgeting, whatever it is, always there will be one theory question from this chapter. Then slightly after that, in the last 3 attempts, they have been testing this in the practical side also. Then and there it comes and goes. So this 10 mark or 5 mark or whatever it is, generally 10 mark comes in. So this chapter can actually be tested either in this practical area for 10 marks or maybe 5 marks, or definitely under theory area. But definitely this chapter is being tested whatsoever. Since we have only just about 15 chapters and they have 100 marks, 100 marks means they have so many questions that can be asked. So Institute is happily making use of all this. So certain chapters indicate a trend. Certain chapters you need to definitely, you need to make out that, fine, looking at the past few attempts trend itself, it clearly indicates that from the Institute's viewpoint, this chapter is they are slowly drifting from theory portion to this chapter, which was earlier tested in theory portion, is now slowly being tested under the practical area. So again, the surprise element could be there. It's not regularly coming, but doesn't mean that you can skip it. Fine. Just today, 2 hours session. Let us just try to finish this chapter. Nothing big is there. Just whatever I'm telling you right now, you just make use of that, whatever knowledge that I'm giving you right now. Go home, practice sums just like usual, and you're done with this chapter. Okay? It's all conceptual. The best part of this chapter is, in some way or the other, we have already finished this chapter. Broadly, this chapter has 2 segments, I will tell you. One is called as functional budget, flexible budget. The other one, functional budget, is similar to cost sheet chapter. Flexible budget is similar to your marginal costing chapter. Basically, we've already done it. Then why are we seeing it here? I will give you a direction and we'll see it in a structured format, and there are certain sums that we'll be doing only here. Are you clear with this? So basically, this is something that we've already covered. So it's going to be a light session. It's not going to be very, very serious concepts and all. Something that we've already done. We're just going to brush it up and give some direction to it. So let's try to finish it up today. So that's the agenda for today's session. Now, in this chapter, I told you, broadly, this chapter can be classified into 2 areas. One is called as functional budget. The other area is called as flexible budget. Apart from that, you also have one more independent concept called as budget ratios. We'll first see that budget ratios and close off. That budget ratios, some 6 ratios they would have given. You just need to know what these ratios are, and there is only one sum in the study material that I've given you here. We will see the logic for that and we will just get going. Are you clear with this? So this is going to be the agenda. So functional budget, flexible budget, and one independent concept called as budget ratios. Some people, I think budget ratios, what they do is they treat it as a part of standard costing chapter. But ideally in your study material, it is given only under budgeting chapter. So we will also do it only here. That's why I didn't do it under standard costing. Clear? Yes, guys, clear with this? If at all this budget ratio comes, that is only one sum in the study material. That sum we will do it in the classroom. 6 formulas you just need to remember. I will give you the logic as usual. You just remember those 6 formulas. We will do an illustration and close it off. That's all. The budget ratio part will be done. After that, I will just get into the actual part of the particular chapter called as functional budget and flexible budget. That's where we actually get started with it. Okay? Clear with this, guys? Clear with this. Now, what do you mean by a budget? In layman words, what do you mean by a budget? A budget is nothing but you can say a target. You can call it a plan of action. You guys generally budget, no? You have your budget, correct? Every day you have your budget, like for the amount that you spend, you have your budget. For the time that you spend, you have your budget. Beyond this, I don't have time to spend. Yes, yes. So budget in normal parlance, it only means that it's a plan of action or it's some target that you are having. As simple as that. Now, I told you there are 3 objectives of this particular subject. What are the 3 objectives? Stock valuation, profit computation, decision making and control. Now, this chapter helps you achieve 2 objectives: decision making and control. Decision making and control. I will tell you how. Now, you know that in any organization, what they do is first they set some targets. And based on this target, only the actual performance get compared. Correct or not? We saw it in standard costing, no? Now, standard costing, you guys computed standard hours, standard rate. Where did you get that from? From the budgeted data, no? Correct or not? So, unless and until you prepare a budget, you can't set your targets and compare it with your actual performance. This way, you are achieving the objective of control. Are you clear with this? But then, how will you arrive at the standards? Or how will you arrive at the budget? Let's say, for example, the company says in the current period, they are telling the sales department, you should sell 50,000 units. Let's say at the rate of 50,000 units should be sold at the rate of 100. Okay. Now, what happens if you see, even in our budget, no, in our country's budget, your budget of finance act and all comes, there people sit in the Lok Sabha and they discuss, no? Yes, that's how even it happens in top level companies and all. There will be multiple set of people who will propose their own budget. Ultimately, they will decide and they will go for the one that is best. Now, what happens? I am sitting in a board meeting. One set of people say, sir, in the next year, what we should do is, we should sell 50,000 units by fixing the selling price at 100 rupees. Correct? Now, what happens? Another set of people come and say, no, sir, let's not do this. What we will do is, let's make use of the law of demand and supply in economics. Let us slightly reduce the price to 95 rupees so that we will achieve more volume. Let's say 55,000 units. Correct? So, one set of people say, sir, fix 50,000 units at the rate of 100. Another set of people say, fix 55,000 units at the rate of 95. Now, when I am fixing my budget, I will have multiple alternatives. Between those alternatives, I need to choose the best alternative. No, out of these two, which one will I choose? It depends. Whichever alternative gives me the maximum profit, I will go for that. Correct? So this way, but for fixing a budget, I need to choose between multiple alternatives. This way, it helps me achieve the objective of decision making. Are you clear with this? So choosing between multiple alternatives is how I help achieve the objective of decision making. Having said that as my target, when I'm comparing it with my actual, it helps in my control. So broadly, this chapter has 2 objectives. Are you all clear with this? So this is that's why I told you, every chapter when you learn the objective why we are studying it, so that you will have a crystal clear clarity on that. Clear with this, guys? Are you all clear with this? Perfect. Done. So this is about the introduction of this particular chapter. Now, what I will do is, first we will go to budget ratios. It's an independent topic. It need not be attached to any particular chapter. But anyway, since the study material they have given it under this chapter, what we will do is, we will study it first. And then I will tell you, I will go to the next 2 segments. That is your flexible functional budget and all. I will tell you what it is. I will give you a background. We will do some and close it there. That's all. Clear with this? So let's go to the next part of this particular, the first part of this particular chapter called as your ratios, budget ratios, also called as your performance ratios. Now, guys, I want you to remember these 6 formulas. Please don't think that it's not important. I myself have seen in one attempt they tested this. They tested in question number 1, mandatory question, they tested this. You can't, that's why I'm telling you, question number 1 is always unpredictable. To reasonable extent, you can predict that material and your marginal costing and process and joint and buy. These chapters generally come. still you are left with 1 or 2 more questions in the question number 1 area. So there you can have subdivision. Any 1 or 2 questions can come from any area, any concept from the entire syllabus. So basically, once I saw this question was asked. This question means this question that we are going to see right now. It was asked for 5 marks in question number 1. What will you do? If you omit? So classroom itself will finish this area. It doesn't even require a practice. This is that kind of a particular area. Classroom itself will finish it, so that at least you are equipped with this. Okay, clear? Now, first formula you guys already know. First formula you guys already know. Efficiency ratio. What is the formula? Standard by actuals. I told you, I am allowing him 100 hours, but actually he has taken only 80 hours, which means his efficiency is 125. That is, he is over efficient. Should be beyond 100% or beyond 1 if you want to put it in decimal. Correct? This formula you guys know, standard by actuals. Yes. Activity ratio, also called as volume ratio. What is this? Now, simple. Let's say I budgeted so many hours. Okay, first of all, what do you mean by standard hours? The time allowed for the actual production. Correct? What do you mean by budgeted hours? The time allowed for the budgeted production. Correct or not? Basically, what they are trying to find out is the time allowed for actual production divided by the time allowed for budgeted production. Basically, what they are trying to find out of total what you have budgeted, what is the actual, that is, what is the standard for actual that you are actually, the activity at which you are actually operating. What they are trying to find out is, let's say I budgeted for 1000 hours, and let us say that the standard hours is only 800, which means what? The activity that I am planning itself is only 80% of the capacity. I am planning to operate only at 80% capacity. Are you clear with this? This is called as activity ratio. Standard hours by budgeted hours. Clear? Logical. I am trying to find out what is the activity at which I am trying to actually work. Are you clear? Yes. Next, calendar ratio. Does it ring any bell? Yes. Where did we see this? Calendar variance, fixed overhead cost variance. Under that, volume variance, you had 3 subdivisions: capacity, calendar, and efficiency. Under that, I told you possible budget fixed overheads minus budget, wherein we saw 21 days, 20 days and all. You remember? Basically, but this is nothing but available working days divided by budgeted working days. In that example, if I'm not wrong, there we budgeted how much? We budgeted 20 days, but only 19 days for us, something like that. Something 21 and 20, 22, 20. So whatever it is. So available working days divided by budgeted working days. Are you clear with this? Days in the sense hours. Every day has same number of hours. So yes, you can do it in terms of number of hours. Available working hours divided by your budgeted working hours. This is similar to your calendar variance that we have seen before. Guys, are you clear with this? Yes. Next, standard capacity usage ratio. Now, what is this they are saying? Let's say I have a factory and I can utilize a total of 1000 hours. But practically, I know I can't utilize the entire 1000 hours. Correct? So based on this, I budget only to use 900 hours. This is what they mean. Budgeted hours divided by maximum possible budgeted hours. Out of your maximum capacity, how much is you are budgeting? How much is it that you are budgeting? That is only called as standard capacity usage ratio. Out of the maximum possible, how much is it that you are budgeting? Then what do you mean by actual capacity usage ratio? Out of the maximum budgeted hours, how much is it that you are actually using? So actual hours divided by maximum budgeted hours. Are you clear with this? And actual usage of budgeted capacity ratio, the word itself tells you what to do. Actual working hours divided by budgeted hours. So these are some 6 formulas, independent formulas that they have asked. Logically, if you think you can get it. So efficiency ratio is standard hours divided by actual hours. Your activity or volume ratio is standard divided by budgeted hours. Your calendar ratio is actual working hours divided by budgeted working hours. Your standard capacity usage ratio is budgeted hours divided by maximum possible hours. Actual capacity usage ratio is actual working hours divided by maximum possible hours. And your actual usage of budgeted capacity. This is the most easiest. This itself tells you what to do. This itself tells you what to do. Actual usage of budget capacity ratio is nothing but actual working hours divided by your budget hours. So these 6 formulas alone can you just remember. The whatever logic that I've given you, with that you just try to remember. It's a standalone area. Application and all will not be there. Okay, don't worry about this. Fine, shall we just do one illustration and close it off? Shall we just do one illustration? It was a 5-mark question in past exam. So let's just make a use of it. Let's just make use of it. Now, what have they asked in this question? They have asked you, they have told you, following is the data available for DKG and company. Standard working hours, 8 hours per day of 5 days per week. Maximum capacity, 50 employees. Actual working, 40 employees. Actual hours expected to be worked for a period of 4 weeks, 6,400. Standard hours expected to be earned per 4 week, 8,000. Actual hours worked is 6,000 and actual hours earned in the 4-week period is going to be 7,000. The related period is of 4 weeks, meaning 1 month. In this period, there was one special day holiday due to national event. Okay, so this will have an impact on your calendar ratio, correct? Then calculate all the usage, all the ratios they have given, efficiency, activity, calendar, standard, and all these things. Okay, now first you tell me, guys. Now I want you guys to look at the particular question. Don't look at the answer. Look at the question. Just answer to whatever I say. First, can anyone tell me what is the maximum hours available in this question? Can anyone tell me what is the maximum hours available in the question? Do the calculation. 50. So, very good. So, can I say maximum hours? Maybe you can also write it down. You can also write it down. Please write down. The book itself, write down. Maximum hours is nothing but 50 employees into 8 hours a day into 5 days a week. Like that, I have 4 weeks a month. Correct or not? Correct or not? 50 employees is the maximum possible employees into 8 hours a day into 5 days a week into 4 weeks a month. So how much is this? 8,000 hours. Guys, correct or not? Hello? Hello? Yes? Are you clear with this? Next. What's your budgeted hours? What's your budgeted hours? Now, how many employees I'm budgeting? I know that only 40 employees can work. Correct or not? So 40 employees into 8 hours a day into 5 days a week into 4 weeks a month. So how much is this? 6,400 hours is the budget hours. Correct or not? Guys, are you all understanding this? Are you all understanding this? Next. What is the actual hours? I think it's given in the question. 6,000 hours. It's 6,000 hours given in the question. Correct or not? Given in the question. Correct, guys? Yes. 6,000 hours is given in the question. Next. What is the standard hours? I think that is also given in the question. 7,000 hours. 7,000 hours. I think that is also given in the question. Next, what is the budgeted days? What is the budgeted days in a month? What is the budgeted days? 28. Huh? 4 weeks. In a week, 5 days are there. So it is 20 days. Correct? But what is the actual days? It's going to be 19 days. How you got this 90 days? 20 minus 1. Correct? Now you have all the data with you. Just exactly do like this in the exam. First you gather all the data required for the sum. Just a matter of substituting the formula. First ratio. Standard hours by actual hours. How much by how much? Standard hours 7,000. Actual hours 6,000. So 7,000 by 6,000, 116.67. Are you clear? If you have the data with you, it's going to be a cakewalk. Very, very simple. Next, activity ratio. Standard hours by budgeted hours. 7,000 divided by budgeted is 6,400. 7,000 by 6,400. 109.373%. Are you clear? Next, calendar ratio. Actual working days by budgeted working days. So it's 19 by 20. You get this. Are you clear? Next, standard capacity usage ratio. Budgeted hours by maximum hours. Budgeted hours is 6,400. Maximum hours is 8,000. So 6,400 by 8,000 gives you 80%. It's simple, guys. That's why I told you there is no much of application. You just need to get the figures and plug it. That's all. Next, your actual capacity usage ratio is going to be actual hours divided by maximum. Actual hours is 6,000. Maximum is 8,000. So 6,000 by 8,000 gives you 75%. Next, actual capacity usage ratio. It's nothing but actual hours by budgeted hours. So it's 6,000 divided by 6,400, right? It's going to be 93.75%. Are you clear with this? There is nothing great in this area. If at all they ask, they will only ask these 6 formulas, and you need to compute only these particular, the data required, input required for the sum. You just have to do it this way and close it off. Nothing great and all, nothing great and all. But I am doing this here in the classroom just to tell you that It has been tested once in the exam, so please don't miss out on that. Are you clear with this? So with this budget ratio and all is done. I think in the standard costing, whatever sums I gave you, in one sum it came, no? Yes, in one sum it came, no? Yes. So that is only this sum that we did in budgeting, that we are doing here in budgeting area. So maybe you can just go home and do it. No, you need not do it also. It's the same sum only. But if you want to try it on your own once, and basically you just need to know the formula, and you need to get all this input data. Once you do that, the entire sum is over. That's all. It's not like standard costing where you need every single thing and application and all. Okay, done. Okay, guys, shall we proceed? Shall we proceed to the other segment? Shall we proceed, guys? Yes, shall we proceed? Okay, fine. Now let's get started with the next part of this particular chapter, which is called as flexible budget. We'll do flexible budget first, and then we'll go to functional budget. Okay, so let's do flexible budget. Please take the heading flexible budget. Flexible budget. Flexible budget. Now, guys, what is this flexible budget area? Let me take an example. Let's say, for example, the following data is given to you. The following data is given. Let's say 80,000 units. For 80,000 units of volume level, they are giving you the following data. Direct material cost, everything is given on a per unit, 8 rupees. Direct wages, 4 rupees. Variable production overheads, let's say it's 6 rupees. Fixed production overheads is, let's say, 2 rupees. Fixed production overheads, let's say, is 2 rupees. Then variable selling overheads, it's going to be 2 rupees. Fixed admin overheads, it's going to be, let's say, 5 rupees. And your let's say fixed selling overheads is going to be 3 rupees. Example, this is just an example, random example I'm just taking. Okay, now what they are asking you, they have given you the cost data for one particular volume level. They are asking you to find out what will be the cost, total cost and the cost per unit if I am operating at 90,000 units volume level. Can you find out? No, just don't start doing the answer, but wait, I'm just telling you about the concept. We have a sum, don't worry about it. Now what has been given is the cost data of one particular volume level. Using the cost data of one particular volume level, you should arrive at the cost data for any other volume level. The cost data that is given for one single volume level is called as a static budget. Meaning what? For a given volume level, what is the budget? Static means it will not change. Based on the data given in the static budget, you need to prepare the budgeted cost for another volume level. That is called as flexible budget. Are you clear with this? So based on the inputs that you gather from a static budget, you need to prepare a budget for another volume level, which is called as flexible budget. Are you clear with this? Now, in this sum, you tell me what you will do. Now, they have given direct wages 8 rupees per unit. First step, what will you do? When there is a flexible budget question, what you should strike your mind? 3 things. Number 1, variable cost should always remain constant per unit. Fixed cost should always remain constant in total. In case it is neither remaining constant in a per unit level nor on a total level, segregate the semi-variable cost into fixed and variable portion. Clear? Now, direct material is variable or fixed? Variable. So what I will do, here I will say, okay, it's going to be variable here. Then direct wages 4 rupees. Variable production overhead 6 rupees. Fixed production overhead, it doesn't make sense if I put this 2 here. So what will I do? This 2 immediately I will multiply with 80,000. How much is it? Well, so I will present it here as 1,60,000 rupees. I am not preparing the budget. I am just giving the inputs for this particular data. Are you clear? So these are all, whatever is my variable cost, I will put it on a per unit level. Whatever is a fixed cost, I will put it in total, so that with this I can easily prepare a budget for 90,000 units of volume. Are you clear with this? Are you clear with this, guys? Yes. Next, variable selling overheads, I will retain it in per unit. Fixed admin overheads, 5 into 80,000. How much is that? 4 lakh rupees, correct? So I will put this 4 lakh rupees here. Then you have another fixed selling overheads, 3 into 80,000. How much is that? 2,40,000. Now what I will do with this data, I can prepare the budget for any volume level. Forget 90,000, any volume level. I know that if it is going to be for 90,000, so all the units that are mentioned on a per unit level, all the components mentioned on a per unit level, I will multiply with the respective volume. All the data that is available on total, I will keep it as such. So with this, I can prepare the total cost for any volume data, correct? So this is called as flexible budget. Are you clear? So how did you get all these figures? From the static budget. Using these input, you are going to prepare budget for any different volume levels. It's called as flexing the budget or flexible budget. Are you clear with this? Are you clear with this? Guys, are you all understanding? Nothing more. We have already done all these things. Segregation of semi-variable costs. How will you do? Change in delta cost divided by delta units gives you the variable cost per unit. Once you find the variable cost unit, total cost minus variable cost gives you your fixed cost. We did this where? First to now? No. Overheads, I told you. Overheads, first segment. Turn back the page and see. First segment, we started overheads chapter only with this semi-variable cost. Do you remember? It is chapter number 2 that we did here in our classroom. Correct? Yes, first thing that we did here was segregation of semi-variable cost. You remember, it will start on left side bottom, right side full page it would have been given. Correct or not? You remember that? Yes, we did it fully. I told you it's actually a part of flexible budget, but still we are doing it here. I told you. I told that also. Yes. Guys, are you clear with this? Fine. So basically, flexible budget is all nothing. Basically, from a static budget, find out, arrive at the variable cost on a per unit level, arrive at the fixed cost in total. With this data, you can prepare the budget for any volume level. Are you clear with this? Are you all clear with this, guys? Is everyone understanding? Yes? Is everyone understanding this? Guys? Yes, guys? Yes? Fine. So shall we just go to the problem and do this? Shall we just go to the problem? That's all. Nothing more. So if you want to give, you can just keep on practicing. That's all. We will do one sum and we are done with this particular segment. That's all. Clear? Shall we go, guys? Shall we go and do it? So just take question number 1. It's on page number 78. This question is a past RTP question. It's RTP May 19 question. It's RTP May 19 question. So let's just have a look at this particular question. S Limited has prepared a budget for the coming year for its two products A and B. So product A, product B, they have given the data. Production and sales, 6,000 units, 9,000 units. So I'm not reading out these figures or not. So it's not relevant anyways. We will be reading it when we are doing the sum. They have given the production and sales in units. Raw material cost per unit, direct labor cost per unit, variable overhead cost per unit, fixed overhead cost per unit, selling price per unit. These are the data that are available product wise. Clear? After some marketing efforts, the sales quantity of product A and B can be increased by 1,500 units and 500 units respectively. What they are saying, if they do some marketing, they can increase their output by 1,500 and 500 of A and B respectively. But this doesn't come free of cost. But for this purpose, the variable overhead and the fixed overhead will be increased by 10% and 5% respectively for both the products. You are required to prepare a flexible budget for both the products. Why is it flexible budget? Because now the output changes now for you. Correct? The output now changes. As instead of 6,000, you will prepare it for 7,500. Instead of 9,000, you will prepare it for 9,500. Correct or not? Fine. So A and B respectively is going to be 7,500 and 9,500. For this volume level, you need to find out the cost after the price revision. Are you clear? So from the flexible budget, you will take the original data, plus there is some cost revision happening that should also be considered while preparing it. Fine. So what they are asking you is, you are required to prepare a flexible budget for both the products before marketing efforts, after marketing efforts. Sir, before marketing methods, before marketing efforts, they themselves have given in the question. No, they have not given it. They have only given everything in per unit. Fine. So you need to put it in total and also that's what something that we need to do. Fine. Just take 20 seconds time. Quickly go through this question. Go through this question once and let's solve it quickly. Together we will solve. Okay, shall we start? Shall we start? Shall we start? Now always remember, when you are doing these sums in a flexible budget, always remember maintain 2 columns for every product, per unit and total. Why, sir? Because from the static budget, whatever is the variable cost, go and immediately fill it on the per unit column. Whatever is the fixed cost, go and directly fill it on the total column, so that you can directly multiply with the quantity or divide with the quantity to arrive at the total or per unit respectively. Clear? Are you clear with this? Always follow this. It will be very simple. So let's quickly just finish this. I think this came for 10 marks, I guess. I don't know. I think so. I mean, if it comes for 10 marks generally, or 5 marks is too less for this. 10 marks is 2 more for this. Maybe 6 plus 4, something like that they can have. Yes. I have seen 6 plus 4 and all. Yes, they will come. Or maybe what they will do is, they will merge this along with marginal costing. They will test this for 5 marks. Marginal costing, one small sum they will put inside this break even and all they will ask. So 6 plus 4, 7 plus 3, they can do anyway. So you don't worry about it. If they want to test, they will test it. Don't worry about it. Okay, fine. Let's start. This is what question number 1 on page number 78. Guys, this is one vanilla sum. We should do it together quickly. Let's do it quickly. Page 78. So write down. First part, write down part 1. Part 1. What is part 1? Flexible budget before marketing efforts. Before marketing efforts. Flexible budget before marketing efforts. So what you need to do right now is prepare particulars and 4 columns. That is product A inside that per unit total, product B inside that per unit total. Make it fast. So let me try my luck today with the scale. See how beautifully it has come. Okay, fine. Do it guys. I know I wasted a lot of time. Instead, my scribbling itself will be good only. Anyways. Okay, write down particulars. Particulars. Then you have you have 2 product A and product B. Under that, per unit total or amount, per unit and amount. Actually, this per unit is also in amount only. Per unit and total. Okay, per unit and total. Let's start. First. Okay, first sales. Okay, by the way, let's put units on the top. Product A, how many units? This is before marketing efforts. 6,000 units. How many units of product B? 9,000 units. Okay, right, perfect. Now tell me sales, how much is it? Per unit. So what I will do is, first we will just fill the figures alone. Whatever is the relevant figures that we will fill. Okay, for B it is going to be 78, correct? Don't fill the total column. I'll tell you, don't fill the total column. 78, okay? Then you can just put a dash here. Fine. Put a dash here. Then we are going to cost. First cost, raw material cost. Is it variable or fixed? Variable. So fill only the per unit column. How much? 60, 42. Guys, do it the same way in exam. Habits die hard. So do it in the same way. You will follow the same thing in exam also. Next, raw material cost. After that, direct labor. Variable, fixed? Variable. So fill the per unit column. Remains constant per unit. 18. Then variable overheads. How much is that? 12 and 6. Then fixed overhead. Is it what? What is it? Fixed. So basically Convert it into total figure and plug the total column. How much? How much? 48,000. How you got 48,000? 8 into 6,000. Similarly, here it's going to be 36,000. How you got that? 4 into 9,000. Correct? Guys, correct or not? Yes. Always remember, when you are filling it, when you are preparing a flexible budget, variable cost components fill only the per unit column. Fixed cost components fill the total column and keep it. After that, you can do whatever you want. Clear? Because we are going by the cost behavior. We are going by the cost behavior. That is the right way of doing it. Fine. This sum is easy. Maybe if you're getting a more complicated sum, you should know that this is how you should do it. Next, total cost. Okay, fine. You can have a total cost. Total cost. This can't be totaled right now unless and until we get it. Fine. Then finally write down profit. Profit. This also you can't get it right now unless and until you finish the sales figure and your profit. Now, shall we just go up and fill the figures, guys? Yes. So now tell me, 120 to 6,000 sales value, how much? Yes, this is going to be 7,20,000. So horizontal or vertical? Vertical. So you put 6,000 into and finish it off. Okay, 60 is equal to how much? 3,60,000. Yeah. Yes. Then 30 is equal to how much? 1,80,000. Then 12 is equal to how much? 72,000. Okay, fine. Then 48,000 divided by 6,000. How much is that? 8. Okay, 8. So tell me, what is the total cost? 1 second. 13, is it? Okay. So tell me, how much is it? 6,60,000. Per unit is 110, Per unit is 110. Yes. So what's your profit? 10 rupees per unit, and this is going to be 60,000. Correct? Guys, nothing great. No rocket science here. Clear? Okay, done. Move to the next one. Next. Yeah, fill this column. Fill this column. Come on. 9,000 into 78. 9,000 into 78 is equal to how much? It's going to be 702,000. Okay. Then 42 is equal to 378,000. Then 1,62,000. Then 54,000. What's the total? 6,30,000. Correct. And then what's going to be your profit? 72,000. Done. Are you all clear with this? And of course, we'll also fill the per unit. So fix it over per unit. How much is it? 4. What's the total cost? 70. 70. Okay. And it's going to be 8. Fine. Clear with this, guys? Nothing great here. The same thing, same sum. We've just finished it on a per unit and total column basis. Are you clear? Shall we move to the next one? Shall we move to the next one, guys? Yes. Shall we move to the next one? So let's go to the next one. Now this is very difficult. Let me do what? I have an idea now. You guys start filling the template. Please start filling the template, guys. Please start filling the template. Please start filling the template. Make it fast. That's about it. Okay, so let's go to part 2. Yes, now it is neat, no? Credits to Microsoft. Okay, right. So go to part 2. So what's your part 2, guys? Yes, so flexible budget after marketing efforts, right? So write down flexible budget after marketing efforts. Flexible budget after marketing efforts. Flexible budget after marketing efforts. Now first write down. Guys, come on, let's do it together. I'm using a blue ink. You take only a black ink. Okay, I'm using it here because the grids are in black, so that's why. First, sales. Tell me, guys, sales per unit, does it change? Okay, on the top first, how many number of units now? 7,500 units of product A. How about B? 9,500 units of product B. Correct? Now, what's the per unit selling price? Hello? That does not change. 120. And here, how much is it? 78. Are you clear? Next. So, you can just put a double line here. Double line here. Just to show that after the sale, we are going to go for cost. First cost is what? Raw material cost. Is there any change in raw material cost? No. Is it a variable or a fixed cost? Variable. So, fill the per unit column. 60 and 42. Correct? Next. Next. Yes. Next is going to be direct labor. Direct labor. So, direct labor. Is there any change in direct labor? No. Fixed variable. Variable. 30 and 18. Correct. Next. Variable overheads. Is there any change in variable overheads? Is there any change in variable overheads? No. Yes, no. It increases by how much? 10%. So, what will you do? Per unit currently, how much is it? 12. So, it becomes 12 into 110%. How much is that? 13.2. How about product B? 6 rupees into 110%. 6.6. Are you clear? Understand, guys? Understand? Variable cost increase should be increased on a per unit level. Fixed cost increase should only be increased on a total level. Are you clear with this? Sorry? What 5%? This is variable cost, no? Variable cost increases by 10. Fixed cost only increases by how much? For 5%. Yes, so this is what? 10% increase. Next is what? Fixed overhead. Fixed overhead. You tell me, guys, fixed overhead, what will you do? Per unit or total? Total. Originally, how much is the total fixed overhead? 48,000. But now they are saying that increases by 5%. So tell me, how much is the figure? 48 into 1.05. How much? 50,400. Similarly, here what do you have? For product B, it was originally 36,000 into 1.05. How much is that? 37,800. Correct? So, if you add it up, if you add all these things up, you get something called as a total cost. So, from that you can arrive at your profit. So, now let's go fill up the figures. Sales value, guys. 7,500 into 120 is equal to how much? Hello, how much? 9 lakhs, huh? Yes, 9 lakhs. Then what? 4,50,000. Then 2,25,000. Then 99,000. Okay, 99,000. Then here 5,400 divided by 7,500. How much is it? This is 6.72. Only to represent, I am putting it here. So what is the total cost per unit? Okay, so total is 824,400. Per unit is 109.92. So what's my profit here? 10.08 and 75,600. Are you clear with this? Yes, guys, it's fairly simple, no? One thing that you need to know is any increase in variable cost should be applied on the per unit column. Any increase in fixed cost should be applied on the total column. Are you clear? What students do is they take the per unit and into they will do 1.05. No, fixed cost by nature remains fixed in total, constant in total. Clear with this? Let's go to product B and close it off. Nothing great in the sum. So tell me 9,500 into 78 is equal to how much? 741. Guys, please be a little louder. 741. Then 3,99,000. Then 1,71,000. Then 62,700. Then what's the fixed overhead cost per unit? 37,800 by 95. How much? 3.98. So what's your total cost? 70.58. And what's your total? 670,500. So what's your profit per unit is going to be 7.42, and this is going to be 70,500. Are you clear with this, guys? Yes. Are you all understanding this? Yes. Are you guys understanding it? Guys, ideally in exam, the format has to be like this. You know, when you are putting all this dabba and all, since you can do it in your notebook with the scale, here it's difficult for me even to use this pen. So that's why all these things. So anyways, I just tried up with This Excel, of course, it's coming well, but it takes time every time. We don't have the luxury of time. So basically in exam, do it properly like this. Put the tabular column, just a few more seconds. You need not do shading and all. And some people do this. On the top column, they do the shading. Just to say presentation, this is not presentation. This is waste of time. Abnormal idle time, don't do that. This is, please just have it in a proper statement format. The only thing is, you should communicate well to the examiner. That's about it. Clear with this? Guys, clear with this? Fine. With this, we are done with this particular concept. Nothing. From a static budget, all the variable costs, put it in per unit column. All the fixed costs, put it in total column. Any price revision in variable cost, do it only in the per unit column. Any price revision in the fixed cost, do it in the total column. With that, you can prepare a flexible budget for any output level. That's all it is. Clear? Guys, clear? Are you all understanding this? Are you all understanding this? So in this segment, we use the concept of variable and fixed cost. Now, this is why I said it's similar to marginal costing area. Are you clear? This is something that we all know, no? It's not something that we don't know. Just that as a sum, we are doing it together right now. As simple as that. Clear? Guys, clear with this? Shall we move to the next sum? Shall we move to the next concept? Let's move to the next concept. Let's move to the next concept. Now, guys, let me give you this particular area. Let's get into this particular area called as functional budget. Functional budget. Functional budget. I told you this is similar to your cost sheet area. Okay. So I will tell you the background and I will give you the conceptual things and all. And after that, we will do one sum and that's about it. That's about it. So this area, this chapter is only about it. And some theory portion is there that I'll tell you how to prepare on the last day. I told you in employee cost and budgeting, these two chapters alone, we have some theory extra, that theory focus, because generally these two chapters theory comes apart from the first chapter. That goes without saying. First chapter is only theory. Fine. I will tell you how to do that and all in the last class. Last class is day after tomorrow. I will do it. I'll tell you day after tomorrow. So don't worry about that. Fine. For the time being, let's get more into the practical segment, how to solve sums. So that's what we are concerned about right now. Don't worry. I will handle theory. I will tell you how to crack theory. I will also tell you to whatever extent the value addition can be made from my side. I will tell you. Beyond that, even if I keep reading, you will also keep reading along with me. That is something that I don't want. You can read it better than me. I know. I admit it. Okay. Fine. So I will tell you how to prepare for that. I will give you strategies and all. Certain areas, if they are conceptual and it has not been covered before, that I will pick and do it. Don't worry about it. Are you clear? So you need not worry about it. Right now, just focus only on the practical part. I will tell you when to focus and how to focus on the theory part. Now, functional budget. What do you mean by a functional budget? Now, in an organization, there are many functions. Like production is a function, sale is a function, correct? Material purchase is a function, material consumption is a function, correct? When I prepare a budget for each of the functions in my organization, that is called as a functional budget. Are you clear with this? Functions means what's activity, basically activity, correct? Every single activity, every single function, or each and every function. For production is a function. For that, if I prepare a budget, that's called as production budget. Sales is a function. If I prepare a budget for that, it's called as a sales budget, and so on. Are you clear with this? Are you clear with this? Now, what are the different types of functional budget that we will be seeing in our area? Please note it down in the same order. Please note it down in the same order. Order is very important. First, sales budget. Second, production budget. Third, material consumption budget. Consumption, I'm using a short form. Consumption budget. Fourth, material purchase budget. Fifth, wages budget. Sixth, production overhead budget. Seventh, AOH and SOH budget. Eighth, master budget. Yes, done. And it should be in the same sequence. It should be in the same sequence. It should be in the same sequence. I will give you all the logic and all. Please note it down quickly. Please note it down quickly. See, apart from this, you also have two more budget. Apart from that, you also have two more budget called as cash budget and capex, capital expenditure budget. These are a part of your financial management, not a part of our subject. But in the study material, they have just mentioned and leave it there. No sums and all in this area, but they have just mentioned and leave it there. There's something called as cash budget. It's nothing but a cash flow statement, which will be seeing, you anyways will be seeing it in your accounts. But yes, it's also there in your FM, working capital management. Yes, in that you have something called as a cash budget. And of course, there is another thing called as capex budget. That's basically your capital budgeting chapter. There you have a lot of capital, your present value of cash inflows and all, NPV, IRR and all those things. Okay, so in that place, you will, in that area, you will be having it. Anyways, forget that. In our subject for costing, only these are the costing related budget. Apart from that, you should also know that there are other budgets that are not a part of costing subject. Now, sir, all these budget, every activity you have given one budget, I agree. But why should it be in the same sequence? Why should it be in the same sequence? Understand, it's very important. It's very important. Now, always remember, when I am budgeting, let's say you are the company's managing director. A fresh year is starting right in front of you. You are in the month of March. Okay, for us, year is 1/4 to 31/3 only, correct? In India, we follow that April to March, right? So for the next forthcoming year, April, from 1st April onwards, one new year is going to start. So what I'm going to do, before that, you are the managing director. Put yourself in the shoes of managing director. Assume you are running a business, your family business, you are only running. Fine. Now, what will you do? Now, for the next year, I need to plan it accordingly, correct? You are doing a production. You are in a production setup. You are manufacturing something. Let's say you are a garment manufacturer, something you are manufacturing. Fine. Now, how will you start preparing the budget? How will you said so many budgets, sir, but which budget? Can I do any budget that I want beginning itself? No. First, if you are the owner of a company, what you will do is, you will first call the marketing team. You will call the marketing team, ask them, in the forthcoming year, how much demand you are predicting? How is the market? How many units you are expecting to sell? Obviously, he can't predict to the last unit. He will say, sir, overall, looking at the market trend and all, and looking at the overall seasonal business nature and all, generally, let's say I will sell 1 lakh units or whatever it is. The first step begins with a sales budget. That's why sales budget is the first step. Why? Because only based on that, what I do. Let's take an example. Let's say the marketing manager comes and says, sir, next period, the sales will be 1 lakh unit. This is what we are expecting, 1 lakh unit. Now, what I am planning to do is, in your financial management, you will study. You will decide how much of stock to keep. That's called as working capital management. In that one area is called as, there is a area called as working capital management. A very interesting area. There you will see how much to stock, how many days of sales or consumption to stock or not. Basically, now let's assume based on that, totally, now I got an input from my marketing team that next year I'm going to sell how much? 1 lakh units. Now, let's say I want to keep a closing FG of, let us say, 20,000 units. 20,000 units. I want to keep an FG of 20,000 units, closing FG, correct? So basically, I should produce how much? 1,20,000, correct? But wait, I already have an opening FG of 10,000. I already have an opening FG of 10,000, which means current year, how much I need to produce? 1,10,000 units. Now you tell me, I started with the sales budget, and only if I know how many units I'm going to sell, I can arrive at the production budget, correct? Now only I can go and tell my production manager, look, I will not ask him, I will tell him, this year I want you to produce 1,10,000 units, that's all. Clear? How did I get this base from? First, it has to originate from my sales team or my marketing team. Are you clear with this? Are you clear with this? So first I ask this fellow, he will tell me what is the sale. From that, add a closing stock minus opening stock. You will get the total production requirement for the current year. And always remember, production budget is the base for all other budget. It is the base for all other budget. Now, because all your costs will be incurred only with respect to production, correct or not? We saw cost sheet. All the components of cost are tied to production, correct or not? Let's say, for example, every unit of output, every unit of output requires, 1 unit of output requires 2 kgs of raw material. Can you tell me what is the total raw material I will be consuming in the next year? 2,20,000. Correct or not? 2,20,000 kgs I will be consuming. This is called as raw material consumption budget. Clear? So this is how I moved to the next budget. From sales I went to production. From production I went to material consumption. Clear? Clear. Now they are saying, now you also need to maintain a closing raw material stock. A closing raw material stock, let's say an example of 30,000 kgs, and you need to maintain, you already have an opening raw material stock, let us say of, let's say 50,000 kgs. 50,000 kgs. So tell me, in the current year, how much should I purchase? How much should I purchase? I should purchase how much? For 2,20,000 I am going to consume, plus 30,000 I should store. So 2,50,000. But wait, already I have 50,000 in my godown, which means the current period I have to purchase a raw material to the extent of 2 lakh kgs. Correct? So from this I arrived at my, from material consumption I arrived at my material purchase. Are you clear? So this order needs to be maintained. And parallelly they are saying the current year how many units I am going to produce? 1,10,000. They are saying every unit requires 5 labor hours. So what will you do? 1,10,000 into 5. So 5,50,000 labor hours you need. Accordingly, you will tell the HR department. Correct or not? Correct or not? Similarly, your production overheads. Why is this required? Now you will arrive at your absorption rate and all. Remember, I told you what rate, absorption rate you will use. Budget or actuals? Budget or actuals? Budget. Where do you get that from? Here only. Are you clear? Are you clear with this? Similarly for AOH and also all these budgets you will prepare. And finally, there is something called as master budget. What do you mean by master budget? Very simple. This is nothing but a budgeted P&L account where I will be having the component of cost in the debit side and I will have the sales on the credit side, and each of the components how I got will be a working note. So all the previous budgets will be a working note for a master budget. Are you clear with this? So using the budgeted data, if I prepare my P&L, it's called as a master budget, and in my master budget, the working notes or my notes to accounts, my notes will be every single individual functional budget. Are you clear with this? And that's about this area. Are you clear with this, guys? Are you clear with this? So basically in exam, how they will ask this question is, they will first tell you how many units to be sold. Based on it, you will arrive at the units to be purchased. From there, you should arrive at your raw material consumption. From that, all these things you will go. So from your sales, you will go to raw material production. From that, you will go to raw material consumption. From sales, you go to production. Production to raw material consumption to raw material purchase, and so on. Similarly, from production directly, you will get other limbs and all. Your wages budget, manpower budget and all. Are you clear with this? Now, sir, what is the big deal in this area? It's simple only, no? If you get a link, you can do it. Correct. It is simple only, no doubt. But at times, what happened? Finding out the units sold. Always remember in this chapter, what is the first base? You need to find out sale units. That sale units will not be given directly. You need to use some brainstorming to find out the units sold. If you get that unit sold, the entire question answer, you will get it. But if you don't get that unit sold, you will not get the entire answer. Not even one step you can proceed. That is the catch that is there in this particular area. Are you clear with this? Are you clear with this? So what you should find out? Units sold. So in case there is a multi-product and all, there can be multi-product, no? Product wise, you should know the units sold. That should be the base. From that, add closing FG minus opening FG, you will get your units produced. With that units produced, you can find out the raw material consumption, and life becomes simple from there. But the first step is what? Finding out the units sold, and that is where the catch is kept. Are you clear with this? Are you clear with this? So what they will do is, the company deals in 3 different types of output, FG, and 4 different types of raw material, So product wise, you need to maintain and prepare all the budgets. Are you clear with this, guys? Now, shall we just go to the sums? Now, this is nothing but cost sheet. I told you the flow of cost, flow of cost. First day I told you. You remember flow of cost? How cost sheet is arrived and all. I showed 3 places in a factory. Stores, factory, shop and your warehouse and all. I told you how cost moves. The same thing is only with something that we are doing right now. Yes, guys, are you all clear with this? This is something that we are going to do right now. A very interesting area, and I have an excellent sum. An excellent sum. This sum was there in your study material, not my invention. I am not picking it from elsewhere, foreign author and all. I've just picked it from your study material. It was also tested once for 10 marks. Very good sum. Very, very good sum. Very good sum. In my opinion, again, I'm telling you, if I were in the position of an examiner, in this area, if I want to test, I will touch this sum. Okay. So, this much amount of thing I'm telling you right now, I don't want to break the suspense. Let us see how many people are getting it right. It's a very good question. Very good question. No rocket science and all. If you just observe a bit, you will get it. That's all. Let's get started. Let's get started. So, here we go. Question number 2 on page number 80. Question number 2 on page number 80. Okay, so let me read this question. It's a 10-mark question. It's a 10-mark question, past exam. Mark it as important. This sum, definitely refer to this sum the day before your exam. Please do that. Please do that. Okay. Now, somehow I feel this sum might come. I don't know. I told you one more sum like that, no? What sum I told? Correct. Very good. Very good. Very good. Very good. Yes, you are right. Shoe sum. I told you that Kaju Katli example. I told you, no, that multi-product cost sheet. Similarly, this area also I feel somehow something makes me feel that because it's been a while since they tested this. So I think this might come. It might not come also, but I'm just telling you a gut feel. That's all. Don't ask me if it doesn't come. Please don't ask me. There you only told it will come and all. I'm no God to predict all this. Just telling you it's a gut feel. That's all. At times it can come correct. At times it might not. But that this whatever trend I told you, that's not gut feel, but that is worked out. That is worked out past trend analysis. Some ways prediction and all, no one can do. Okay, I'm just giving you my opinion. I feel it might come. Okay, right. Fine. A company is engaged in manufacture of specialized subassemblies required for certain electronic equipments. The company envisages that in the forthcoming month, December 20x1, the sales will take a pattern in the ratio of 3:4:2, respectively, of subassemblies ABC, MCB, and DP. The following is the schedule of components required for manufacture. So basically, what is the company dealing in? They are dealing in manufacture of subassembly. Their output's name is ACB, MCB, and DP. Selling price for each of the components is 520, 500, 350. What are the components required? You can just remove this line. It needs 4 types of raw material. Baseboard IC08, IC12, and IC26. What do you mean by an IC? Integrated circuit. Have you seen this in your system, computer, that motherboard is there, no? It will be like green color base on which you will have some silicon chips and all. In childhood, I don't know whether you did. I used to look at like this and it will be like buildings and all. Yes, it will be like buildings and all. So that is called as integrated circuits. Fine. So what they are saying, for every, so this is one type of motherboard. This is another type of motherboard. This is another type of motherboard. For each motherboard, you need a baseboard, you know. That is that green color board. On top of it, this is one type of building. This is another type of building block. This is another type of building block. Correct? The silicon chips are all scattered. Okay, are you clear with this? Now, are you able to understand how it looks like? How it looks like? Yes, are you able to understand? Fine. They are saying for them to manufacture one ACB, they require one baseboard, 8 IC08 components, 4 IC12 components, and 2 IC26 components. Similarly, for MCB and DP, they have given the quantity of raw materials required. Okay, clear? And here they have given the price per raw material. Baseboard cost rupees 60. IC08 cost rupees 20, meaning what? For ACB it will be 20 into 8. For MCB it will be 20 into 2. For DP it will be 20 into 2. Correct? Are you understanding, guys? Similarly, IC12 costs 12 rupees per whatever is the piece. And IC26 costs 8 rupees per piece of IC26. Are you clear? They have given you that they have 3 different types of FG. And each of the type of FG requires 4 types of raw material. Are you clear with this? Now, the direct labor time and variable overheads required for each of the assemblies. Assemblies means what? FG. They have given each and every FG requires 2 types of labor, grade A, grade B. Let's say skilled and unskilled. Okay. So it requires 8 hours of grade A, 16 hours of grade B. Similarly, they have given for the other 2 products. They have said Every hour of grade A is paid at the rate of 5 rupees. Every hour of grade B is paid at the rate of 4 rupees. Are you clear? So this is what these columns are all hours and they have given the rate. Fine. If you multiply respectively, you will get the labor cost per unit. Are you clear with this? Are you clear with this? Apart from that, they have directly given the variable overheads in rupees. You need not multiply and all. They themselves have directly given what is the variable overhead cost per unit of each of the 3 different types of FG. Are you clear with this? Now, the laborers work 8 hours a day, 25 days a month. Okay. The opening stocks of sub-assemblies means what? FG. And the components, meaning what? Raw material, are given below. Opening stock of FG. Each of the FG, what is the opening stock they have given? Closing stock of, opening stock of raw material. This also they have given. Are you clear with this? Fixed overheads amount to some rupees they have given. Guys, this is FG, this is RM. Okay. Fixed overheads they have given per month, and the monthly profit target is 12 lakh rupees. The company is eager for a reduction of closing inventories of sub-assemblies and components by 10%. Meaning what? Your closing stock is 90% of your opening stock. Are you clear with this? What have they given here? Look at this. The company is eager for a reduction of closing inventories of sub-assemblies and components by 10% of quantities as compared to opening stock. Clear? Meaning what? Opening stock they have given. Closing stock is 90% of opening stock. Ideally, closing stock is also given. Clear? For what? Both FG and RM. Are you clear with this? Prepare sales budget, production budget, component usage, that is material consumption, material purchase, and manpower budget. This is what is given in the question. Very simple. Very simple. I don't want you to answer any of these 4. That I will take care. Just answer me. How much is the sales budget? Units I want. How many units of ACB, MCB, and DP is the company planning to sell? If you get that right, the entire sum you will get it right. Come on, guys. I'll give you 2 minutes time. Figure out. Figure out. Figure out. Use all the knowledge you've got and figure out. Whatever we have learned, you figure out. Whatever we have learned, you figure out. First, is the sale units given directly in the question? How are we going to do it? Come on. Try it. Try it. You will get it. You will get it. I'm sure you will get it. Whoever gets it, excellent. Really good. Really good. Whoever gets it, excellent. Has anyone got the answer? Not it? Okay, okay. Do it, guys. I'll be very happy if someone gives me an answer. Of course, right answer. Do it. Come on, do it. Attempt. Don't give up. Try something, you will get it. Just see how you can crack. Whatever data is given, how is it relevant for me to find out? Try doing it. It's not a single product, it's a multi-product. Do it, guys. Come on. Very good, guys. Very good. Others, don't worry. I'll tell you what to do. Excellent line of thinking. There is only one way to do this sum. No other way to do this sum. All gates are blocked. There is only one way to do this sum. Excellent line of thinking. Excellent line of thinking. I appreciate that. Excellent line of thinking. Very good. Now, first, in this question, what is the problem? Units are not given. Sales units, if you find this sum is very simple. Finding the sales unit is what is the biggest challenge in this question. Now, what have they given with respect to sales? I only have what? Sales mix. I don't have anything else, no. If you tell me the total units, then I can say, okay, sales mix and all. Now, recall your marginal costing concept. Recall your marginal costing concept. Wait. Now, in this question, I have total fixed cost is given. Total profit is given. Fixed cost plus profit gives me what? Total contribution. Correct. I have my total contribution with me. Correct. Now, product wise, I have selling price. Product wise, I have all the variable cost components. Product wise, I have the contribution per unit. Correct. And I also have the sales mix. So I can find out the weighted contribution per unit. Correct. Total contribution divided by weighted contribution per unit gives me the number of units in total that I need to segregate in the ratio of 3:4:2. I get product wise number of units. Are you clear with this? Is that a rocket science? Didn't we do this already? Didn't we do this already? You know, if I'm telling you, are you able to understand? It means that you already know the concept. It requires presence of mind. It requires presence of mind. The moment you look at it, had I been an examiner, the first thing I would have done is, I would have put fixed overheads on the top and profit on the bottom. In a single line, if someone gives fixed cost and profit, obviously you will be tempted to add and you will get the answer right. In fact, to make it more challenging, if these two are given in two separate places, it would have been more challenging. But I thought at least you could figure this out. No problem. Are you understanding what we just did? Fixed cost plus profit is equal to total contribution. Product wise, you have contribution per unit. Find out the contribution per unit, and you have the sales mix also you have. So you just multiply that, you will get the weighted contribution per unit. Total contribution divided by weighted contribution per unit, you get the total units. That total units is what? BMW. Total units, car plus bike plus whatever put together. Now segregate it once again in the ratio of whatever is given in the question. You will 3:4:2. You will get ACB, MCB and DP product wise units, and from there the sum is very easy. Are you clear with this? Guys, are you clear with this? Excellent sum. Excellent sum. Brilliant sum. If you got it on your own, hats off. Hats off. Really good. Don't take it to your head. Please don't take it to your head. Yes, you have got it. Yes, that's all. Leave it there. And if you have not got it, don't take it to your heart. Just leave it there. Stay balanced always. Just keep it as such. You have learned something. That's all. If you didn't know, you have learned something. As simple as that. Clear with this, guys? Clear with this? Very good. Very good. So let's get started with this particular question. Let's get started. These kind of questions, I'm telling you why the examiner will be tempted. Single question, they are testing you both on marginal costing concept as well as on your functional budget. Number one, not even flexible, functional budget, which is cost sheet related. So look at this, functional budget with marginal costing, that too using sales mix. So look at the beauty of this question, how they can actually frame it. Whoever framed this question, brilliantly framed. And practically you can have this kind of a scenario, no? And this is there in your study material. I'm just picked from study material, past exam question. 3-4 attempts back, maybe again it may do around here. It may do around here. Many students got this wrong. Examiner's comments, I saw many students got this wrong. If you get the first step right, only the rest of the sum makes sense. If you got this wrong, you will be working on a wrong figure. So obviously they won't give you marks. Are you clear with the approach, the solution? That's why I said in this question, I wanted the answer because I wanted to know if you are getting the entire approach as well as the computation right. Because broadly, if you get the approach right, generally that itself will tell you the conceptual understanding. So I just wanted to know how many of you are able to actually relate that. It's not that you guys are, you guys don't have the knowledge. That's why I'm telling you these kind of problems, apart from the knowledge, it requires presence of mind. Sir, teach me presence of mind. I'm sorry, I can't teach it. Presence of mind comes only by practice. It comes only by practice. I can tell you the rules of Sudoku game. Immediately, can you solve a hard question? Obviously not. It comes only by practice. It comes only by practice. That's why what I'm doing here is I'm giving you some sums for practice. Do that. Do that with whatever concept you are learning in the class. This will be sufficient. For an exemption, this is definitely be sufficient. In fact, more than that itself, you can score. With the knowledge that we've been spending for the last 8 days, including today, whatever it is, definitely I'm sure that it will be sufficient for your exam to score really well. Really well. Fine. So let's get started with this particular question. Let's get started with this particular question. Write down step 1. This is what? Question number 2 on page number 80, right? 80. Yes. The 10-mark exam question. Watch out for this. Mark it as important. Please watch out for this. Okay. So this is question number 2 on page number 80. Please write down step 1. Step 1. Contribution per unit. Contribution per unit. This is the first step. You need to find out the contribution per unit. Okay. So write down particulars in 3 columns: ACB, MCB and DP. Write down particulars and 3 columns. ACB, MCB and DP. ACB, MCB and DP. Fine. First, selling price. How much? Guys, I want you guys to pick it up and tell me. 520, 500 and 350. Right. Put a double dash here. Next. Write down VC, that is variable cost. Under that first baseboard. Can anyone tell me how much? 16 to 1. Correct or not? So 60. Put it here. 60 and 60. Next, what will you write? IC08. Integrated circuit 08. How much? So, yes, it's nothing but 20 into 8, 20 into 2, 20 into 2. So, it's 160, 40 and 40, yeah? Yes, it's 160, 40 and 40. Are you clear with this? Next. IC 12, okay, IC 12. How much? 48, 120 and 48. Next. IC 26. How much? 16, 48 and 64. Correct? So, okay, maybe if you want, you can put a bracket on these two sides. These are all direct materials. Correct? Next, what do you have? Direct labor. What are they? Grade A labor. How much? 40, 30 and 20. Correct? 40, 30 and 20. Guys, are you all understanding how we got 40, 30, 20? Yes. Next, grade B labor. How much? 64, 48 and 32. Fine. So maybe if you want, you can put a bracket here and call it as direct wages. This is only for your understanding, just so that you're not missing out on anything. Then, what is it? VOH. It's given directly in the question. 36, 24 and 24. Correct? It's given in the question, no? Yes. So, what's your total variable cost? Total your variable cost alone. Don't total your selling price also. It's going to be 424, 370 and 288. Correct? Guys, do your own calculation. Please do your own calculation. Next, tell me what's your CPU, selling price minus variable cost. How much? So 520 minus 424 gives you 96. Then 500 minus 370 gives you 130. Then your 300 minus 288 gives you 62. Are you clear with this? Product wise, you've got contribution per unit. Correct, guys? Hello? Yes, you've got product wise contribution per unit. Yes. Now what you do? Are we done? No. Just come down and write weighted contribution per unit. It's also called as composite contribution per unit. So what ratio have they given? 3:4:2. Put it down. 3:4:2. So how will you compute? This is nothing but, so 3 plus 4 is how much? 7 plus 2 is 9. Okay. So 3 plus 4 plus 2 is 9. Okay. So write down 96 into 3 by 9 plus 130 into 4 by 9 plus 62 into 2 by 9. Why are we doing this? Do you guys remember sales mix and all? I told you how to do that, correct? One representative unit has 3/9 of product A, 4/9 of product B and 2/9 of product C inside it. That's why we are merging everything together. So tell me, how much is this? How much is this? Okay, so 32. 57.78, 13.78. So if you add these three, you get to how much? Rupees 103.5555. Okay, maybe you can just retain the decimals in your calculator that you need. Put an M plus and retain it. Before you put that M plus, you should click MRC twice. Yes, you know that, no? Because if it MRC means memory recall, if you click it twice, it clears your memory, not your memory, calculator memory. Yes, that if you do it, then you can add your M plus any number of times and you can get it. Clear, fine. Then now go to step 2. Guys, are you all understanding what we're doing here? Yes, write down step 2. What's your step 2? Write down calculation of units to be sold to earn a profit of rupees 12 lakhs. That's what they have given, no? Profit of rupees 12 lakhs. Yes, guys, look how marginal costing is used here. Blending is done. Marginal costing inside functional budget. Beautiful sum. Beautiful sum. Yes. Now, first write down contribution. Contribution is equal to what plus what? Fixed cost plus profit. Correct? Fixed cost plus profit. You guys know this, no? Sales minus variable cost is equal to contribution minus fixed cost is equal to profit. If you are coming from down, I will say fixed cost plus profit. Sorry, fixed cost plus profit gives you contribution. Correct? So now in this case, what's your fixed cost? 757,200. Perfect. And what's your profit? It's going to be 12 lakhs, right? Required to earn a profit of 12 lakhs. So tell me, what is the required or desired contribution? Rupees 19,57,200. Yes? Perfect. Are you all clear with this? Are you all clear with this? Guys, are you all clear with this? So now, this is the step. This is the step. Sales in units is nothing but contribution divided by weighted contribution per unit. Correct or not? Correct or not? Correct or not? Contribution per unit into units is only going to be my contribution. So contribution divided by contribution per unit gives me units. In this case, weighted contribution per unit because more than one product. So tell me how much by how much? Rupees 19,57,200 divided by rupees 103.5555. Retain the decimals in your calculator. So tell me how many units in total? 18,900 units to be sold. 18,900 units of what? ACB, MCB, DP. All three put together. So now what I need to do, this 18,900, I again need to apportion in the ratio of 3:4:2. So do it. ACB, MCB and DP. How will you do it? So 18,900 divided by 9 is equal to, you will get something into 3 is equal to write down, 4 is equal to write down, 2 is equal to write down. How much? 6,300 units, 8,400 units and then 4,200 units. Are you all clear with this? Guys, are you all clear with this? Is everyone understanding? From here, life is simple. Let's anyways quickly finish it off. Not a problem. We will do it. Are you clear with this? Are you all clear with this? It's simple, no, guys? Yes, this is something that you guys already knew. Just that it needs to be put in a particular format. You just need to have the line of thinking. And if you get it, that's all. That's all. You're done with the question. Are you clear? So let's quickly finish off the balance. Go to step 3. Let's prepare a sales budget because they have asked you to prepare a sales budget in units and value. So multiply the units with the selling price per unit. You'll get your value. So write down what is next thing? Step 3. Step 3. Step 3 is going to be a what? Sales budget. Sales budget. Now have products, units, selling price and sales in rupees. So tell me products. What are the products that you've got? How many products? 4, right? 4 products, correct? Only 3. 4 are raw material. Okay. Product you have only 3. Yes. So what and what? ACB, MCB and DP. Just now we found out. How much? 6,300, 8,400, 4,200 and total is how much? You should not total this, no. ACB plus a monkey, donkey, how will you add together? Correct. You will be tempted to add in the exam. That's why I also misled you. You also fell for it. Next, selling price. How much? 520, 500, 350. So tell me what's the sales value? 32 lakh 76,000. Then 42 lakhs. Then 14 lakh 70,000. Can I add these 3? No. These 3 are in rupees. These 3 can be added. Yes, 89 lakh 46,000 rupees is the total sales value. Value can be added, no madam. Yes. Are you clear with this? Are you clear with this, guys? Are you all clear with this? So the sales budget is through. Are you clear with this, guys? Are you all understanding? Are you all understanding this? Yes. Shall we move to the next one? What is the next one? They have asked you for production budget. Shall we move to the next step? Have you all completed till this? Go to step number 4, production budget. Step 4, production budget. Production budget. Write down particulars in 3 columns: ABC, MCB, and DP. Particulars and 3 columns: ACB, MCB, DP. Fine. So now tell me, guys. First, sales. How many units? Hello? How I got this from step 3? 6,300, 8,400, 4,200. Then to this I should add closing stock minus opening stock. Opening stock is given in the question. How much? How much? How much? It is given as 800, 1,200, 2,800. Closing stock is given in the question, not directly, but they are saying that closing stock should be 10% less than what is maintained as opening stock. Or basically, can I say, it is 90% of opening stock, correct? 0.9 into 800 is equal to write down, 1,200 is equal to write down, 2,800 is equal to write down. How much? How much? How much? 720, 1080, 2520. Perfect. This is nothing but 90% of opening stock. Are you clear? You should definitely write it, all these things in the question. In the answer, you should write it. Why? Because only then you will know how, only then you will communicate to the examiner how you got these figures. Correct? Otherwise, examiner will think that you copied all these figures from the next person. But most of the time, when you do that, the next person would have only done it wrong. So you would have also copied that. But I'm pass I don't. Okay, right. So this gets you your total production, correct? So if you adjust for this, you get your total production. How much? How much? How much? 6220, 8280, and 3920. Are you all clear with this? Are you all clear with this, guys? Yes. Now the next one, step 5 is what? Component usage budget. That is material consumption budget. Correct, guys? Shall we do this? Hello? Shall we do it? Yes. So I'll tell you this. We can do it in a different template. If you want, you can also do it just like how you wish. So write down component usage budget. Component usage budget. Particulars and 4 columns. I'll tell you 4 columns. Please write down on the top ACB, MCB, DP, and total. I know that ACB, MCP, and DP are all FG only. Fine, but here we are doing it like this. So we will add it up. If we do the sum, you will know, you will understand what I'm trying to. If you want to do it also, you can put 4 things here. Baseboard, IC, whatever, all the 3 ICs, you can also do it like this. I'm doing it this way. Fine. So first what you do is write down production. Production. How many units of ACB, MCB, and DP are produced? 6220, 8280, 3920. Total? No total. You cannot add these 3. Okay. Put a double dash here. Now, first, what is your baseboard? First component is your baseboard, correct? BB. You need how many components? 1 component each. So tell me how many baseboards you need for ACB? 6220. Here 8280. Here 3920. Can I total this? This I can total. Tell me how much? It is 18,420. Guys, are you understanding why we are totaling this? I require 6220 baseboards for ACB, 8280 baseboards for MCB, and 3920 baseboards for DP. So now I can add the total baseboards required. This you can't add. This is production, but this you can add. Clear with this? Next. IC08. IC08. How much do you need? They are saying 8 units, 2 units and 2 units respectively. So accordingly, just multiply 8 into 6220, 2 into 8280 and 2 into 3920. How much? 49,760, then 16560, then 7840. Total it up. How much is it? 74,160 IC08 you need in total. Are you clear? Hey, are you guys understanding what we are doing here? Yes? Last row, Abba, you are understanding? Abba, understanding? Are you able to follow? You are also able to follow? Yes, you guys are able to follow this, no? Yes? She is able to follow? You are able to understand this? Yeah? Fine. Next. IC12. How much? They said 4 units, 10 units and 4 units. So tell me how much? 6220 into 4, 8280 into 10 and 3920 into 4. How much? 24,880, 82,800, 15,680. So totally how much is it? 123,360. Correct? Guys, is everyone getting this? Please do your own calculation. Next, what is the next one? IC26. 2 units, 6 units and 8 units. So how much? 12,440, 49,680, 31,360, 93,480. So component wise you got what is the total requirement. Are you getting it? Guys, are you all understanding this? Let's go to the next one. Component purchases budget. Shall we, guys? Write down. Component purchases budget. It is going to be step number 6. Okay. So component usage budget, that is also done. So let's go to component purchases budget. Component purchases budget. So write down particulars and 4 columns. The 4 columns are for the raw materials only. Guys, come on, write down. Let's finish this quickly. Particulars and 4 columns. Baseboard, IC08, IC12, IC26. First, what will you write down? First, usage or consumption. How much? Just to pick it from the previous step. 18,420, 74,160, 123,360 and 93,480. Correct? To this you will add a closing stock minus opening stock. First in this question, opening stock is given. Yes, how much? 1,600, 1,200, 6,000 and 4,000, right? Now, what's your closing stock? They've given you it's 90% of opening stock, or they've given it as 10% less than your closing stock. So 0.9 into 1,600 is equal to 1,200 is equal to 6,000 is equal to 4,000 is equal to how much? Huh? Yes, it's 1,440, then 1,080, then 5,400, then 3,600. Correct? Fine. So if you net this off, you get your purchase in quantity. How much? 18,260 units. 18,260. Sounded a point in, I have corrected. Okay. Then 74,040. Then 122,760. Then 93,080. Okay. Fine. Then write down purchase price. Purchase price will arrive at the amount also. Purchase price per unit of BB, how much is it? It's given no 60, 20, 12 and 8. 12 and 8. Yes. So finally, this is going to be your purchase price. What's your purchase price? 10 lakh 90. Sorry, that's not purchase price. I'm sorry. It's purchase value. 10 lakh 95,600 rupees. Correct. then 14,80,800 rupees, then 14,73,120, then 74,46,000, sorry, 7,44,640. 7,44,640. Are you clear with this? Are you clear with this? Yes. Then they have also asked you for something. No. They have asked you for manpower budget. No. We should do that also. Can you do that as a homework? Can you do that as a homework? So line wise, you will have grade A, grade B. So for every output wise, you will just need to multiply with the respective columns and you will get the answer. In fact, if I'm not wrong, this answer will be there in the questions that I will be sharing you. Ideally, it should be there. Let us see. But can you do that as a homework? The manpower budget, units multiplied by the respective hours. That's all. Or you want me to do it? You will do it, online, guys. How about you all? Does anyone want me to do it now, or you guys can do it? You guys can do it. No, it's fairly simple. The main step is only here. Okay, right, fine. 1 minute, guys, 1 minute. Let me give this completion. Let's finish this chapter properly. Fine, that's all. No sums and all here. I'm just taking if covered everything. Okay, just a minute. So basically, all these things, types of budgeting are all is okay. Fine. So we finished this ratios. This is also done. Illustration done. Then these are all some theory areas that I told you. I will share it later. Then we did one question on flexible budget. Podum for the day, sir. Okay, fine, Madhumita. Taken. Yes, we are done. Let me just give a proper completion. That's all. I didn't tell you that I'm going with the next chapter. Okay, don't worry about it. I'm just finishing it up. Okay, then sequence and all I've told you. Yes, this is done. And theories only is there. Okay, done. And the difference between flexible budget and fixed and flexible. I told you fixed is nothing but the static budget. From that budget only you will derive all the output and you will derive all the inputs and then you will use it for any volume level. Correct or not? Correct or not? Yes, variable cost remains constant per unit, fixed cost remains constant in total. Semi-variable cost segregate into variable and fixed using the formula delta cost by delta units. So that's what is given. If you just read it once, you will understand. And then this problem 2 was about your flexible budget, your functional budget with marginal costing. I told you, watch out for this. So yes, with this, we are done with this particular chapter. So agenda for tomorrow's session, just a minute, guys. Agenda for tomorrow's session, I'll tell you. So right now we have finished, today we finished 2 chapters, right? So we finished your employee cost and budgetary control. So agenda for tomorrow's session, we will try to finish these 2. Cost accounting systems. I think it's going to be a jolly session tomorrow because cost accounting system is something that you guys already know, your basic accounts only. So yes, we will do it anyways to give a proper completion. I will do that. And I told you, based on the past trend analysis, every attempt they are testing 5 mark. Somewhere they are hiding it from this chapter. Fine. And there are some catches here. I need to discuss one thing about overheads and all. There is an alternative treatment of under or over absorption. We saw that there are 2 ways of treating under or over absorption. Normal cost, if it is because of normal reason, using supplementary rate, give it to the product. Abnormal reasons, you should take it to your costing P&L. There is a third method. Which we'll be seeing only in this chapter. Yes, which we'll be seeing in this chapter. So tomorrow's agenda will be cost accounting systems and contract costing. Unit, batch and job costing is nothing. It's only some 3-4 pages in the entire thing. So we will just reserve it to the last class. Last class we will have unit, batch, job and theories and all. We will see what is to the extent relevant. And I will share with you whatever is the particular, I'll share with you the exam preparation strategy. That's a very important thing that I'll tell you how to write, what to write, when to write and all. To that extent, I will tell you some things. I'll share my personal experiences also. And then we are done with it. Clear with this, guys? So today till date, we are done with 11 chapters. We just left with 3 more chapters to go. Apart from that, we have one theory. Fine. So let's do it properly and finish it off. 2 more days. Tomorrow, day after. And we are done with the subject. Clear, guys? Thank you all so much and have a good night. Okay, guys. Let's start. The final chapter. Let's start. So this is chapter number 14. 13. Okay, 13. Okay, so unit, batch, correct, so it's 14 only. Okay, so unit, batch and job costing. Unit, batch and job costing. Unit, batch and job costing. Guys, the examples that I give you, I mean, it's not there in your study material and all. You should know why we are studying this chapter separately. So I'll just give you a background that will be a solid background with which you can understand why this chapter is there separately and whatever is the concept that we are going to study. Now, there are broadly two methods of costing. Two methods of costing, broadly, two methods of costing. What are they? Yesterday I told you. Unit and job costing. Yes, unit costing and job costing. There are broadly two methods of costing, two systems or methods of costing, unit and job. Now, sir, what is this, sir? Some separate thing out of the blue? No. Now, you guys tell me. Now, this objective is only related to your profit stock valuation and profit computation. Objective A. Okay. Now, in your objective A, what was the classification we studied? Product cost, period cost and all we did know, the cost sheet chapter, correct? So, basically, whatever we have studied is correct. That's all. The entire thing is only unit costing, but I'm just telling you how it works. Now, yesterday also I gave you an example. Let's say I am a pen manufacturer. I manufacture 1 lakh pens, or let's say I manufacture 10,000 pens. The total cost is going to be 1 lakh rupees. Fine. So what I do is, total cost is going to be rupees 1 lakh, and the units produced is going to be 10,000 units. Now you tell me, every pen will be valued at how much? The cost per unit, how much is it? It will be rupees 10 per unit, correct or not? This 1 lakh consists of only the product cost, material, labor, overheads, and material, labor, direct expense, that is prime cost and overheads. That goes without saying. But now what I do is, now you tell me, how do I get this value of 10 rupees? How do I get the value of 10 rupees? Do I open pen 1 account, pen 2 account, pen 3 account, 10,000 pen accounts, and independently say inside this pen how much material, labor has gone? Or these are all some homogeneous products. Collect the cost for the entire period, divided by the total units produced for the period, arrive at the cost per unit. Yes, what will I do? I will arrive at the cost per unit by averaging out my total cost for a period with the units produced for the period. Correct? Why am I doing this? Because since the units are all standardized, the cost consumption pattern will be similar only, no? The cost consumption pattern will be the same whether you are producing pen number 1 or pen number 10. Just imagine. Now, I am manufacturing the first pen, I am using a labor. That labor just now is a new employee, correct? Now, he would be taking more labor hours, correct? So, the pen cost of the first pen will be slightly more than 10 rupees. By the time he reaches the 10,000th unit, now he would have taken, because of learning curve effect, there is something called as learning curve effect that you will be seeing in your CA final. Because of learning curve effect, what he does is, he will actually take only slightly lesser period of time per unit, which means the last unit that he produced would actually cost slightly less than 10 rupees, correct or not? Now just to imagine, if I value every similar pen separately, now just imagine you go to your nearby shop, you want to buy one, 5 rupees, that easy click pen is there, no? That pen you want to buy. Now you're asking, sir, how much is the price? Now the shopkeeper is asking you, you want a first pen manufacturer or the 10,000th pen manufacturer? Does it make sense? A pen is a pen, whether it got manufactured first or last, because all the pen would have consumed the same consumption only, same resources only. So it really doesn't make sense for you to value each and every pen separately. So what you do, the manner of cost collection exercise is such that cost is collected for the entire period, divided by the units produced for the period, arrive at the average cost per unit. So basically, how do I value the stock? Using product cost, period cost concept, but the manner of cost collection exercise is by averaging out, total divided by units. Are you clear with this? Whereas I gave one example yesterday. Let's say I am Casa Grande. I am Casa Grande. These guys are into what? Construction business. And let's say I built 4 residential house properties. 4 residential house property. One is a villa. The other one is a duplex. Then a flat. Then a bungalow. Now, I incurred a total of 20 crore rupees for building all the 4 put together. Now, you tell me, can I say 20 crore divided by 4? So, the cost for villa is also 5 crore, cost for duplex is also 5 crore, flat is also 5 crore and bungalow is also 5 crore. Can I say this? Absolutely not, because these are all donkeys and monkeys only. They can't be added together. So, what I do? The cost collection will be done separately. So, what I do is, I treat each and every product as a job and I collect material, labor, overheads, all these things job wise, and I value my products independently. Now, how do I value? Using the same concept of product cost, period cost. But here I don't average out, I go and value each and every job independently. So, here in a unit costing, the cost object is called as a unit. Here in a job costing, the cost object is called as a job. Are you clear? In unit costing, what you do, the cost per unit is found out by averaging out the cost. And here in job costing, the cost per unit is found out by independently valuing every single job. What are the costs that you will consider? That is only manufacturing cost. Those concepts are same. The difference between unit and job costing is only the manner of cost collection exercise. Are you clear with this? Manner of cost collection exercise. Write it down somewhere. Manner of cost collection exercise is all that makes this particular cost classification. You will value all the products only at full manufacturing cost. No doubt about that. But then how you do it? By averaging out or valuing them independently is what is being dealt here under unit and job costing. Are you clear with this? Are you clear with this? Guys, are you all clear with this? Yes? Are you all understanding? Now, then sir, what is the name of this particular area that we are seeing? Unit, batch and job. So, in between there is someone called as batch costing. Batch costing, you didn't tell what that is. So, batch costing is also a method of costing similar to this one, Yes, correct. But then batch costing is not a separate method of costing. Batch costing is nothing but a hybrid. It's a hybrid model. That is, it takes one character from unit costing, one character from job costing, and put together it's called as something batch costing. Are you clear with this? How and all example I'll tell you, don't worry about it. So batch costing, ideally it's nothing but a merger of unit and job costing together. So it is not as such. Yes, technically speaking, it is also one method. If you see methods of costing, what are the different methods of costing? Unit costing, job costing, process costing, your contract costing. There are so many things, correct? There are so many. Service costing. Yes, these are all methods of costing. But if you see actually, process costing is actually an extended arm of unit costing. Correct? I told you contract costing is an extended arm of job costing. You pick any method, it will fall under either of these two categories only technically. But in exam, if they ask you to write any 4 different methods of costing, you can write any method you want. Don't write marginal costing standard. They are techniques. Marginal costing, standard costings are techniques. Methods of costing means what? Costing for a particular nature of industry. I told you process costing for process industry. Correct? Contract costing if your job takes more than 1 year. Job costing if you are dealing in a customer specific product. Yes, and if it generally takes less than 1 year. Correct? Unit costing, nothing but your cost sheet chapter. Simple unit costing. Cost sheet chapter. Are you clear? Homogeneous product. Pen manufacturers. Are you clear? Service costing. Service setup. Are you clear with this? These are all methods of costing. Cost accounting. How am I going to apply the cost accounting principles for respective industries is called as methods of costing. Whereas techniques of costing means what? You have certain rules or you have certain applicability that can be applied across all set of industries. For example, marginal costing concept can be applied both in a production environment as well as in a service environment. Correct? In service environment, we saw standing charges, running charges, that break-even point for hospital beds and all we found out. So when you can apply some principles across all the particular, across all your industries, it's called as techniques of costing. But methods of costing means what? Applying the costing principles exclusively for a particular industry is called as method. There is a difference between the two, method and technique. Please have that in your mind. Please have that in your mind. There is a difference between the two. Are you clear with this, guys? Are you all clear with this? Are you all clear with this? So in exam, if they ask you for all these things, you should know. So standard costing, absorption costing, and your marginal costing, these three are techniques of costing. Techniques of costing. Methods of costing, all the names of your chapters, material cost, your process costing, joint and byproducts, all these things are all your methods of costing. Are you clear with this? So this is something that you need to understand for your theory purpose. Now, batch costing. What is batch costing? I told you, it partakes one character from unit, one characteristic from my job costing. Sir, can you give an example? Yes. Now let's take an example. Now let's assume we have a printing press. Now in that printing press, now you guys know that the printouts can either be in black and white or in color. Correct? Black and white or in color. Now let's take an example. Now in a printing press, they have actually printed 500 black and white, 500 color pages. Okay. Now what they are saying is the total cost incurred is, let us say, rupees 2000. The total cost incurred is rupees 2000 for printing both 1000 pages, 500 black and white, 500 color pages. Clear? Now 2000 rupees. Now what is the cost per page? Can I say it is 2000 divided by 1000? 2 rupees per page, whether it is black and white or color. Can I say that? Absolutely not. So what you will do is, why is it so? Because you know that the resource consumption for a color paper will be more than the resource consumption for your black and white. So what you will do is, you will not collect the cost fully for both put together. So what you will do is, you will collect the cost for black and white separately, for color separately. Correct or not? That is batch wise. You will collect the cost separately. Let's say black and white costed only rupees 500, whereas color costed rupees 1500. Correct or not? So the cost collection is not done fully, it is done batch wise. Correct? This way it is similar to your job costing. Job costing also we do that only, no? We don't collect the cost fully. We collected job wise. Here we collected batch wise. Are you clear with this? Now I told you it takes one character from job, one character from unit costing. How is it similar to unit costing? Now if you look at this, inside this batch, black and white, there are 500 units which are similar in nature only, no? Within black and white, there are 500 units that are similar in nature, correct? So can I say the cost per black and white page is going to be 1 rupee per page, correct or not? And here the cost per color page is going to be rupees 3 per page, correct or not? So within the batch, I unitize to find out the cost per unit, correct? This way it is similar to unit costing. Guys, are you clear with this? So I told you cost is not collected fully. I collect the cost job wise, black and white total 500, color total 1500. This way it is similar to job costing. Having found the cost job wise or batch wise, inside I average out to find out the cost per unit. This way it is similar to your unit costing. Are you clear with this? That's why I'm telling you batch costing is not something separate. What you do is, you actually you actually are in the business of manufacturing a homogeneous product with a frequent change in the variety. If you are in the business of manufacturing homogeneous products but with a frequent change in the variety, in this case you will use something called as a batch costing. A typical example is your apparel industry, textile industry. Let's say they are manufacturing shirts, correct? Shirt they are manufacturing, okay? Now shirt, all the shirts will look like the same, Yes, no, it will not look. Let's say some size 40 size shirt, size wise they have shirts and all. 40 size shirt, you tell me, will it be in the same color, same pattern? No. What they will do is, first they will be having machines and all. And you know how this gets done? This and all is not your, this is not the color of the thread and all. They will do some dyeing on top of that. They have some, what they will do is they will be having a system, and in that first they will set up, they will configure. First lot, color blue, and your nature is going to be striped. They will fix everything. One lot, one press of a button, 500 shirts will be manufactured in the same pattern. Next lot, they will change the setup. Now what they will do is, they will say green color shirt with, let us say, some dot in between. This is another style. What they will do, now based on this, they will pour the dye and all in this particular thing. They will set up the entire machine along with the system and all. Now they will one click of a button. Now it is also a shirt only, same homogeneous product, but with a change in the variety. Are you clear with this? Now these kind of industries, what they do is, they collect the cost batch wise, and inside the batch to arrive at the cost per shirt, they unitize. Are you clear with this? They will not take the cost for the entire month and divide it by total units produced. No, for this lot, that's why if you see, I'm not sure if you have noticed, the same shirt, same quality, at times if you notice, because of color, they will charge you more. Have you seen that before? Have you seen it? Because of color, especially in your ladies wear and all, since there are a lot of designer things, everything will be one and the same. Just because of this color variation, they will charge it separately. You tell me, if they use a simple costing technique, the price should be same only, no? How are they pricing it differently? Because they are following batch costing technique. In that one lot, let's say some designer, you know, this RMKV and all, they said 50,000 colors are long back. They just came up with something like that. What they would have done is that they would have processed in a separate batch. See, nammukke theriyar alavukku they are marketing. Fine, so they did all these things, and to that extent what they will do, that separate batch they will collect the cost divided by the sarees, and they will charge the price. With that they will get the base on which they will add their margin. Textile industry, I told you, super duper profit. Why do you think these guys are having AC rooms and they are paying so much of rent? How can they afford? Have you ever imagined? The profit is super bumper profit. Especially you should go to Bangalore and all. There is a separate place near this Majestic. There is a place, I don't remember, some tailor or something like that. One place is there. If you go there, you should see the collections. Every shop will be small shop. It's all wholesale area. You will get some rich variety of all these whatever branded you get for 400, 500 rupees. If they are selling at 400, 500, which means they themselves have a margin there. Just imagine the same shirts we are buying here at 1,000, 1,500, 2,000, whatever it is. So that's how things are in textile industry. The margin is huge. Now since people started seeing huge margin, what they are doing is, nowadays many people are getting into this particular business. So if you see recently, in our place one, some KGF, that everywhere I see one KGF shirt shop is there, that is coming everywhere. One guy is coming and he is promoting as if he is the only guy who can sell all these things on the planet. Yes, so, and Pista Boys, these two guys are fighting, I don't know, but related. So everyone has started getting into this textile and they are making a huge amount of profit. Okay, someone is commenting. Oh, what is the comment? Okay, more than you, I am interested in reading the comment. What is this? Aduthan Karthikeyan. Amukku dumukku dammal timal only. Yes, correct. Idella correct answer. Ivlo neram answer kettirden. Karthikeyan irukkiradhe enak theriyala. Ippo amukku dumukku ammal timala. Correct answer pandran. Okay, right. Okay, guys. Okay, clear with this. Yes. So this is what is your batch costing all about. Now let's get into this particular area. Unit, batch and job costing. Let us see a few sums in this particular area and then we will knock off. Now, unit costing is nothing but your simple cost sheet. Normal cost sheet only. Separately, they have given it as a chapter, no value addition. Anyways, I have given one sum here. I will just do it. We will discuss and we will close off. Okay, we will discuss and close off. In batch quantity, I'll tell you what to do. There was one extra concept called as economic batch quantity and all. I'll tell you what to do. Shall we get started? Fine, all these things are for your understanding. And in exam, you see, cement industry uses process costing. School bus, operating costing. Your bricks, it can be a process costing or a normal unit costing. Airlines, operating, by the way, operating costing I told you is the other name for service costing, correct? Service costing, fine, service, you can also write service costing in exam. Chemical, process costing, hospital, operating, restaurant, operating. So like this, why I have given it is, at times, I told you the theory 5 mark, no? Theory 5 mark, they are asking you to identify the method of costing. Adila, you just need to find out which chapter it comes in. That's all it is. 5 marks. 5 marks. Theory, they are asking all this. You just need to write down. At times it comes. I've seen it quite number of times. It comes 5 marks. Can't you do this? Yes, you just need to write which chapter it belongs to. That's all. And cost unit is nothing but your cost object. Then you can write, you need not write. So cement can also be sold in bags or it can also be sold in kgs. Generally they sell it in bags. Ton is not necessary. Fine. Your school bus, you can write students month or whatever it is. Passenger kilometer, and the madri solra. You understand? So you can write whatever is relevant. This is not the single answer. This is not the single correct answer. You read it once, you get an idea based on which you can also improvise on that and do it on your own. Are you clear? 5 marks, guys. 5 marks. That's about it. Methods of costing, nothing but different industry. Which industry you need to tell them. That's about it. Fine. So let's go to unit costing. Unit costing is nothing but a simple cost sheet. What columns you will have? Total cost, and you will have the rate per unit by dividing it by the number of units. Are you clear? That's about it, guys. That's about it. Nothing great in this area. Guys, just look at it. We'll just finish off in 2 minutes. I thought of not doing this area only because it's nothing but your cost sheet. But anyways, just to give a completion, I just want to do it. Let's just go through it once. The following data relate to the manufacture of a standard product during the 4 week ended 28th of Feb 20x8. Okay, fine. So they have given it. Raw material consumed, direct wages, machine hours worked, machine rate, office overheads. Office overheads means what? AOH, correct? SOH, units produced and sold, same units. So there is no problem, no stock and all. At the rate of 120 each. So sold is 120. Okay, don't think the cost of production. Cost of production you need to arrive. Correct. So this one is 120 rupees is your selling price. You are required to find out the cost per unit and the profit for the 4th week. So what they have done is, they have just put it here. So material plus labor gives you prime cost, plus factory overheads gives you works cost, gross works cost, net works cost, no 4 items, all bypass. Clear? What they have done here is, they have added AOH as a product cost. Now sir, should I do it? Ideally no, don't do it. You take only AOH as a below the cost of production item, cost of goods sold item, treat it at par with SOH in your exam. In this question, the answer will not change because you don't have stocks. Okay, so all the cost gets expired, so there is no problem. But in exam, always treat your AOH only as your period cost in the absence of any information. So they have added it up. They get the cost of production, add a selling overheads, you get cost of sales. From that, they subtracted sales to arrive at the profit, and they have divided all this by 10,000 units to arrive at the cost per unit. That's all, guys. Unit costing is nothing more than cost sheet. We have done it in depth. In depth, we have completed. What is the format of cost sheet? Everyone, proper format, full format, tell me. Direct material plus direct labor plus direct expenses gives you prime cost. To that, add factory overheads gives you gross works cost. Then add opening WAP minus closing WAP. You get what? You get what? Works cost, net works cost or factory cost. Then what will you do? 4 addition, 1 deletion. What are they? Quality control cost, research and development, admin overheads related to production. I told you this inside your factory AC hall. Then, yes, primary packing cost, Coca-Cola. Yes, primary packing cost minus scrap income. It's called as, what do they call us? Credit for recoveries. Credit for recovery. So there's nothing but your scrap income. You get what? Cost of production. To that, what will you do? Add opening FG minus closing FG. You get what? Cost of goods sold, COGS. To that, add AOH, SOH. You get your cost of sales. Add your profit. You get your selling price. Perfect, guys. Very good. Very good. Very good. Clear? Yes. Abdiya. Okay, I'll change the answers. That's all. 200. Okay, some calculation mistake. Please correct it. Thanks for pointing it out. 155, 200. 155, 200. I copy pasted it from somewhere. I think there's a copy mistake. Sorry for that. Thanks for pointing out. Okay, right. So that's why it's come out like this. Clear with this, guys? So know that concept only. Don't even go through it. It's not even required. Clear? If you do the chapter, this particular area is not even required. They have done AOH and all. Guys, always remember, if the sum comes like this, you can treat AOH as a period cost and close off. Always AOH, not AOH related to production. I'm talking about administrative overheads only, general expenses. What you need to do is put a note clearly saying admin overheads are treated as a period cost. Always you do it. You take it as a thumb rule. Whenever AOH you see it, at times there, I told you in your cost accounting systems, they are treating it as a period cost, product cost and all. That they will at least tell you. Here you please write. Wherever AOH comes, that's always a confusion for students. Write a note saying I am treating it as a period cost unless and until it's given otherwise. If nothing is given, treat it as a period cost and write a note. Don't leave it there. No problem with SOH. No problem. Nothing given should be treated as a period cost. FG la podakudadu. It should be treated at par with your SOH. That is, you should take it your cost of sales ledger. Okay, clear? So always have that in your mind and always write a note whenever there are. See, there is no problem with production overheads. Why? It's always a product cost. There is no problem with SOH. Why? It's always a period cost. The problem is only with respect to AOH. So what you do is, in the absence of information, treat it as a period cost. Write a note saying this has been treated as a period cost. If it is a cost accounting system question, on the credit side, what you should do, take it your cost of sales ledger and close it off. Clear with this. Now let's move to the next one. Madam, yes, do I have your attention? Please. Yes. Now guys. Now this is the only value addition in this particular chapter. So let's finish this concept now. Quickly, let's finish this concept. Now, if you look at this, guys, I told you which are the industries, which are the companies that use this batch costing. When I am in the business of manufacturing a standardized or homogeneous product with a frequent change in the variety, which means what? Every time I produce, I need to set up my machine and then I need to produce. For the next lot, again I will change the configurations and again I will produce the next batch. Correct? A typical example in our case, I am taking class every day. Clear? Now, I have told this to you before. Again, let me just repeat it once again. Now, let's say I am taking 6 hours session. Now, I have 2 alternatives with me. I can take the 6 hours in a single day, or I can take it in a span of 2 days, 3 hours day 1, 3 hours day 2. Correct? Now you tell me. Let's assume we are incurring 2 costs. One is the power cost, and the other one, let's assume someone is coming and doing this setup. We have outsourced this work to another person, this camera fixing, the green screen, and all this particular OBS, whatever it is, whatever is the setup someone is doing. Now, let's take electricity cost. Now, whether I do it for 6 hours in a single day or I do it for 3 hours per day into 2 days, power cost, will it change? No. AC, fan, lights will be turned on for 6 hours. Whether continuously or not, the cost will be the same. Correct? Now, you tell me, the setup cost, will it change? The setup cost, will it change? Yes. Why? Because setup cost is not driven by the number of hours. It is driven by the number of setup. Correct? If I am taking the 6 hours class in a single day, I only need to set it up once. Correct? If I am going to take it in 2 days, day 1 setup, after 3 hours I will close. Day 2, again one more setup. So basically, setup cost is not a variable cost. It is driven by the number of setup, or in other words, number of batches or a number of runs. So batches, setup, runs, these 3 words are interchangeable. Are you clear? Similarly, in a factory, what they do, if they want to manufacture one style of shirts, they need to change the configuration, set it up, pour that dye and all, that color dye and all accordingly, and keep. If they want to change the sale, if they want to change their particular pattern, color and all, again for the next lot, one man has to come, he needs to change the settings and then do it. Correct or not? So this is called as a setup cost. Are you clear with this? Now, batch costing is generally used in industries where setup is required before I produce. Correct or not? Correct or not, guys? Correct or not? Now, Now, let's take an example. Let's take an example. Let's take an example. Now, let's say, guys, let's say I am in a business. Let's say I am in a business, and in this year, I have to manufacture 1,20,000 units. Example. Now, just go back to the same raw material concept, EOQ concept. Now, there I told you I need to purchase 1,20,000 kgs. Here I'm telling you, I'm talking about FG. I'm talking about FG. In that chapter, we were talking about raw material. Now, what happened? I have to produce 1,20,000 shirts. That shirts frequent change in variety is fine. Totally 1,20,000 shirts I need to manufacture. Clear? Now, I have two options with me. Option number 1, produce the entire 1,20,000 units. Produce the entire 1,20,000 units in a single setup. Meaning what? One time you set up, finish the entire 1,20,000. Or the second alternative is manufacture 10,000 units at a time, but like that you need to have 12 number of production runs or 12 setups you need to do. That is 12 setups you need to. I have two options. Option number one, entire demand I will finish it off in a single setup. Or option number 2, what I will do is I will reduce the setup, I will reduce the quantity that I produce, the batch quantity I will reduce, but the number of times I will repeat the batch will be more. Clear? Which is better? Again, there is no single solution to this. Why? You tell me, if I increase my batch quantity, that is I am manufacturing 1,20,000 shirts at a time, single time. You tell me the number of production runs or the number of setups, what will happen to it? It will reduce, correct? Single setup is required, correct or not? So what happens to my setup cost? It will decrease, correct? But the problem here is, if I am producing one entire 1,20,000 units in a single stretch, I need to have a big facility. For which the carrying cost will be huge, correct? So tell me, what happens to my average inventory? It will increase, because of which my carrying cost or holding cost, will also increase. Correct guys? So the advantage here is by way of reduced setup cost, whereas the disadvantage here is by way of increased carrying cost. Correct? Suppose I reduce the batch quantity, saying okay, let me just produce in lots of 10,000. What happens to the number of runs? Runs means what? Number of batches. It will increase, because of which the setup cost will increase. Now I will have to set up, number of times I set up will be more. Correct or not? What happens to your average inventory? Just 10,000 units at a time. I don't need a big facility. Average inventory will fall down, because of which my carrying cost will fall down. So now here the advantage is by way of reduced carrying cost, whereas the disadvantage is by way of a increased setup cost. Are you clear with this? So now which method is better? Now there has to be some point. If I fix that as my batch quantity, my total cost will be least. And that point, that batch quantity is called as the economic batch quantity. So what do you mean by an economic batch quantity? The batch quantity which will reduce my overall relevant cost. Is called as my economic batch quantity. Are you clear with this? And we are talking about FG. And there we were talking about raw material. Here we are talking about the batch quantity, how much to produce at a time. There we were talking about order quantity, how much to purchase at a time. Are you clear? Here we are, the carrying cost here is talking about the carrying cost of FG. There the carrying cost was talking about carrying cost of raw material. Here, there was an ordering cost per order. Here you have a setup cost per batch or per run or per setup. These are the differences. Are you clear with this? But it's one and the same. Conceptually it's one and the same. Now what happens here is, I told you, by following the law of economic theorem, if you see what it says is, the total cost will be the least when your setup cost is equal to your carrying cost. You tell me, as my batch quantity increases, as my batch quantity increases, setup cost will increase, setup cost will decrease, correct or not? So that's why this curve is coming like this. And as my batch quantity increases, my carrying cost will increase. That's why this curve is coming like this. And at a point where my carrying cost is equal to setup cost, that is the point where I will have the least overall cost. If you see, the overall cost is least here. If you go slightly beyond this, it will be slightly more. If you go on the other side, then also it will be slightly more. Only at this point, it is hitting the bottom. It is hitting the bottom. So the overall cost, the total cost will be the least only when your carrying cost is equal to your setup cost. Are you clear with this? So now what I will do is, you guys know. So here the formula, what I will do is, let the entire demand. So there we were talking about raw material consumption requirement. Here we will talk about FG's demand. Are you clear? Let's keep that as D. Let the demand, here I have given it as A. You can keep anything you want. You keep it as D. D is what? Demand. S is going to be your setup cost per setup. Okay, this is S. And C is going to be your carrying cost per unit per annum. Per unit per annum. Why is it per unit per annum? The carrying cost, I told you, is driven by two reasons. One is your quantity. The other one is your duration. That's why per unit and per annum. How much you hold and how long you hold. Are you clear with this? So now you tell me, a point where my setup cost is equal to my carrying cost. Setup cost is equal to carrying cost. Setup cost, what is the formula? Number of setups multiplied by setup cost per order, or setup cost by setup. Number of setups, can I say, it is nothing but the total demand divided by batch quantity. Correct or not? That is totally, I need 1,20,000. I am producing in batches of 10,000, which means the total number of setup is going to be 1,20,000 divided by 10. It's going to be how much? 12. Correct or not? So this into S. Correct or not? This must be equal to carrying cost. What's your carrying cost? Average inventory, that is 1/2 into batch quantity into carrying cost per unit per annum. Correct or not? The same logic we've seen before, guys. Are you all clear with this? So if you equate the two, you will get 2ds by C is equal to BQ square, and therefore you can say BQ is equal to root of 2ds divided by C. And the point where this your setup cost is equal to your carrying cost is called as your economic batch quantity, and hence the name EBQ. Are you clear with this? Are you clear with the logic? You need not mug up anything. So what is the formula here? Root of 2ds by C, where D stands for demand, S stands for demand per annum, your S stands for, see, D stands for demand per annum, S stands for setup cost per setup or per run or per batch, and C stands for carrying cost per unit per annum of FG. Are you clear with this? And I also told you one shortcut formula. At the EOQ level, if you want to find out the total relevant cost, it is root of 2DSC. That is, put everything into the root. I told you this, there is a shortcut formula. If you want to find that, you can use it. Else you can also find out individually your setup cost and your carrying cost and add it up. Are you clear? Number of runs or batches is nothing but D by demand divided by batch quantity. The time gap between two batches, I told you, this is the period divided by number of batches. For example, here 1,20,000 divided by 10,000, how much is it? 12 orders, 12 number of batches, 12 batches. Can I say this 12 batches is nothing but monthly ones? How I am able to say that monthly ones? I am saying 12 months divided by 12 batches is equal to 1. So monthly ones, or this months I can write it in weeks or in years. That's what they have given here. So it is 12 months or 360 days or 52 weeks divided by the number of batches. If you do, you will get the time gap between two batches. Are you clear with this? Are you clear with this, guys? Are you clear with this? Everything is one and the same. What was called as an ordering cost is here called as a setup cost. What was done for RM is done for an FG. What was called as a economic order quantity is now called here as economic batch quantity. Correct? It is done per unit of raw material. Here is done per unit of FG. Are you clear with this? And that's about this area. Let's do one sum. A famous sum here. Let's do this sum. Shall we, guys? So let's get started. Arnav Motors Limited manufactures pistons used in cars. So piston is actually one of the main components in a car. As per the study conducted by the Auto Parts Manufacturer Association, there will be a demand of 80 million pistons in the coming year. 80 million. 1 million is how much? How million? 1 million is how much? Oh, andha kana zero kanaka. 1 million is how much? 10 lakhs, correct? So 80 into 10 lakh, how much is it? 80 crore. 8 crore. 8 crore. Correct. 8 crore. Correct. 8 crore. So 8 crore is what? Not their sale. Not their sale. Overall market size. Look at this. Arnav Motors is expected to have a market share of 1.15% of the total market. So 80 crores or 800 lakhs into 1.15%. How much is it? So 9,20,000 is going to be the demand. 9,20,000 is going to be the demand. Are you clear with this? Don't take this 80 million and all as demand. Okay, they have given it. They have given it. You should compute. Fine. Next, estimated. Okay, fine. Cost is 1.5 rupees inventory holding cost per piston per month, and then the setup cost is 3,500. So S is equal to how much? 3,500. Correct. And C is equal to how much? 1.5. 1.5. Look at this. This is where students make mistake. Look, this makes a grave mistake. Now you have not gone wrong in any concept. You have just overlooked it. You have just overlooked it. Look at this, guys. This can't be done. Per month is given. It should always be in per annum. 9,20,000 is demand per annum only, no? Then why you are multiplying this with carrying cost per unit per month? It should be 18. Correct? 18. Correct? Per unit per month. Sorry, per unit per annum. Per unit per annum. Now you have these three figures. Correct? So tell me, what is the EBQ? Determine the optimum run size. Meaning what? EBQ. How much is that? Together you both did a mistake. Huh? Okay, fine. 18,915. Guys, are you all clear with this? Okay, guys, right. Okay, then. Hello. Yes, next. Assuming that the company has a policy of manufacturing 40,000 pistons per run. What is EBQ? 18,915. But they are saying, no, we will manufacture it only in lots of 40,000. You tell me, the total cost will be more or less? It will obviously be more, because if you deviate from your EBQ, whether you are producing more or less than your EBQ level, the cost will be more. Calculate the extra cost the company would be incurring as compared to the optimum run suggested in one above. Now look at this, guys. If I am operating at EBQ level of 18,915, setup cost will be what? It is nothing but demand divided by batch quantity into my SR setup cost. So it's going to be 3,500, correct? Here it's going to be how much? 9,20,000 divided by 40 into 3,500. They have got something. Correct? Next, so they have got this figure. 1,70,000, 80,500. Next, carrying cost is what? Average 1 by 2 into batch quantity into what? Into carrying cost per unit per annum. So here they have done 18,915 by 2 into 18. Here they have done 40,000 divided by 2 into 18. So if you see it here, what happens? This is the carrying cost, and 3,60,000 is the carrying cost if your total output is going to be 40,000. So if you see your total relevant cost, if you are following economic batch quantity, it is only 3,40,470. Whereas if you are deviating from that and have a policy of manufacturing 40,000, the overall cost is 4,40,500. So the extra cost is 4,40,500 minus 3,40,470. Are you clear with this? Guys, are you all clear with this? Extra cost, how much is it? Calculate the cost for both the levels and you can find the incremental extra cost. Always, if you are deviating from your EBQ, the overall cost will only be more. Are you clear with this? Guys, are you all understanding? Madam, yes, you guys are understanding this. You guys are understanding? Yes, guys? Fine. Now, what else have they asked in this question? Identify the variability of the cost. So, we will see that on a batch level and unit level. Now, look at this. Inventory carrying cost. Now, unit wise it is variable, batch wise also it is variable. Why? Guys, your inventory carrying cost, no, it is mentioned as per unit per annum. Now, if you have more number of units, proportionately it will increase, correct? If you have more number of batches, also proportionately it will increase. Why? Batch indicates the underlying units only, no? So the variability is, it is variable with respect to, if you keep the cost object as unit, then also it is variable. If you change the cost object to batch, then also it is variable. Next, designing cost for a particular job. If you see, Now let's say this, I told you this example of, let's say this shirt, okay, designing they are doing, okay, for one particular batch exclusively they are designing, correct? Do they incur the cost for every unit? No, for that batch entire designing is done, correct or not? So if you look at it from a batch level, it is variable, but underlying unit wise if you see, it is fixed. Are you clear with this, Purilia? Yes, are you all understanding this? Are you all understanding? That's why I told all the costs are both fixed and variable. It is just the perspective from which you look at it. If you change the cost object, it will change. When did I tell you this? When did I tell you? Which chapter? Excellent. I told this to you when we did ABC, activity based costing. Next, machinery setup cost. Batch level variable, unit level fixed. Depreciation, it is fixed from both the perspective. It has nothing to do with unit or batch. Are you clear with this? So this kind of questions can also come. Maybe for 5 marks, you can just expect these kind of questions. And idu mattum illappa, mottama sedu 5 marks. The entire question is for 5 marks. Are you clear with this? Guys, are you all clear with this? Are you all clear with this? Yes, you guys are understanding? Yes, you guys are understanding it. Now, finally, job costing. This is nothing, guys. Same as unit costing, but what I told you, what is unique in job costing? You don't find the total cost and divide it by units. Job wise, you go and find out the cost. That is nothing but you prepare the cost sheet job wise. There is no question of saying units and all there. One job itself is 1 unit. So there will not be any kind of closing stock, opening stock and all, because that stock itself, that entire job itself is 1 unit. Correct? So you can't have partly completed, partly incomplete, segregation and all is not there. If it is complete, take it to your cost of sales. If it is not complete, it will still remain. Are you clear with this? Are you clear with this? So the entire cost sheet concept, we are applying it on a job level. For individual job, we are valuing. Just look at this question. As a newly appointed cost accountant, you find the selling price of job number 9662 has been calculated on the following basis. They have given you material cost, direct wages. They have given you 22 hours at the rate of 25 paise per hour. How did they get this 22 hours? 10 plus 4 plus 8. This is how they got this 22 hours. Then they have got some cost. On top of this, they have added 33% is prime cost and they have arrived at the selling price. This is given data. Okay. Now they have given an analysis of the previous year's profit and loss account shows the following. Material so much, wages department wise so much, factory overhead department wise so much, selling cost totally so much they have given. First, draw up a job cost sheet, calculate and enter the revised cost using the previous year's figure at the base, add to the job 10% for profit to give the final selling price. Now what you need to do, first material you will take actual, prime cost you will take actuals, correct or not? Material, labor, it will not change. If you look at this, material cost is same, labor cost is same. So prime cost you got as 17.58. Clear? Now I will value every unit at what? Full manufacturing cost, correct or not? Correct or not? Fine. So what will I do? I need to apportion the production overheads, correct? Now how will I apportion the production overheads? I only have the totals here. But what is the base quantity that I can take? Guys, what is the base quantity? Labor hours of. I can take the labor cost itself, no? And I can say that factory overheads is a percentage of direct labor, direct wages, correct or not? So apply this and find out the absorption rate. Can I say this is nothing but, so your 5,000, so 2,500 divided by 5,000, it's 50%, 4,000 by 6,000, 66.67%, 1,000 by 4,000, 25%, correct or not? So I have a department wise absorption rate, correct? Now I also have the department wise labor cost. Do I have the department wise labor cost? Yes, it's given here. Department wise labor cost. How much is this? This is 4, this is 1, this is 8 into 0.25. How much is 8 into 0.25? 2 only, correct? So you do 4 into 50%. This is what they have done here. Oh, idve tappa. First this is 2.5, correct? So look how they have calculated here. Look at this. Okay, so this is the answer. So they have 50% of 2.5, 1.25, 66.67% of 1, it is 0.67. 25% of 2, it is 0.5. You add the 3, you will get this. Are you clear with this? That is the department-wise wages multiply with the absorption rate, you will get your department-wise factory overhead absorbed. It is equal to 2.42. Are you clear with this? Are you clear with this? And on top of this, they have added the selling overheads. Now, selling overheads, what is the absorption rate? What they have done? Guys, what they have done, selling overheads generally, nothing is mentioned. What they have done is, they have absorbed it as a percentage of the total cost, works cost, that is total works cost. What they have done, you look at this. You look at this. In the previous period, what was the total works cost? 77,500 plus 5,000 plus 6,000 plus 4,000 plus 2,500 plus 4 plus 1. How much is it? How much is it? Add all your manufacturing costs. How much is it? 1 lakh, correct? Now what they have done, they have kept this 1 lakh as the base. This is your works cost. And selling cost, what they have done, they have made it as a percentage of works cost, and they are saying that it is 30% of works cost. Fine, they have arrived at this absorption rate. So it is 30% on 26 rupees. Add it to it. Here you get 26. The profit, they have asked you to apply 10% on cost at 26. It's going to be 2.6. You arrive at your final selling price. Are you clear with this? So here there is no question of units and all. For the job, you just prepare the entire cost sheet. It's called as a job cost sheet. Are you clear with this, guys? Anything new here? Nothing. Ideally, nothing is new here. Are you clear with this? Are you clear with this, guys? Are you clear with this? So with this, we have completed the entire practical portion. We have completed the entire practical portion. So let's take a break now.